Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream. All right, hey guys, good morning, good afternoon, welcome back to today's live stream. Big day. We've got good number of things on the docket both today as well as next couple days. And I gotta say, from just a stream perspective, we've got a heck of a show lineup for you guys. You know, I'm gonna go ahead and I'm gonna put this into existence, into the universe, if you believe in that kind of thing. I think in a few years, the A1 Trading live stream, we're going to find a way to make this thing all day long. And we're going to turn it into, you know, this thing has graduated over time. At one point, it was just me with OBS recording myself live and there was nobody else. Sorry, my cat wants to be let out. 1 second, guys. Stay right there. So at one point, the stream was just me, and it was pretty rough. In fact, what I used to do is I would just record, you know, basically me trading live news events, right? That's where that started from, 2018, 2019, whatever. Well, then eventually the team grew. We've now got 2 producers essentially behind the scenes that help make this show what it is. And long term, I think this thing's going to turn into a network. Like, I think we're going to turn this thing into an all-day live stream for straight-up traders. I don't think we're ever going to go, well, I don't really want to go in the direction of like a complete news network per se. I don't love the like super formality of news networks, but a network in terms of just like real trading network stuff, I think that's a long-term goal. And today is a good example of us getting closer to that goal. Shout out to James and Chandler, who do a great job behind the scenes to put these shows together. We've got a heck of a lineup today. So ADP numbers just came out, so we'll discuss those in a second, but I wanted to show you this, everybody. So we've got all of our guests lined up on the a1trading.com/livestream-schedule for you guys to keep up to date. So if you ever want to know who's coming on and what they trade and at what time are they coming on, you can always navigate to this page. And if you're a regular stream viewer, I'd recommend that you bookmark this page for your own convenience. And you know, we've got some new people coming on. We've got you guys might know Prop Firm Kid on Instagram. He's coming on today, which is awesome and exciting. So we'll have that on. Tom is coming on. We've got Chris coming on. Frank is going to join the stream for a little bit. Kenzo, we got another new person. Dr. Greg is coming on. I'm really excited for that. He's a very macro-focused trader like myself, so I'm excited for that session. One heck of a day lineup for you guys, so I'm excited about it. Anyways, let's get into some of the stuff that we've got today. We had ADP numbers, so let's pull this up. ADP came in a little bit light at 122K. So ADP is the private payrolls stuff. And what we can see here is that ADP non-farm employment change came in at 122K compared to the forecast at 139K. That would, you know, not necessarily be too exciting usually, but right now the market is all scared of inflation. And so jobs data that comes in not weak this week, but lukewarm would be preferable. So a soft ADP number helps to offset just a little bit of that, you know, sharp edge that was JOLTS yesterday. JOLTS came in real high, And that suggested, okay, there's hiring demand. How's the rest of this jobs data going to fall? Because if the jobs data, this is going to be a confusing topic for a second, guys. But if the jobs data this week is just monstrous, like as in good, like if jobs data is just flying right now, the market, and when I say market, I'm talking about stocks and gold, those two things would head down. Why is that? Now, if jobs numbers are good, but not excellent, stock market is going to do fine, in my opinion. But if the jobs market is red hot, like if we are seeing major hiring and an uptick in labor data, acceleration in the jobs market would cause the dollar to continue its burst to the upside that it's been recently doing. I mean, look at dollar index, guys. We're back to 109.15. This is great for some of my positions, but not so great for some of my other positions and for gold and for stocks, right? So check this out. Dollar index back to the highs here this morning. Nice push off of this area of support. I am long USD CHF and looking to take profits on that. I'm going to go ahead and, I scaled into a position here and it immediately has gone into profit, which is awesome. I've got that trade on. I'll talk about that in just a second, but let's continue the theme here. Jobs data this week. What do we actually want? If you're a stock bull or a gold bull, silver bull, etc., basically, if you're a dollar bear, you want the dollar to chill out. You want yields to stop rising quickly. This is your problem if you are somebody who's like, why the heck are stocks faltering? Bitcoin's tumbling. Gold is struggling. Why is that happening? This chart right here. I put out a chart on my Telegram channel, which, by the way, can we drop the link really quick, Chandler or James? That would be awesome. Guys, join the Telegram channel. It is free to join. And I'm trying to do my best in 2025. A New Year's resolution to me is I like to do a chart of the day. It's really important that I keep doing this. I'm going to try and do it all 2025. My chart of the day yesterday, and this is my favorite chart pick of the day that's most important to me, the thing that I'm watching the closest. My chart of the day yesterday was the US 10-year Treasury bond. And I want to show you this because now that we're discussing this, this is key. So let me pull this up for you guys. So yesterday, this is my chart of the day, right? My chart of the day post was, I said, this chart should concern you. It's the US 10-year yield. With recent US data continuing to show strength and questions about whether or not Trump's tariffs could cause increased inflation, the bond market is calling for little to no rate cuts in 2025 from the Fed. This chart is a major contributor to the dollar's recent strength and the reluctance from rate-sensitive stocks and metals. So, first of all, if you're not in the Telegram, join us in that Telegram. It is completely free to join. Also, double whammy, if you're a stock trader or a stock investor or an options trader, make sure that you come join our stocks and options Telegram channel as well. We now have two. You can see our beautiful logo. One is dialed in blue, one is dialed in green. Green for stocks, blue for commodities, indices, and FX. And you can basically keep up with all of our ideas in there. So take a second, make sure you are aligned with us on Telegram. Those are free channels, so you can go beyond just watching the show. Okay, so this chart is really, really important to us because look at this, guys. If we take a look at the weekly chart, we are facing a bit of an issue here. We are at a key level of resistance, 4.7, let's call it 4.65 on the 10-year yield is a key level that the market really loved when this thing came down. And stocks and gold are going to rejoice if there's some reluctance here at these levels. But if we see the 10-year yield drive higher off of economic outperformance continuing or even heating up further, it's going to cause some problems for us. We're going to see gold lower. We're going to see stocks lower. We're going to see Bitcoin tumble if this thing cannot hold this. In fact, this is probably one of the most, like I said, it's my chart of the day yesterday. Watch this level really close. If we can't hold resistance here at 4.7, look out below, because you can probably see some larger concerns in the market start to come in. Okay. So I just wanted to outline that. That is, like I said, a really, really key chart to me right now. You can see the Russell idea that I have also relies, I'll tell you straight up, I would much prefer, and most market participants would prefer that are, long risk on assets. They would prefer to see this thing lower. That being said, I told you guys that I have a position on the USD CHF, which is a dollar long position. And this is a trade that I took inside of the VIP room. So let me, I also did something yesterday. This was kind of fun. I showed off some of my recent Forex trades. My Forex trades have been really on it recently. Anyways, I went long USD CHF, and we've shot back up off of this area of support that we found. You can see right here. So this was a trade alert that I made to members. My entry was 0.90135, which is right around here. So 9135 is right around here. So I ended up buying the dip on the dollar Swiss franc. I was willing to buy it again if we went further, but we did not. We immediately found support in this area, which ended up being a really nice entry. So I am looking to potentially take profits on this if it does get back to the highs, and I'll just trade trade that move and then close it and then look to potentially get back in if it drops once more. But right now, dollar continues to benefit from this rise in the 10-year treasury. And by the way, the 30-year treasury, both the 30 and 10-year treasuries absolutely went crazy here recently. Same thing with the 20, of course. But yeah, something to really, really watch here is that yield, because it is what is contributing to the strength in the dollar. And, it's not really holding gold down massively because other central banks are still seeing rate cuts, et cetera. But again, keep a close eye on that 10-year treasury yield. Let's see. Do we have anything else here today in the short run? We have unemployment claims coming in 30 seconds here. And then that is Fed meeting minutes will come in this afternoon. We're going to be live streaming all day long. I want to just invite you to hit that thumbs up button, subscribe to the channel. We're going to be live all day. If you support our work here, the best thing you could do to say thank you for this free stuff that we're working on. There's 3 of us behind the scenes that put these shows together. Well, I guess 4. Hit the thumbs up button. We really appreciate it. Look, unemployment claims come out in here in just a second. We'll see if it causes any further volatility. About 2 seconds to go. So let's see what happens here. SPX, NAS, flat here pretty much. Dollar index, not moving too much here. Okay, unemployment claims came in a little bit better than expected, or lower than expected, which would suggest more strength in the labor market. So you had one good here this morning. Well, okay, this is a bit confusing. One strong jobs reading compared to forecast, one weak jobs number reported compared to forecast. As an aggregate, again, dollar index is still up a lot. Yesterday's services PMIs and JOLTS job openings were very strong for the US dollar and continue to kind of support that thesis here. Dollar not wanting to quit. Okay, so back to this dollar Swiss idea. I mentioned that in the VIP room, I am looking to take profits here around 91.36, let's call it. So we're close. If we can get a push up to these highs, I'm going to look to probably just close out the trade. We just narrowly missed the target on that one. So if we can get up to that level, then I'll look to close out the trade. And if I take any further trades, I'll, of course, update members inside of the group. If you're interested in joining our VIP group, if you'd like to get access to the Discord server where I'm sharing every trade that I take, Forex trades, commodities trades like gold and oil, index trades, NAS, SPX, etc., ETF trades, stocks and options, Forex trades. I trade a little bit of everything. We also have several other traders inside of our group like Frank, Chris, and Ivan, who you may recognize from our live streams here on the A1 Trading Show. Their trades can also be accessed within the VIP group. If you're not in the VIP group and you'd like to access it, here's how you can get some information. If you would like to get access to the VIP group, head over to a1trading.com/VIP. maybe we could drop that link. It's a1trading.com/VIP, and you can sign up if you use the promo code YTVIP. That is for people who are watching the stream, a nice little extra discount off of your membership. Or if you have any questions, you can speak directly to our support team about getting a membership set up. We'll drop the link in the chat here to speak directly to a member of our support team. If you have some questions, if you'd like to see some past performance, if you'd like to see some examples of trades that we take, we have a couple people on the support side of our team that can get you some information about the memberships that we do offer. So click this link if you'd like to speak directly to our team about getting set up with a membership and joining the VIP. S&P 500 is back to flat on the day. NASDAQ had a big sell-off yesterday. NAS and SPX, by the way, both had sell-offs yesterday. Dow Jones was down, but it has been already down. So that's kind of been, just kind of staying flat for the last few days. Gold still staying choppy, not really a very decisive market at this time. I've seen a lot of people drawing this level on their chart, right? They've got this kind of triangle formation going on, which could be interesting to watch on gold. For me, the big catalyst on a price action basis for gold would be a break of this level that I keep saying, 2,700. Can we get a strong close above that level to suggest prices are going to move higher? And look, we've been discussing yields a lot on stream today. Gold bulls likely want to see the US 10-year Treasury yield go down, right? 10-year Treasury yield going down would suggest that the Fed may actually cut rates this year. Here's the thing that we're struggling with, guys. Why is the 10-year yield? Many traders, even the new macro traders, the new fundamental traders, can say, look, basically, I get that rate cuts are good for gold. But this chart right here, US 10-year, the reason I always talk about the 10-year is because it is the forecast. It's the indicator of how likely rate cuts are going to be. If you see this chart going up aggressively, what that likely means is rate cuts are less likely to occur. If this chart is going down, the markets is showing you, the bond market's kind of saying, oh yeah, rate cuts actually may take place. This has been trending higher because, again, the economy in the US is not showing any signs of seriously slowing. And with that, inflation expectations are rising a bit. So that is telling you right now that the bond market is a little bit concerned that we're not going to get rate cuts this year. Or if we do, it may just be one or maybe two, right? And that scares certain parts of the economy, a certain part of the market that rate cuts make a substantial difference to. One of those places being gold, right? Gold, I would argue, would be much, much higher than where it is right now if the 10-year was actually falling, if the economy in the US was slowing a little bit, giving the Fed some room to cut rates, or if at the very least inflation was back towards that 2% target. If we were closer to that, gold would be, in my opinion, much higher. So right now, gold, I'm not really sure where it's going, right? We never know with certainty where the market is going, any market. We just know that, again, for gold to get going here, to really take back those highs and break through all-time highs, most likely the scenario would be the 10-year yields coming down, right? Bitcoin also not loving this. Of course, Bitcoin does not like high inflation because, of course, high inflation, we saw that in 2022, can really hurt the state of the consumer. And the consumer is a big player of buying Bitcoin. We know that from a lot of people out there who are buying Bitcoin. They do so when they have a little extra money in their pocket. But if inflation is coming back and the Fed's not going to ease rates, not going to kind of add liquidity to the pile, Bitcoin potentially becomes a bit of a piggy bank like it did in 2022, right? In 2022, a lot of people sold their Bitcoin so that they could, pay for life things that were happening. Whereas in 2021 and 2020, it was going up so much because you had these stimulus checks. There was money everywhere. The Fed was printing. If you want to know where Bitcoin is going, watch the Fed. Because again, if the Fed is printing, usually Bitcoin's going up. If the Fed is not printing, usually Bitcoin's going down, right? Fed was not printing, Bitcoin dropped massively. Fed has been kind of suggesting that it's going to be more of a ease interest rates, ease monetary policy. That's been part of the story here for why Bitcoin is up. And yet we've got Bitcoin here now questioning, is the Fed set to continue that easing process, or are we at a stopping point for that? That is the question about Bitcoin that is going to be key going into this year. How do I know if Uncle Sam is printing or not? You're at the right stream. We're taking a look at economic data to give us an idea as to whether or not the Fed is going to move more towards printing or move away from printing. At the end of the day, that's pretty much what we're here doing on the macro side. This is why at the end of the day, the fundamentals matter so much. We're trying to figure out, is the Fed printer going to go burr or is it going to shut off, right? The Fed is pivotal to everything. So how do we monitor? This is a great question. How do I know if Uncle Sam is printing or not? The Fed makes their decision based on what you're looking at on your screen right now. The Fed looks at employment data. It looks at inflation levels. It looks at retail sales, the consumer, right? Is the consumer out there spending money and looking okay, or are they hurting, right? They look at services PMIs, which are manufacturing and services PMIs are basically surveys sent out to key people in the economy to ask them if they're hiring, ask them if they're spending, ask them if sales are coming in heavy or not. These are important reads. We also want to look at GDP numbers, right? GDP numbers also very, very important. How is expected growth looking in the United States? These are the indicators that the Fed is looking at to decide whether or not it is appropriate to add liquidity to the system or take away liquidity to the system. That is why we spend so much time. We don't talk about this stuff. I mean, I talk about this stuff for fun, but a lot of us take this stuff into account because we know it moves the market. This is what's important to the Fed, who ultimately is the red light, green light system to the whole stock market, Forex market, gold market. Take your pick. The Fed is centric to all of it. Bitcoin even, the Fed is centric to Bitcoin. Nobody on the Bitcoin super fan bus wants to hear that, but it is the reality. The Fed printing or the Fed not printing completely makes or breaks Bitcoin's rallies and falls. So it's something to think about. And again, if you're not currently thinking about that, 2025, I would suggest that you get on the train of let's focus on the macro. Let's figure out what the Fed's doing and why they're doing and what they're likely to do next, because that is ultimately the most important thing in the market, is whether or not liquidity is going in or going out. If there's going in, tons of money's going into everything, gold, silver, Bitcoin stocks, vice versa, right? So speaking of that, let's take a look at some stuff. So we might not have the data updated just yet, but unemployment claims just came out here just a moment ago. We can see if that data is already in the edgefinder or not. The forecast for today was 214, revisions was 211. Hasn't updated the actual number, which came in lower than expected, right? We had what come in? 201. So we beat in terms of better than expected jobs data on that front. ADP numbers probably were, usually the edgefinder is a little bit more delayed than this, but there we can see ADP numbers did get uploaded into the edgefinder. So we can see ADP numbers did come in lighter than expected, which is an important thing to pay attention to, because of course, jobs data, we don't want it to be too hot right now, because if it's too hot, that's going to be inflationary. The Fed's going to slow their rate cut process, which again goes back to what we just discussed. The money printing system would slow down, which again, you want to understand which way it's trending to understand where markets are likely to go. So yeah. So the thing is, this is another good question. Benny says, but what about the active printing? How can we see those stats? You can find that stuff pretty easily. You can look at like the Fed, like their balance sheet pretty easily. Just do a Google search. But what I would suggest is don't do that at all, because it doesn't matter what they've done yesterday. It's about what they're up to doing next. The market doesn't move with the Fed, what they did previously. The Fed, what they're projected to do in the future, that's all that matters to the market. It's all about what is likely coming next, not what did they do already. So that's what you got to understand about markets too. What do you think of Dave Ramsey? I think he's great for people who are not super, familiar with personal finance. I think he's great. Not necessarily great for everyone, but for people who struggle with their finances, don't quite have them under control, definitely great. Like I said, guys, I am going to look to potentially take profits on dollar Swiss if we can get a little bit higher. We are getting close. If I can just get a squeeze up to those highs, I'm going to go ahead and lock in a profit on that dollar cost averaging trade I have on USD CHF. So doing quite well there. And we'll see if I can find any more trades on the FX side. I'm also watching oil for pullbacks if we can get one. I like that idea. I'm watching Bitcoin. I'm watching NAS. I'm watching Russell as well. I've got several trade ideas that I'm looking to take. Any trades that I take will be, of course, shared inside of the VIP room. If you're not already in there, join us today. We'll drop the link here, a1trading.com/VIP. Use the promo code YTVIP at checkout for a nice discount so that you can come join the action, come trade alongside us. Anytime I take a trade, it gets sent directly to your phone or to your desktop with full breakdowns, full analysis, everything behind the trade. We share in depth, kind of why we're taking the position, why the trade was put on, why the stop loss was put where it was. But again, every trade that I take gets sent directly to you. If that is something that would be beneficial to you or helpful to you to help you learn more about what's going on in the markets, I highly recommend you come join us in 2025. It's going to be a great year. So again, we've dropped that link here. You can also send us a direct message. If you send us a DM, they can send you some examples of what the trades look like. They can go through the different perks that you can get access to with your membership to A1 Trading and much more. So send us a DM if you have not already. You can speak directly to our support team there. Okay, guys, we're going to take a quick break, and then we got Tom from Simply Forex coming on, joining the show and sharing some Forex ideas. He's big on the currency world stuff, which is awesome. So we'll hear from Tom in just a second after this quick break. Stay tuned.
The Edgefinder is the #1 trading tool for 2025. The Edgefinder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edgefinder. The Edgefinder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edgefinder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edgefinder.
Hello traders, how are we? Happy New Year. Happy New Year to Nick, everyone there. How are you guys? Hope you're all well. Let's have a great 2025. And let's take a look at the charts, guys. That's what I'm here for. Also, guys, don't be afraid to ask me any questions you like about trading. Yeah, I'm very much a technical trader, focused mainly on currencies. I do look at some commodities, the indices, but predominantly Forex, guys. All right, so please feel free to ask as many questions as you like. Just to carry on from what Nick was saying, really, guys, this US dollar strength. I was actually in US dollar yen today and have managed to take in some profits. And really, I'm leaving some profits to run, basically. So if you look at any US dollar pair, right, it's US dollar strength, right? US dollar yen is no exception. We're in an uptrend. We've had a little bit of consolidation. We're still in that consolidation, but we managed to take some profit. If I just show you my entry, guys. So this is how I roll, basically, guys. I'm looking for daily trend, okay? And as with every US dollar pair, it's US dollar strength. So this was US dollar yen, and this was in an uptrend, right? And then, guys, I take a look at the H4, right? And this H4 is also in an uptrend, okay, right? A little bit scruffy, but in an uptrend nonetheless, right? We're getting higher lows, higher highs, right? So we've got daily in an uptrend, we've got H4 in an uptrend, and then my actual entry was the H1. right? And it was exactly this candle here, right? So nothing complex about the entry, it's just price action. So we had this big sell-off, but ever since then, the H1 has just been building up, right? If we just follow structure, as in higher highs, higher lows, we was in an uptrend, right? And it's continued in this uptrend. But we had this support level right here, yeah, at the moving average 20 as well. I really like the moving average 20 for dynamic support and resistance, right? But support in this case. So we've got kind of double whammy support here. We got this nice bullish candle earlier today. I entered here with a buy trade, put my stop loss below here, right? And then took price back up to these highs, right? Not rocket science, simple price action trading. And basically, guys, I've got my 1:1 risk to reward, and I've taken 80% profit at this level. All right, so I've taken 80% profit off of this trade, and I'm going to let 20% run. All right. If in about 12 minutes, this H4 candle remains to look like this, you know, and it doesn't break these highs, yeah, then I will just close the remainder of my trade, right? As simple as that. I'll just close the remainder of my trade, the remaining 20%. So yeah, that was my US dollar trade today. And what with all this US dollar strength, what's really important to point out is the price for a lot of these pairs, this is pound US dollar, for example, has been taken to a very important support level or resistance levels. So if we look at pound US dollar, if we look at the weekly chart, there is this key level here, right? And pound US dollar is at that level, right? We've just had some better than expected employment data, which gave more strength to the US dollar, but I'm not going to start trading this into resistance, for example. Yeah, I just won't do that. We can see this is a good, sorry, I won't trade this into support. We can see this is a good support level. So this trade, pound US dollar sells, is over for me, right? Let's have a look at another US dollar pair. If we look at Aussie dollar, US dollar, this too is trading into a very important weekly support level, right? This is a key level at a psychological level, this 162,000. So a lot of these US dollar trades are over for me, right? I do not want to keep selling the US dollar into this support level, right? But there are a few US dollar pairs that have room to move into. So if you're looking to trade the US dollar, pick the ones that have room to move into, right? So pound US dollar doesn't, Aussie dollar US dollar doesn't, right? So they're not trades for me. But if we go back to my US dollar yen trade, if we look at the weekly chart, right, and even the daily chart, this still has room to move into, right, before it hits any key weekly level, right? If we go back to the weekly chart, right, this has room, okay? If we look at US dollar Swiss francs, it's right next to it. This has a little bit more room, right, back up into these resistance levels, okay? If we look at New Zealand dollar, US dollar, right? Sorry, guys, this blue line was my target. This too has a little bit more room to move into before it hits this big weekly support level. So the market is clearly showing us this US dollar strength is apparent in the market, and all the data that keeps coming out, you know, like the employment data literally a few minutes ago, is backing up this US dollar strength. So I'm all about trading US dollar strength, but choose your pair wisely, right? And anytime we look at the US dollar, right, let's take a look at the dollar index. And this is flying, right? This is stronger than Arnold Schwarzenegger and Steven Seagal combined. If you don't know who Steven Seagal is, you're probably too young. But, if we look at this on the weekly chart, right, this was the key level that I was looking at. And price did stutter here, but the US dollar has continued to push higher, right? And these candles are clearly breaking all of these wicks in here. And if you look at the US dollar, right, the dollar index, this has pretty much free air to move into. There's nothing really stopping the US dollar until we get up to this level, right? There's no significant levels in here. So this would suggest this US dollar still has more room to move into. All right, so yeah, there you go, guys. US dollar strength. Now, Elsa, I'm probably pronouncing that beautifully, I'm sure. But Elsa, he or she wants to look, I never know the sex of the people I'm talking to. Gold, right? So gold is a little bit of an exception, right? So this will be interesting. Let's take a look at gold. Now, if we look at the weekly chart, I would say it's a bit of a mess, right? And when I approach the charts, guys, I'm always going to do a top-down approach, right? I'm going to look at weekly and daily, right, to give me my direction. And then I'm going to look on the lower time frames to pinpoint entries, right? Makes sense. Again, everything I talk is just logic, right? So we're going to start with weekly and then look at daily to understand direction. Now, if we look at the weekly chart on gold, right, this is what we're seeing, really, right? We're kind of here, yeah? So, and also what I look at, guys, is where we are in relation to the moving average 20, right? And you can see this is ticking along as well. So, would you say that is in an uptrend or a downtrend? You could argue we're seeing lower highs, right? You could also argue we're seeing higher lows, right? So weekly's not 100% clear, but I would suggest, because we're above the moving average 20, we can at least take price back up to these highs here with gold, right? Back up to these highs. We can see potentially a range forming here with gold, right? And yes, that goes against dollar strength, right? That would be gold strength and dollar weakness. Okay, now that's what the weekly's telling me, potentially a range between here and here. So let's go down to the daily and get a bit more information. Because if we look at the daily, there is no ambiguity, word of the day. Yeah, there is no confusion, right? This is 100% grade A premium beef uptrend, right? Because if we just follow structure and trend, this is where we're at, right? Clearly, yeah, we're getting higher lows, right? Higher highs. And that is the definition of an uptrend. Okay, we're above the moving average 20. Again, I like to see that. So we're in an uptrend. So everything is pointing towards buying gold. Now, we do have this level here. I can even put in a resistance level through here. Probably be, more clear on the H4. But we can see that last high is proving to be a little bit of resistance, right? It's reacted once before. It's reacting again. But if we break through this level, let's say today's candle on the back of the FOMC meeting minutes or something like that, pushes gold higher, gives US dollar strength. If we end up with a bullish green candle that looks something like this, breaking these highs, that is a continuation of trend. And there is a high probability that price will make it back up to the next resistance level which is up here. So gold is pretty much the only US dollar cross currency, cross commodity that I would trade against the US dollar, right? And gold is the only one. Even if we look at silver, right? So gold and silver are highly correlated. Obviously, they're both paired against the dollar. They're both precious metals, right? They're going to be highly correlated, obviously. But so gold is telling us to buy, but even silver doesn't quite tell us this, right? Silver, in fact, is tricky, right? If we look at the weekly, yeah, again, just let's track structure and trend, right? We're in a downtrend. We're getting lower highs, lower lows, right? So that is the US dollar strength that we've come to know and respect, right? I can't remember the last time we had some US dollar weakness, right? So that makes sense from that point of view, okay? So weekly, this could be potentially a good selling opportunity, right? But if we look at the daily, and yes, I am this pernickety, what I'm about to show you, but if we just, again, follow structure, right? This level here is literally the last lower high, right? And this candle here has broken this last high, right? Just about the body of that candle has broken this high. So that is a higher high. That is a break of structure. So I would buy this market, right? Based on that, because I want to be with daily trend. But there's a lot of buts. Got to be careful what nightclub you say that in, right? But there's a lot of buts. Okay, and one of them being is that you are at a very nice, right, what was once support becomes very nice resistance. And look at these wicks, right? So you're at a very nice resistance level. Again, got the moving average 20, which acts as dynamic resistance. We've got this gray zone, which is a resistance level. So I am not willing to buy silver for those reasons, whereas I am willing to buy gold. Okay. Now, if silver has a pop, if it, you can see there's sellers here. Now, if these sellers give up and we get buyers come in strong, and again, we get a nice big bullish candle like this, breaking these highs, breaking above the moving average 20, breaking out of this gray resistance zone, then, potentially this has room to the upside. Okay. Yeah, potentially this has room to the upside. But silver is less clear. Gold, if you want to trade a precious metal, then gold I would buy. All right, silver less so. So hope you help. Hope you help. Hope that helps. Right, what else do we want to look at? What did he say? Yeah, apologies for my funny accent. It's very okay. So I'm just looking for some other questions here, guys. So hello, Tom. Are you a fundamental trader or purely technicals? I'm purely technicals, Paolo. Obviously, I keep an eye on the news coming out for that day, but a purely technical trader. Pound yen. Okay, Oshin wants to look at pound Japanese yen. And guys, please don't forget, if you're enjoying my analysis, I also have a YouTube channel called Simply Forex. So please check it out. Come join us. We would love to have you and see your faces. You can't see your faces, but you know what I mean. Right, pound yen. Yen pairs are technically difficult, right? Let me just put that little disclaimer in, but they are, right? Now, if we look at the weekly, we are clearly in an uptrend, right? Remember weekly and daily. I just want to get my direction. So weekly is in an uptrend, higher lows, higher highs. And we're back at these highs, okay? But we're in an uptrend. The problem with this uptrend, right, is look at this candle, right? I do not want to buy into that candle. So although the weekly trend is uptrending, I don't want to buy into that candle, right? I just don't. So therefore, I can't buy it, I can't sell it, right? I don't want to buy it because we have a very bearish weekly candle, and I don't want to sell it because we're in an uptrend. Okay, so that's what the weekly's telling me, but let's take a look at the daily. Now, the daily is also in an uptrend, but we're getting some real rejection, right? So if we just follow trend and structure, this is where we're at. Clearly in an uptrend still at this point, but this sell-off right now is a little bit concerning, right, for buyers. Yeah, but until this point, we're getting higher lows, right, higher highs. We're in an uptrend. But like I say, guys, we're getting this sell-off on the yen. So is because of that big weekly candle, right, are we starting to see on the daily the potential start of a downtrend, right? We're getting lower lows. We're getting lower highs, get my facts correct, right? But we're not breaking this low. So how would I trade yen pairs? So, or pound yen specifically. So it's in an uptrend, okay, on the daily. But again, I don't want to buy these candles. Yeah, would you want to buy that candle? Would you want to buy this candle? Obviously, this candle hasn't finished forming, but I don't want to buy those candles, right? I just don't. So buys are sort of out of the equation. But what I would look to do, if we got something like this, and then we got a break of these lows, right, I would start selling pound yen. We've had that, this is that weekly level where we had that massive weekly bearish candle. Say that after a few drinks, quite a mouthful, right? And if we break this low, we would also have a daily structure break. We would get lower highs and then eventually lower lows. A little bit of a retrace. I would look, you know, to sell back down to here. So right now, you know, all of the yen pairs aren't really a trade for me because of this contradiction with trend versus these uptrends versus bearish candles. So I would wait to see price break down, and I would potentially sell yen pairs. Again, you know, the yen, you know, a flight to safety currency pair. It's going to depend a lot on, you know, what the indices do as well. If we start seeing those indices sell off, you know, we'll see some yen strength as well. So worth bearing that in mind. But yeah, that's my view on yen pairs. BGP, have we covered New Zealand US dollar yet? We did have a quick look at the US dollar pairs. We have got a couple of crazy people wanting to look at the DAX. Now, the DAX will tear your face off. That's a known fact. Okay, but let's take a look. Let's take a look at one of the indices, guys, right? And we're going to do a top-down approach as well. Let's drag this level across. So yeah, let's look at this chart. You know, I haven't looked at this chart for a while, guys. You know, not a big indices trader, but a lot of technical analysis can obviously be applied to these charts. So let's do a top-down approach. Now, let's put this level in. Right, because that is clearly, and really on the weekly, these are the only two levels I'm interested in. This and this, right? Weekly, we're also clearly in an uptrend, right? We're in an uptrend, which means I want to buy the DAX, but I cannot buy into resistance, right? If you went back, right, to here, if you went back a week ago and you said, Tom, I want to buy the DAX, I would be, fill your boots. That is an excellent idea, right? We're in an uptrend and we've got, we're bouncing off this level. We've got lots of room to move into. That would be a wonderful trade, right? A week later, bang, right? We're already at resistance. So I don't want to buy into that. I just don't. Let's take a quick look at the monthly as well. I wouldn't normally go as far as the monthly, but let's take a quick look. Yeah, and yeah, I wanted to take a look because I knew this would look like this. Again, this monthly candle, this would suggest that perhaps, the indices are due for a bit of a retrace or correction, right? And so why do I say that? Well, we have a very bearish candle, right? That is, I know it's green, but that is a bearish wick. We are very overbought. If we consider the moving average 20 is the mean, right? Is the mean of this indice, of this monthly chart, and price wants to come back to the mean, like historically it will always happen, right? It's never not come back to the mean, right? Mean, 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 almost mean, right? It comes back to the mean. Okay, so this would suggest, can it make its way back to the mean, right? The moving average 20, right? We shall see. But again, I don't want to buy into that candle. So weekly, monthly are not telling me to buy. They're not telling me to sell, but they're not telling me to buy. If we look at the daily chart, right, it's no surprise that we're getting quite a bearish reaction thus far, because this is a big resistance level. And if I had to trade the indices, right, which I don't, right, I'm happy to stay out of the market. I will only trade pairs that everything is pulling in the same direction, right? The weekly tells me I can buy. The daily tells me I can buy. The H4, H1 give me nice entries, right? I need everything to come together to place a trade, right? And this isn't, right? This is like the opposite of that. There's too much contradiction. But, if you said, Tom, you have to take a trade, otherwise we will pull your toenails out, then I would probably look to sell from this level, right? Perhaps we're going to start seeing a bit of a range, right? And again, why do I think that? So these are the reasons, right? We know there's this big monthly candle, right? So in here, big monthly candle. There are sellers. Yeah, there are bears sitting up here. Okay. On the weekly, there are bulls sitting in here. Not easy to say with my accent. Right, there's bulls sitting in here, there's bears sitting in here. So what you're probably going to get is a bit of a range, right? You'll have bears selling, bulls buying, and you might find yourself that we find a bit of consolidation with this indice. Also, the NASDAQ is similar to this. All right, so yeah, so and then if we get this consolidation, I would need to see one of two things happen, right? I need to see a break to the upside. I would continue potentially buying this indice, or a break to the downside, and I would look to sell this indice. Yeah, so there you go, guys. That is the DAX. Right, what else are we looking at? Yeah, so EuroCAD. Yeah, so James Flaherty. Who's the Irish dancer? Michael Flatley. Is it the River Dance? Just reminded me of his name for some reason. Anyway, that's nothing to do with trading. Let's focus on what we're doing. EuroCAD. Yeah, this was one of my sell trades for today, right? It was. Because let's understand why. And you can see my target here, this blue line. It just hasn't given me an entry yet. So let's just examine this quickly, right? So weekly, downtrend, right? Lower highs, lower lows, downtrend, below the moving average 20, right? bearish-ish, bullish-ish, bit of an indifferent candle, this one, but, you know, sellers have come back into that market, right? If we now go, so weekly says I can sell this. If we go to the day chart also says I can sell this, right? And this is what I'm talking about, guys. This is what I'm looking for. Confluence to take the trade. And this is where we are with EuroCAD, right? On the day chart, lower lows, lower highs, downtrend, okay? We've got a nice wick, bit of a doji, followed by a nice bearish candle at a resistance level. What's not to like? Yeah, this was a trade idea that I put on my channel, right? Looking to sell this back down to these lows. Okay, now the problem, not the problem, but why I haven't been able to enter this trade is a couple of things, guys, right? So when we see price here, when we see all these candles here, we're not too sure what the market's going to do, right? We've got lots of wicks. Does it want to come back up? And then finally, we get this big bearish candle. So the market's made up its mind to sell, right? And then I want to be on the back of that, right? You just want to, you know, I know it's a bit of a cliche, but follow the winds. And it also broke this level, right? But the problem is twofold. Look at this H4 candle, right? Screaming out sell. Right? And, you know, but it still has room to move into. So EuroCAD is a tricky one for that respect, guys. We've got a bit of conflict of candles here. And even before then, I wanted a nice retrace, right? You can see my alarm in here. When it broke down, I wanted a retrace into here. Didn't get it. Didn't have a trade.
Hey, Tom, I just hopped in. I know you can't see me, so I just wanted to say, hey, good to see you, and Happy New Year, by the way.
Yeah, cheers, Nick. Happy New Year, mate. I hope you're well.
I'm good, and it's good to have you back on the show. I know, you know, people, we had a little bit of time where we weren't seeing you. People were like, where's Tom at? And so I just want to also clarify to everybody who's watching, you can always find Tom on his own YouTube channel, Simply Forex. We dropped a link earlier. Maybe we can drop that one last time to send anybody over who would like to check out more content from Tom. Again, technical analyst that focuses heavily on Forex. A lot of you guys love that stuff as well. So, Tom, we've got our next session started here in just a second. I wanted to jump on. Just thank you for joining here, and of course, I hope we can see a lot more of you this year.
Yeah, definitely, Nick. Thanks for having me, mate. See you soon.
Thanks, Tom. All right, guys, we're going to continue on here. We've got our a very special brand new guest joining us here in just a second. We're going to go ahead and just take a quick break here to thank a sponsor, and then we'll be joined by the prop firm kid. Daniel's coming on to the stream, so stay tuned. We'll be right back just after this.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share edgefinder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
All right, and we are back. He's here, Prop Firm Kid. What's up, Daniel? How you doing, man? Oh, I think you might be muted. Unless I can't hear you. Can you guys hear him? If you need to, if you click the, there's a gear button right at the bottom where it says settings. Bottom middle on your screen here on StreamYard, click the settings button and then audio. You can play around with your mic. No sound. Okay. Yeah, I was just making sure it wasn't on my end.
I got it here. Is that good?
Oh, can hear you now. What's up, Daniel? How you doing, man?
Hey, what's up? What is up?
Hey, people in the audience, do you recognize this guy? If you're on Instagram, you probably do. He's got a good size following, and he's well known for letting a chicken trade for him on Instagram. There's your fun fact for the day.
Well,
Daniel,
chicken actually makes all my business decisions. I should mention that. So
it's a she, right? She's your boss.
yeah. A lot of people think call it a he, but all chickens that are he's are roosters, right?
Ah.
So
Well,
she
Daniel,
definitely lays eggs for me.
so where are you in the world that you have chickens? Are you? I think you're in Canada, but you must be like in the countryside a little bit.
That's right. So I have I live in the city of Vancouver. We're not allowed to own chickens here. They'll kick my door down if I own a chicken. So the chicken lives with my sister out in the farmlands. She has the farmhouse. So she has a few chickens that live out there, and I go out there. We film the chicken picking trade ideas for us, and just a fun little concept, and we
love it.
We throw that on Instagram.
It's been super fun to watch the videos, and if you guys don't know what we're talking about, follow him on Instagram at PropFirmKid, and you'll see the viral video series of letting a chicken place trades for him. It's actually very entertaining. Anyways, Daniel, it's good to have you on the show. We have people from all over the place, and I was thrilled to hear that you were willing to come on and just talk some charts, talk some markets. And I kind of want to just let you take the reins. I'll stick around and hang out with you, but I'm curious, what of all the things that you trade, I'm in your Telegram channel as well. I know you trade a good range of things. What are your biggest focuses right now? I see you trading gold a lot. Is that on the radar for you right now?
Yeah, I focus most of my attention toward gold. For me, gold has enough volatility and movement to create opportunities in the market daily, right?
Mm-hmm.
And because I trade mostly with prop firms and various prop firm probability trading models, movement and price action is super important to get in and out of trades while you're trading with prop firms. So gold has everything you need. It respects a lot of different technical levels a lot of the time. Pullback Fibonacci levels, which I love to trade on gold, and short-term trends, very important on gold. Very strong moving short-term trends are what make or break various prop firm trading models. So gold has everything I need. I don't really dabble with too much other than that at the moment. There's no need to, just because it provides everything, kind of all the opportunity that you need in the market.
Well, and you've got your 15-minute chart pulled up here. Do you usually focus on the lower time frames? Are you up in the 1 hour, 4 hour, or do you stick mostly to the lower time frames? What do you kind of focus on most there?
Right. So because I am doing day trades a lot of the time, and I know there's a lot of swing traders here too, but this is specifically in reference for prop firm trading.
Mm-hmm.
I think day trading is a lot harder of a game if you're doing it from an investment standpoint. But for day trading and prop firms, I typically trade on the 5-minute, 15-minute.
Mm-hmm.
I'll go up to the 1 hour just to kind of see if there's any like key levels that I might be dealing with. But other than that, I'll keep it dialed back to 5-minute, 15-minute.
Okay. Yeah, no, I love that. I mean, and yes, there are a lot of swing traders here, but there's also a ton of day traders here as well. We got 523 people watching between all the different places we're streaming right now. And
Nice.
So there are definitely some day traders. Also, maybe in the chat, you guys can let us know, are you day traders? Are you swing traders? And my guess is there's a lot of day traders in the audience.
Well,
so
you know what? I did a poll on
yeah,
my IG a couple of months ago, and it turns out that there are an insane amount of scalpers.
yes.
And
yes.
Like 50% of people that follow me are scalpers, and 30% are day traders,
Mm-hmm.
and 20% swing traders.
Yeah, no, I mean, swing trading is actually like I was going to say it's kind of the least popular one because a lot of people think it's like slow and they don't love the idea of holding overnight. But as you know, every time frame has its pros and cons, right? There's good things about day trading. There's great things about swing trading. Really, just kind of depends what you're looking after. And I like that point you made about specifically with prop firms. Maybe it's a little bit more oriented more towards day trading, just due to some of the time constraint stuff on that.
Yep.
So walk me through a little bit. I'm just curious with gold. So you're down on the 15-minute chart. Obviously, you had a big stretch here this morning. Are you more of a trend follower or more of a kind of mean reversion reversal trader? What do you kind of get into most there?
So I do trend. I follow short-term trends.
Okay.
I'll look for a strong move in one direction depending on the session. So I have my chart pulled up. Nice. So you can see these orange lines here, right? This is
Mhm.
this is the daily open. So generally what I look for is some kind of sweep below or above the daily open during the Asian session, and then a sign of a bullish reversal or a bearish reversal. So as you
Okay.
can see here, we had a bit of a sweep here, right? And then there was a nice bullish candle that closed above the daily open. So I'm thinking short-term bullish bias for this day here. So I'd be going long on this particular day, which is today, right?
Mhm.
So majority of my trades that I would set up would be long, and I would just hold it until I hit certain targets. And generally what I do is because I'm trying to get in and out of the trade within the same day, I will use the average true range to kind of determine where my take profit's going to be over maybe potential structure that I see, right? Because we have structure up here. This would be a great place to target to get out of the trade, right? But if it has to be within the range of my daily ATR,
Yeah.
or else, you know, I might be in the trade too long. I don't want to hold it over the market reset or anything like that.
I like that. And I also, the ATR is a great tool for everybody listening. If you don't use it every once in a while, try it out, especially if you're somebody who specifies to a specific chart. Like if you're somebody who Daniel, like you mentioned, you really trade a lot of gold, getting to know those daily ranges is really important because you kind of get to know like, oh, well, gold recently has been trading within a 1% range, or if you're, in pip form, you can do that. But understanding where a daily range can kind of fall on the average day is really key, because you can also use it for stop losses. Like I love to use ATR for stop placement. It's just knowing like, hey, if this thing is kind of having a normal day, I don't want to put my stop loss within the range of a normal day. I want to put my stop loss slightly outside of it, which would give me a little bit of an indication that something may have shifted in the nature. The other thing about using cool thing about ATRs is because they have a look back period. Like you could choose 7 days or 10 days, whatever you want to do. Like you can kind of get an idea of like, is this environment that I'm in changing? Because the volatility of something can expand or contract, right?
Yeah. And I tell people that, every asset there's a different relevance to pip ranges on every asset, right? Like 100 pips on USD JPY is a lot different than 100 pips on like a CAD AUD, right?
Yeah.
So if you're dabbling with different assets, it's very important to use ATR just so you have the context of what kind of stop loss should you have if you're aiming for a specific amount of time to be in that trade. Yeah. And you can really calculate. Like I always recommend, if you're day trading, use the 1 hour ATR for a stop loss, roughly. Right, that's a really perfect range for a day trade. You expect to be in the trade for 4 to 5 hours. Right, if you're swing trading, use the 4 hour ATR, and then you'll be in the trade for, depending on what your risk to reward is, you could be in the trade for 1 to 2 weeks. Right, so it's a nice little tool that I use in every trade setup.
Love it. So Daniel, today you're looking at gold, obviously. Was there any trades that you took today, or were you looking at anything? Walk us through, like, okay, if the cameras were off and you're just, trading, you're just doing some analysis, what would you kind of look for here going next for gold?
Yeah. So this is my analysis here. So this is Asian session right here. Right. I also have this sessions indicator that people can use. It's really useful. But I kind of know where it is anyway, just because I use it all the time.
Right.
But oops. But so I'll kind of watch price during the Asian market here. It's when I'm awake in the evening. It's perfect for me. And then what I'm looking for generally is some kind of sweep of liquidity or orders below or above this daily open, and a strong reversal of some sort. So this is a perfect example of a sweep reversal. This is actually kind of a tame sweep. I think it's only like a $3 sweep. Usually you get like $5 to $6 sweeps, but after this sweep, I'm looking for this bullish candle, kind of like something like this, where it's closing above the opposite direction of that sweep. And then I'll look for longs in the situation. And so my trade would probably look like this, where I'm setting up, along here. My stop loss is going to be around $8, which is kind of the daily ATR for that level. Actually, I can pull up the ATR here, and we can take a look. So I have to go to the hour chart though. So this yellow line, that's the average ATR down here, right? So I'm generally looking for like the above average on the 1 hour, like whatever spikes we have, which is around $8 here. You can see that, right?
Yep.
So that's going to be my stop loss range, rather than try to pick like, below a previous candle close or something like that. It really protects me from price coming back down and just sweeping a little bit lower than the previous low, which happens a lot on gold, right? There's a lot of like unpredictable price sweeps before reversals, right? You can have it come down here and like right here. Let me just exit this. So right here, like that's the low of the day, right? But a lot of the times it'll come back down and it'll sweep even a bit lower. So if you're setting your stop loss really tight on gold, you're going to get cooked many times, like more times than you won't. So setting up your stop losses to allow a lot of forgiveness on gold, it's going to add years to your life,
No, I totally agree. And that's especially interesting to me, Daniel, because I do lend more towards the swing trade side of things. I use the daily chart, the 4-hour chart. I've slowly moved to higher timeframes over time. And one thing I was going to mention is that one of the arguable pros of being on the higher time frames is there's a bit less noise. You just mentioned like some of the noise that can happen where things can go back and kind of test an area just to check the zone and then reverse back up. So what I thought was interesting about that is you using the ATR kind of helps with that a little bit, because then you're like, okay, I recognize that there's going to be some randomness, some noise here, some unpredictable kind of retests of the lows very quickly on gold. Whereas, I don't necessarily use the ATR all the time, but I trade daily charts, which I think are a little bit, just generally speaking, less noisy. Of course, you're not getting as many setups. That's the pro of being more of a day trader. But with the ATR, you're kind of filtering out maybe some of those stop loss placements to avoid some of the chop that might inevitably happen on the lower time frame. So I thought that was a really good point there about that. So here's another question for you. So you mentioned, okay, Asian session, and then coming into this New York session, we've started to see some moves on the gold market. For me, if I'm looking at the 4-hour chart, we're up at resistance here. I'm looking at this as a possible, like, okay, are we going to see this kind of move, right? Break and retest. Do you play breaks and retests at all? Or are you really specific to just kind of trading the session momentum and getting out?
It depends. So I will trade break and retest if it's early on in the session. If the conditions feel very overbought or oversold, I'll probably just wait it out until the next daily session and let that manipulation happen during the Asian market before getting into another trade. And break and retests, honestly, I think for gold, in my experience, break and retests are effective, but the retest will always come down a lot further than you would normally expect. There'd be a lot of the price is going to push down a little bit more than you would see maybe on other assets before continuing us up out of that structure that it's trying to break out of. So that's why, again, I think that's why larger stop losses for gold is very effective, because I know there's a lot of gold traders here. So think about how many times you've been right and you've gotten stopped out before the price went in your direction. I mean, it must happen. It happens all the time on gold. I see it happen to so many people. So I just tell people, hey, don't get so greedy, just juice up your stop loss a little bit. It's making 1% is better than losing 1% instead of making 5% if your stop loss is super tight.
Yeah, no, that's true. And just if we could show my screen for a second, Chandler, check this out. So just to your point, pulled up the 15-minute chart, and there's an example of a really clean break and retest, right? But you can see that if your stop's like really tight, if you're trying to get really cute with it, you could have very easily gotten whipped out of that trade before, as you just mentioned. It could have been right was
You lagged out?
Sorry about that, Daniel. I blanked out for a second. Can you hear me okay?
Yeah, I think we lagged out a little bit. That's okay.
Yep, sorry about that.
Yeah, I see that you get wicked out. Yeah.
Yeah, just basically the idea is like you can be right in direction and even kind of okay in timing, but if you're not like, if your stop loss is way too tight, you can still get kind of pulled out of a trade real quick. So just thought that was relevant to what you were just saying.
Yeah, and that's not even that bad. Like it can be a lot worse too. Because as you can see, when it broke out here, like sometimes it can come all the way back down to daily open and then just continue up, right? So there's a lot of volatility, right, with gold, which is good and bad sometimes.
Yeah, no, and a lot of people who love to trade gold, they also trade the three most popular things that I see for day traders, at least in the like futures and FX world, indices, commodities, Forex, all that stuff. It seems to be the big three are pound yen, gold, and the NASDAQ. Like those are like the three favorite day trade vehicles. Do you
Really,
look at any of the other ones?
huh?
Pound yen,
Yeah.
Yeah, it just moves like pips wise. It moves so much.
That's right. Yeah. I actually haven't. I've been so hyper obsessed with gold for the last year. I really haven't pulled up anything else. That's why
awesome.
it's news to me. Pound yen is. I actually have it on top of my list here, but it's above gold for me. But I haven't looked at it yet.
So when you do your analysis, you isolate just gold. Do you look at anything else in terms of like analysis wise? Do you look at like the dollar? Do you look at any other Forex pairs? Do you look at, so you never look at indices even?
Right. So I think I do dabble with the DXY. I'll take a look at it. But the issue is sometimes it can do more damage than good if you're day trading. I mean, I understand the benefits of swing trading when you have a bunch of these different pieces of evidence line up for your bias, right? But for day trading, because you're trying to get in and out so quick, it sometimes is better just not to overanalyze, if you know what I mean. Just go with your gut, have a good risk system, and then just try to ride that short-term trend and get out, right? So I'll try not to overanalyze because it has a lot of negative effects sometimes where it makes me uncertain or I'm spending too much time on my analysis when I should just execute a trade and get in and out of the market more quickly than you would with a swing trade setup, right? Because swing trade setups is like an investment decision almost, right? You could be in the trade for 2-3 weeks. So before you click that buy or sell button, you should be confident with it aligning with your strategy. But because you do so many day trades and you have such a higher volume of trades, if you make micro mistakes now and then, it doesn't have as big of an impact, right?
Yeah, no, it makes sense. So another question for you too, Daniel, is, you're an edgefinder user, you're a fan of the tool. I want to talk, just release a little bit of a sneak peek for those who are day traders. What we find is on our side of things, like because obviously we do a lot of data tools and software for traders. And one of the big things that a lot of the day traders love is they love their sentiment indicators. I wanted to show you something that I think would be cool for gold traders, maybe yourself included. I'm thrilled about this because I trade gold too. It's called the put-call ratio. And have you ever heard of the put-call ratio before?
I have not, because I actually don't. That's for options, right?
It is. However, it's fascinating. So I'll just give you the quick high level just to give an idea. I love the put-call ratio. It's one of my favorite indicators because it basically looks at, here's the thing. Here's the issue with sentiment indicators that come from like Forex brokerages. There's no like centralized Forex brokerage that has all the data in one house. But the CBOE, the options trading world, is all centralized. So we can get that data and we can look at it and say, oh, that's like a really good sample size for what actual market activity is up to. What we're working on here, and it's still this is not yet developed or yet publicized just yet for our users, is the GLD, which is the gold ETF put to call ratio. It still shows the weighting of how much investors, traders, options traders are buying puts versus buying calls. And even if you don't trade options, the idea basically here is there massive flow towards buying puts, which would be everybody's bearish, or massive flows towards buying calls? And like I said, it's not fully done yet, but at some point you'll have this chart which will show you, if this thing is way up here, that's showing you that everybody is buying puts on gold, and there may actually be some upside, extra energy to gold just because everybody's scared, and vice versa. If everybody is buying calls on gold, there may be some big downside moves ahead, and that contrarian indicator is sometimes really fun. It's something I use a lot for my own trading, and I just want to mention that we're bringing that up soon. We're going to have GLD, the Nasdaq, silver, SPX, oil.
Okay. That's
it's coming
interesting.
soon.
Can I ask you, so is the idea, it's kind of similar to a retail sentiment idea? You want to do the opposite of what we're seeing in the data for calls and puts?
Yeah, because if you basically see look, there's just everybody is piling into puts on gold, that actually might be an indicator that, the crowd sentiment is way too piled in one side. We might be able to go the other side. And the reason that we're doing this specifically is retail sentiment for gold is very hard to pin down and get to be really accurate, simply because CFD brokerages that report it can be all over the place. And there's not a centralized, like I said, one brokerage that has massive data that we can easily access, but the options world can easily be accessed. So we're kind of excited for that indicator. I just wanted to mention that because for the gold traders out there on the day trading side of things, we see sentiment indicators being really popular, and for good reason. If you know everybody's trying to hit the short side, there might be some upside potential.
Oh, that'd be nice. Yeah, I'll try that out once. When's it going to be live, did you say?
We're hoping to get it in the next few weeks, but actually the issue is not that it's not built. It's just that we haven't collected very much data yet. We want to wait until this is basically recording a new data point each day.
Oh yeah, right.
So got to let it populate a little bit, and then we'll probably just make it public to everyone.
Oh yeah, I see. So every movement is a 1 day.
Yep.
Okay. Yeah.
So if you going into the session know that hey, yesterday there was just everybody was hitting calls on gold, let's look for some potential reversals, or, if you're looking at the hourly chart trend and it's showing bearish and everybody has hit the call side, maybe there's some, basically however traders want to use it. It's just a sentiment indicator, and looking for those extremities in gold can be really interesting, because gold especially, Daniel, I think is interesting because it's a very emotional, asset. People buy gold and sell gold for very emotional reasons a lot of times in the markets. You know what I mean?
Yep. And it moves every session. Every session, there's potential major volatility, which is always exciting, right?
Yeah, you have something to work with, and that's makes sense why a lot of people love to trade it for that reason. So yeah, good stuff. I know. So we've discussed this before, but in terms of the edgefinder, do you usually use sentiment indicators, whether it be the edgefinder or something else? I'm not trying to just plug the edgefinder. I'm just curious, what kinds of things outside of just the technical charts do you consider in your own trading?
Yeah. So I look at the edgefinder. So in my Discord too, I do post swing trade setups a lot of the time with currencies, just because it's even though I actively only trade gold, I kind of try to offer, trade ideas for other people that follow me that might want to trade other stuff as well. Gotcha. So I use the edgefinder in my currency setups every time. I won't even look at to potentially buy or sell a currency unless it's +5 or -5 on the edgefinder. So I use that. Just the score alone is so valuable. I think the way you guys have scored it out, that it really gives you an advantage if you're taking up position trades or swing trades. Cool. So what I'll look at is I'll look at the score, and then I'll look at the relevance to that score by pulling up. Hey, I'll actually pull it up here because you won't be able to see it on my screen, but it's called, what is it called here? The EF score indicator. Yep. Right. It kind of shows the historical score of that asset. So if it's at if it's at a +5, but maybe last week it was at a +8, right? Then the bias is kind of going a little bit bearish relative to your score, right? So I'll look for scores that are above 5 that have previously been lower than that 5.
Gotcha.
Yeah, just like that. So
Yep.
in this situation, right, it went from a 3 to a 6.
Mhm.
So maybe potentially there's some, I don't know what you're looking at there, NASDAQ. Maybe
It's
there's
a
some
NASDAQ,
potential
yeah.
bullish, some bullish. I would look for a bullish technical setup
Gotcha.
in that situation, right?
Yeah, I love that. Well, and that's the thing. That's the thing is like just understanding historically speaking, like where the score has been, where it's coming from, is it rising or falling? That's another thing. That was why we built this indicator. A lot of people requested that feature. So yeah, that's cool. And again, we can also maybe I don't think we have the link loaded up for your Telegram channel, but I wanted to ask you too, Daniel, what's the best place for people who want to find out more about you, want to keep up with some of those ideas that you have? I know you have Instagram. We dropped a link earlier. Is there any, are you trying to grow socials outside of Instagram? What's the best place to find you?
Yeah, Instagram's the best. I try to respond to as many DMs as I can. I mean, lately I've been kind of getting flooded out, but I do respond to almost everyone on Instagram that DMs me a legitimate question or wants to say something to me. So Instagram, you can find me there. You can follow me, and I also have, if you're interested in trading prop firms too, and it's such a dangerous space to navigate. So I've really taken all the mistakes I've made over the last year and I've put them into these 2 ebooks just to really try to save other people getting into the industry, or maybe they've been in the prop firm game for a while and have been getting destroyed, to try to save them from all the headaches that I've had over the last year, right? Because I'm net profitable with prop firms. I have been for 8 months. I started a year ago, so I really know how to navigate like the dark side of prop firms, because there's a big dark side. So yeah, I have ebooks for that, and Instagram, you can find all my info in my bio, all the links in my bio there.
Guys, I would definitely recommend, and I know there is a ton of you guys who are interested in the concept of prop firms. And one of the big reasons that actually I reached out to Daniel, that we follow each other, and that he's on this stream right now, is because I think his niche is not only incredibly important, but I actively seek out people who I think are being transparent in the industry, because as Daniel just mentioned, there is a big dark side to prop firms. There's also a dark side to brokers. There's a dark side to signal providers. There's a dark side to everything in the trading space if you're not careful. So seeking out people who are transparent about what is working for them and what is not working for them is really, really important. So I would highly recommend, if you are somebody who has goals of being funded someday, make sure go follow Daniel, and do me a favor, send him a DM. Just let him know that you were watching the show, and maybe we can convince Daniel to come on and share more wisdom with us more frequently. It would be awesome to have you on the show, and I really enjoyed just chatting with you today.
Absolutely. Thanks for having me. It was a lot of fun.
Awesome, Daniel. Well, okay, I'll let you go speak with your chicken about the next trade for now.
Oh,
but
better go do that. Yeah, she's hungry.
Thanks for coming on, Daniel, and maybe we'll see you back soon.
All right, talk to you later, Nick.
See you, man.
All right, bye-bye.
All good stuff. Again, great to have Daniel on. Daniel, I really do mean that. Like, when we look for people for this show, there is the old adage, the old expression that real recognizes real. And regardless if you think I'm, making this up or not being authentic, I hope that over time, you watching my content, you'll recognize that I'm not here to BS you. I'm not here to tell you trading is easy. I've got nothing to kind of convince you of in terms of like quick money in the market. I also transparently tell you that we sell stuff on this stream, that this stream is not a charity stream, that we have stuff for sale, we have sponsors, we are making money outside of trading. I will never hide that fact. But I also will, be completely real with you guys about my trading experience. I share my track records, and a lot of the people that we bring onto this show are very transparent about their own trading results as well. And I think that's really important, that we seek out verified traders, people who are real, that are spreading the truth about trading. Trading is a wonderful way to build and compound wealth over time. It's not a quick way to money. It's really, really hard. It's really, really hard. But with time, a lot of discipline, a lot of effort, it can be very rewarding. So, that's kind of the message of the stream. As always, that was awesome just to speak with Daniel. Again, I do really mean that. Please do me a favor. go follow Daniel. The best way for you guys who are stream fans, we got 600 people watching. The best way, if you are a regular stream fan and you're like, that was a good session, I want more Daniel on the stream, is to go support them. Obviously, these guys are content creators themselves, and the perk of coming on the A1 Trading stream, the network here, is to help them grow exposure to their audience as well. So, you know, we are sharing our audience with as many content creators that we deem kind of verified or legit as we possibly can. So I hope you enjoyed that conversation. I really certainly did. I really like Daniel's content, and I think he plays a really important role spreading some realistic stuff about prop firm stuff. Anyways, stocks are kind of back towards the not lows of their session, but slightly in the red here. Gold, as we were discussing, gold just shot through the highs here on the 15-minute chart. I had it pulled up. It's been a while since I had to dust off my 15-minute chart. It's been a while. But you guys know I typically am a little bit more on the higher time frames, more on the macro side, fundamental side. And with jobs data right around the corner, we've got just a loaded rest of the week. But even before then, guys, we've got the Fed meeting minutes today. We had jobs data today and yesterday. One heck of a week to get things going. Tomorrow, just a heads up for you, is a bit of a different day. We have the markets, the stock market specifically. Forex market will be open. I believe the futures market will be open, but the stock exchange will be closed in recognition of Jimmy Carter passing. So we'll have a little bit of a wonky market day tomorrow. However, I'll still be here. Of course, we'll still be covering what's happening in markets. Bitcoin's down 2% today. I am long on Bitcoin. So kind of a disappointing reversal here. Of course, price was moving higher and then completely flopped on its face yesterday with the big sell-off in Bitcoin. Bitcoin was down peak to trough like 5-6%. I mean, it was a pretty good little sell-off here yesterday. I'm looking for support to continue to hold generally in this area. If we do not get the hold there, then I need to go ahead and cut the trade for a loss. Otherwise, if we can bounce here, if we can continue to push higher, I'll be looking for some higher lows in order to start trailing a stop loss. So we'll see. What do you think about US 100? I'm long NAS. I've got a long position on the NASDAQ. This also following suit with the Bitcoin chart has lost a lot of its recent gains. We had a nice pop and then a big drop. I remain long. I like the story. Services PMI yesterday was a solid figure. And although yields are rising, which puts some pressure on stocks, which we discussed at the top of this stream, I'm still cautiously bullish indices. Yes, yields are rising. The question is this the calm before the storm, meaning we just rocket through this high, or are we actually going to kind of top out here and start to see yields come back down? The big question or the big answer to that is likely coming on Friday. NFP has the possibility of making or breaking this trend in the dollar and the 10-year treasury bond yield. If you get a hot jobs print on Friday, this thing is probably breaking out. And then at that point, my Bitcoin trade probably has the chance of stopping out. My NAS trade potentially stops out. And then we have to reevaluate. I'm okay with this yield as long as we start to kind of top out soon. But if we start really trending higher, it's going to put some pressure on a lot of risk assets. So for NFP, if we get a strong jobs print, it will continue to bolster the dollar. It'll probably put pressure on everything else, gold, stocks, other currencies, etc. Dollar index looks really, really strong, and I am still long USD CHF, looking for an opportunity to exit my position for a profit. I am long right here. Let me see if I can just template buy entry. Yeah, I mean, I'm long USD CHF inside of our VIP group. Let me see if I can share a little bit of that. I'm also, like I said, I'm long NASDAQ. I'm long, I don't have any commodity trades open right now. Forex trades, I've got this USD CHF long position that I'm working with. Bought the dip on this one right around 90.90135. So it's right around 90135. It was like right towards the lows of this. I wish my entries looked that good all the time, but really almost a perfect entry before price reversed. and we're looking good on this one for now. I'd like to take profits if we hit the top, hit the high here. If that happens, what I'll do is I'll just take profits, especially if I can get out before NFP, because we don't know what's going to happen there. And then if it does retrace, if we see a bigger move, then I may go ahead and try and rejoin the trade and maybe dollar cost average into longs on USD CHF. Happy New Year to yourself. Appreciate that. Pound dollar's crashing. Yeah, look at the pound, man. Pound is having one heck of a sell-off here. Actually, how's euro pound? Euro pound's looking interesting here. I might actually look to get a short position on euro pound established. Bit of a dollar cost averaging short side idea on this one. It's a pair that I like for dollar cost averaging, especially. Look at that. That pound is just plummeting here this morning. Pound yen also down almost 1%. Pound dollars down 1.14%. That's pretty good. That's a pretty good downside move. That's 140, 150 pips to the downside on the day. That resistance held perfectly. I shoulda, coulda, woulda taken pound dollar shorts. It was an edge finder setup. I just took dollar Swiss instead. Let's see. Is pound USD still an edge finder bearish setup? It was a couple days ago. I'm feeling a little FOMO right now. If you can't tell, I just got struck with FOMO. Edgefinder gave us bearish calls on euro dollar, euro yen, pound yen. Hindsight is obviously 2020, but I should have taken all these setups, right? I did take a dollar bullish setup, which is working out well. It's the dollar Swiss trade that showed up on the Edgefinder a few days ago. Now sitting at a +7, that looks pretty good. So, anyways, pound USD -11 scores are pretty rare on the Edgefinder. A -13 is very rare on the Edgefinder. What this is telling you, what are these scores, by the way? You heard Daniel talking about them a few minutes ago. It's looking at economic data, technical data like seasonality and the momentum or trend of a chart. And it's looking at sentiment, the commitment of traders data to view institutional money and retail positioning on this category. So pound US dollar, retail traders are betting heavily against the dollar. They're going long pound US dollar. I mean, sometimes you just can't make this stuff up. Check this out. If we go to major currency pairs, look at what we see happening yet again. I sound like a broken record with this chart that's on front of your screen right now, but I'm going to do it again. Retail traders continuously are trying to buy the dip on pound dollar and euro dollar and the Aussie dollar. Look at these charts, guys. Retail is pig piling into the long side for the last several months, okay? Now, the reason I show you this is that if you are currently buying these currency pairs aggressively, you may have your own reasoning for doing this. That's your own trading strategy, etc. Don't let me tell you it's not, working if you're making money overall, but let me encourage you to just think about something right now. The power of having the right data in front of you is that you can look at this stuff and say, look, the retail crowd is piling in to the long side of things like the Australian dollar and the Kiwi dollar and the euro and the pound. And by the way, they're buying the Canadian dollar. So they're shorting dollar, buying CAD. So the reason I show you this is that retail has been getting it absolutely dead wrong on these currency pairs on average as an aggregate kind of retail crowd for months now. Let's go look at this chart. And you can see retail. In fact, you want to see historical retail sentiment? Check this out. We added this new feature so that you can test my theory that I'm discussing here. Let's go look at the pound against the US dollar. I like both of these charts here. On your screen, you can see the historical retail sentiment. So this is going back in time. You hear me talk about this sometimes. I talk about retail sentiment. But let's actually go look at what the print was within the Edgefinder at various times. So the white line is the price of the pound dollar, which has been steadily declining here over recent months. So the pound has been continuing lower overall. And what you can see here is that this top chart is showing you net retail positioning, the long percentage minus the short percentage. So what is the net positioning? You can see retail very much on the long side, right? You can also, if that chart is a little confusing to you, look at this secondary chart and just hover over, and you can see retail traders have been pretty consistently above the 60% threshold. So if we just mark out 60%, in fact, I think I'd like to add a default within this chart to be 60% marked out like that. I think that would be a cool indicator. For those of you who use the retail sentiment tool, what do you guys think? Should I just make a default line at the 60-40 levels? Anyways, above this yellow line really quick, that's showing you when retail has been very pig piled into the long side. So you can see it's pretty consistently been, you know, retail is favoring the long side, and increasingly so. Look at this. You guys ready for this? Pound dollar shoots down through the lows. What does retail do? Adds to longs, right? What about when pound dollar actually started going back up? Retail dropped off in their long positions. So what do we see retail doing over and over again? We see retail traders adding when the market goes massively against them and getting out of positions when it goes in their favor. So just something to think about is let's re-engineer this a little bit and just say, look, if everybody's piling into the long side, maybe we should be a little careful. And that line of thinking would have saved you big time if you're trying to bet long on the pound. If you've been watching the streams, myself and Forex James, we've been discussing specifically the euro and how the easier trade right now, and this could change. I'm not saying this is the forever easier trade. The easier trade right now is to stay bullish the dollar until something changes. If you had just done that, obviously hindsight speaking, the euro dollar cost averaging that Forex James has been doing is probably working out exceptionally well today and the last few months. How do you get the retail data? We have an internal algorithm that pulls it regularly and demonstrates it to our users within the Edgefinder. If you want access to the Edgefinder, if you'd like to try it for 30 days, we'll drop the trial link here in the chat right now. If that is something that you're interested in trying out, you can click this link here that's just been dropped in the chat. And just to be clear, our trials are not free. You can get 30 days access to the tool for a small fee, and that fee does get credited towards your final purchase of the tool. I clarify this each time that I mention this because our trials are not free, because we used to have people, when we did free trials for a brief period, we had people who were just making a new email every week and requesting another free trial. So unfortunately, we no longer offer any free trials for the Edgefinder, and we have serious people who do pay the small fee to try out the Edgefinder for 30 days. So I just want to be transparent about that. Our trials are not free. They are a small fee to get access. If you're serious about this stuff, if you want some data, try it out using this link. You can apply, and we'll send you all the information that you need to get your hands on a copy for a little bit. Let me check our live stream schedule here. By the way, you can always do this yourself. A1trading.com. Click the the live stream schedule. Okay, so Chris is coming on in 15. So we got 15 minutes just to discuss, and then Chris will take over the stream here. Cool. So also, if you enjoyed the session with Daniel and with all of our guests, I just want to encourage you, if you're somebody who regularly watches the streams, do us a big favor. Make sure whenever a guest comes on, show them some love, go subscribe to them. It really just helps to continue to build out our stream schedule. I mean, I just showed you that stream schedule a second ago. You can see we've really built out our lineup of great people coming on to the show and adding value. And my goal for you guys at home is, like, at some point, I want you to just be able to pull up the stream and leave it on pretty much all day while you trade. And that's kind of the dream. Thank you for your hard work, Nick and team. Appreciate you, Alec. I glad to hear you enjoy the show. If you guys are stream viewers, best thing, or stream fans, best thing you can do, like I said, is just to subscribe to the channel, thumbs up the stream. Just helps with the YouTube algorithm to get the word out there and to help us grow our network here. Semiconductors is a position that I had that kind of flopped yesterday. I'm still long semis, but my stop loss is right below these lows. So in fact, let me see, where are we at with this? So if I go to semis, SMH, it's a position that I've got on, Am I still in the trade? Yep. So I am long semiconductors. The ETF is SMH. I'm looking at the 4-hour chart here. So basically, I'm long semiconductors. Let's just clean up my chart for a second. So I'm long semiconductors, which is companies like AMD, NVIDIA, Broadcom, Qualcomm, all in one singular ETF. I had a major gain in this position that has since dropped off yesterday. That being said, my stop loss is trailed into profit on my current position. So if this market rolls over and takes out these lows, I'm going to go ahead and call it good on that trade and take profits. Been in this trade for a couple of weeks, so it's been a slow grind, but we finally had a big push. I would prefer, obviously, for this thing to continue, take out those highs and resume the uptrend. But if it doesn't have it in it, then we move on. Nick, for the live stream schedule, can you have a time zone converter too, like Eastern, GMT, etc.? Rob, and anybody who can check this for us, can you do me a favor? I don't know the answer to that. If you go to our live stream schedule, does this convert to your time frame? Oh, I think no, it doesn't. It probably converts to Eastern time. What you could do, Rob, and anybody who is a super fan of the A1 Trading Show, check and see if this option is available to you. Add to your Google Calendar. And you might actually be able to add it to your own personal calendar and just keep up with it there. That might be the easiest thing to do. Also, I'm just curious. I keep calling some of you guys like A1 Trading Show super fans. Who in our audience right now would consider themselves like an A1 Trading stream super fan? Does anybody watch us like every day? And I just want to shout out some names. I mean, I know a lot of you guys by name. I recognize you, those of you who comment frequently, and just wanted to see some raise your hands. Basically, if you're a regular, if you're here multiple days a week with us, like Lee, BGP, Marcus. I recognize a lot of you guys. Appreciate you for being here and just supporting our stuff. And we hope that we can help you one day at a time in the right direction with your trading, offer you insights, offer you, education from our various guests. That is kind of the goal here. What's up, Merle? What's up? Emperor Rob Summers. I mean, there's a lot of you guys who are here often, so I appreciate it. Pauline says, new here. We also want to welcome and thank our new guests. I hope you stick around with us. One great way to also know if the stream is currently live is to just subscribe and hit the notification bell. That will help you to obviously get notified whenever a new stream is starting. The Russell's down 1%. Not loving that. I have a bullish position on the Russell. What I actually did specifically is I have an IWM short put, which is now actually in the red, which that kind of stinks. I had a good trade going here. A lot of the indices and cryptos pulled back here in the last few days. It happens. But I have a short put on the Russell at $215 per share. Basically what that means is that if the market tanks, I have to buy the shares at the agreed upon strike price, $215. Trading made so much more sense since I started following you, the markets. Appreciate that. Very, very glad to see that. Nick, you really changed my trading style. I now use your trading styles that it's proven to be profitable in the long run. Extremely grateful. Well, I'm really glad to hear that you're finding the content helpful and that you found something that kind of resonates and works well for you. I loved making that video. Why you should quit trading. Yeah, I made one of my favorite videos I ever made was that video of like why I think you should probably quit trading. Is not a very good sales pitch video for a YouTube channel about trading. But I think what those kinds of videos do, like the ones where it's like, here's why trading is so hard, why you shouldn't do it. It strengthens the cause for people who are very serious about this stuff and helps us to build a really kind of tight-knit community. There's a lot of people in here that are like, I accept that trading is incredibly hard and I'm going to figure it out anyways. That's kind of the crowd that we're going for here. Gold, back to session highs, or pretty close to it. Here's the hourly chart for gold above that 2660 level. I keep mentioning this, but I'm very curious to see if gold can actually break through that level here. That would be really interesting. How do you identify a false breakout? So you never, by the way, love the name, Sasibaka. You never know if a breakout is going to be fake or not, for sure, right? Nobody ever knows with certainty about anything with price action. That's never certainty. And if you accept that first and foremost, like, oh, no trade is certain, nothing, the markets, I might have a very strong reasoning for why I think gold can go up and it could still go down, right? Here's the thing, right? Gold, let's say I think gold is going, well, let's just do one that I'm more natural on. I actually think the NASDAQ has potential to rip, right? I think the NASDAQ, and this is me putting out an idea. I mean, obviously I have a position long in the NASDAQ right now. So I think that the NASDAQ has stronger probability of moving higher and heading back to highs than it does falling apart. But I accept also that I don't know that that's going to happen, right? I don't know for certain what's going to happen on this chart. But what I do have is an idea, a basis for why I think that, based in macro data fundamentals. I like the story for the NASDAQ going into 2025. I think it has upside. Regardless, I could be dead wrong. We could look at the NASDAQ in a week from now, and the NASDAQ could be trading down here. And we could all say, Nick, you're an idiot. But if you're the person that says, Nick, you're an idiot, then you probably are very much struggling with grasping how trading works. Because no one is an idiot for thinking, if you have a bullish bias or a bearish bias, you're not an idiot for thinking that. What would make you an idiot in trading would be if I said, I think the NASDAQ is going to go up and I am going to leverage my account massively because I know it's going to go up. That would make you an idiot because you don't know. Nobody knows, right? Nobody knows for certain. You can have an educated guess, which is what I go for, right? Educated guesses on direction, but I don't know for certain. What makes you an idiot in trading is not being wrong about the direction of a move. What makes you an idiot is inappropriate risking. Okay? So I have an appropriate risk, and I think we could see higher prices on the NASDAQ. And if I'm wrong, I'll stop out. Sometimes I'm wrong over and over. And then the YouTube comments get real spicy when I'm wrong over and over. And that's going to happen sometimes, right? You're inevitably going to have periods of time where you're wrong multiple times in a row. But good trading is all about sizing your size to be at a place where you're not going to get crushed when you are wrong over and over. It's going to happen. Everyone in this audience right now, if you think like a 10 streak loss is not possible, you are in for a wild ride. It's very possible. We're all educated guessers. That's our job as analysts. Exactly. Do you think scalping is profitable long-term compared to swing trading? I don't know very many profitable scalpers. I know a lot of profitable swing traders. I don't want to go around stomping and saying, haha, the way I trade is the best. But I will say this, haha, the way that I trade is best. I'm just kidding. Of course, I'm biased towards swing trading. It's what I do. But I I would genuinely say that I know a lot more profitable swing traders than day traders and scalpers. Not to say that day traders cannot make money. They can, right? There's profitable day traders too. But I think the success rate for swing trading is much higher. And there's some good reasons for that. When you day trade, your trading costs go up a lot, right? When you're trading constantly, there's commissions, there's, there's more paying the spreads to your broker. There is just more trading costs to trading the low time frames and getting in and out of the markets over and over and over. That high frequency trading is costly. And although it may not sound like a huge amount when you're taking individual trades, it adds up quickly. You shall be humbled. I've been humbled many times by the markets. Probably everybody in this chat has. Let's see. Sorry, just reading the chat. Cheryl's, how long are you streaming? You can always check the schedule. Now that we've got this on the site, live stream schedule, I am on for 2 more minutes, and then we got Chris Pulver taking over the show. I will be back. Actually, we can update this. Maybe James or Chandler could update this for us. I will actually be back with Dr. Greg. So I'll be back at 12 to meet another new guest. We had 2 new guests on the show today, which is awesome. And then I'll be back again for the Fed meeting minutes. So we've got meeting minutes at 2 p.m. today. We got an action-packed stream. We'll be streaming all day long. I invite you to leave the stream up all day and enjoy the show. So let's see. What else? I want to look at oil. Is oil coming down yet? I'm watching oil for a possible retracement buy setup. I like this shift in momentum that we're seeing. The 38.2% retracement is one thing that I like. How did you trade before you had the edgefinder? That's a great question. I used fundamental analysis, but I did it all manually and I hated it. Like I would still, so before I had the edgefinder, I would do this manually for a couple things that I wanted to watch. Like I would go score all this stuff. I had like a personal checklist. How does GDP look? How do manufacturing PMIs? And it was so tedious, so slow to gather all that data by hand. That's where the edgefinder came from is, I was doing it all by hand. And then I was like, no, we can automate this. And that's where the edgefinder came from. So before I had the edgefinder, I was going through and I was looking at retail sales data and inflation data, and I was ranking my favorite things to trade and determining if something looks strong or not. Tori switched to swing trading too. I think you impacted her. Nah, she switched to swing trading before our podcasts and discussions together. She's on her own wavelength with swing trading, day trading, stuff like that. Swing trading is also just one of the biggest perks is that if you're somebody who has a busy schedule, if you have kids, if you have school, if you have work, swing trading is just much more, it works for your schedule. So for a lot of people, including Tori, who's very busy, she does a lot of social media stuff. She's busy, right? Day trading is hard to dedicate multiple hours a day to. Let's see, where's dollar Swiss? Did we get another push on dollar? Nope, still holding this trade. Still working with it. NASDAQ's a little bit lower here. S&P's down a little bit. Russell's down 1.5. That hurts. That hurts. Down 550 on my IWM puts that I sold. Would obviously like this thing to push back up, down about 0.9% today. How is healthcare holding up? Or is it at all? Okay, it's holding up okay. Our short puts on XLV are doing okay. I also closed my GDX short puts, which hindsight 2020, should have kept those open, but my silver trade is probably doing okay. Yeah, there we go. My silver short puts are doing okay as well. TLT has been a loser for me. I'm still dealing with this drawdown on this position, down $4,000 on that. Little bit of drawdown here recently. My TLT trade, semiconductors, I'm still in, but barely. I might get stopped out of this. Actually, we're very close to getting trailed out for a profit on this SMH trade. Might take profits here on stream today. But who knows? I'll watch price action, see if I can get back into that trade if I get trailed out. Watching semis into the close today, that'll be an interesting one to watch. If I take a new trade on semiconductors, SMH, I'll share it in the group. I've got several things on my watch list and a lot of trade ideas that I'm looking to potentially set up. If I take any trades, you guys will see it in our Discord channel where you can see all trades being taken by A1 trading analysts, myself included, Chris Pulver, Frank, and Ivan. If you'd like to see those trades and get them sent directly to your phone or to your desktop, you can sign up on our website, a1trading.com/VIP. And if you have any questions or you'd like to hear about current discounts, we'll drop the link to speak directly to our support staff, which is standing by to help you out get a membership if you're interested. That link will drop in the chat as well. It is a direct message link, and you can speak to someone on our staff. There's that link there. Click that link if you're interested in finding out more about current discounts. We've got some New Year's discounts, etc. And we'll go from there. Okay, guys, we're going to take a quick break, and then Chris Pulver's taking over from here. I got to get off for a little bit. I've been on for a long time this morning, so we'll take a break for me, and then Chris Pulver's going to pick up the show from here, talk more stocks, options, Forex, and everything in between. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Wednesday. Welcome back. Just getting logged into something right here on the other screen. There we go. Okay, we are staring at some red this morning. SP down 0.3%, Q's down 0.34%, Dow down about the same, 0.37%, Russell down 1.5%. Yowza. Russell small caps taking it in the nose. We've got the Russell 200 growth down a fraction of that, 0.26%. We've got Russell value, top 200 down 0.57%, but the broader index down a decent amount. Let me actually look at a position here. I may look at a 1-1-1 trade this morning. I kind of told myself I wouldn't do this. Maybe I should listen. But would I be interested in owning the Russell at, let's say, 200? And the answer is possible. And maybe looking at this through the futures market too. So let me have a look here. Maybe doing an, let's see, we got micro, we got E-minis. I'll look at the RTY feed. You look at RTY. So anything at 2,000 or lower. Let me take a look. Use the extra leverage. I'll take a look at IWM because I don't mind taking shares of IWM versus not taking assignment with futures. But let me look at Russell. Can I do anything around the 200 level? I think the IV should be around 30, maybe more. 31.7. Okay, good. That's decent. If I went out, let's say, to the end of March, and I'm looking at some potential ownership around $200. Well, I could do a ratio spread. I could do a 1-1-1, maybe something like this. Could I do like a, I don't know, I'm going to play around with these numbers for a second. So 200 by 195. That's not bad. And then I can see if I can get a little bit more. All right, how's this? If I get $1.62, it's out 82 days, $1.62, it's income. The assignment risk is only about 10 to 12%. If I was going to take on shares, I'd take them on at 190. This actually would be a pretty good price. Let me look at the discount here. So if I got assigned at 190 minus $1.62 and minus $1, so I'd own shares at 187.38. 187.38, which puts me down off the recent all-time highs. 187.38 would be around a 23.6% discount from the all-time highs, or this retest of those all-time highs. And there's still some pretty strong support around that 200 level. I kind of want to get a slightly bigger profit trap if I can, but I'm going to eat into my credit there. That's not bad. That's not bad. I think I'm going to do this. So I'm going to do a 200 by 195 by 190. And this is what that trade would be. It's essentially a 1-1-1 trade. I'm willing to take assignment on the IWM at 190. So I'd only be doing this on my portfolio margin accounts. But if I was assigned at 190, I'd get $5 on a bear put spread, and then I'd still collect $1.07. So I'd actually own it at 183.93. Otherwise, it's just a pretty easy $100. So I'm going to take this trade on the IWM. Now I'm going to compare this one. If I go 331 expiration, and that's a 200 by 195 by 190 versus the RTY feed. And similar expiration. And I'll look at the 2000. So it's obviously wider strikes. If I did like the 2000 by 1950 by 19, like I get a lot more credit here, but obviously I'm on the hook for a ton more risk. Income is way better. I'm getting like $475 for that trade. Assignment is still like very slim. That trade's okay. Still making $300 on that trade. I think I could do this trade here and then go way out of the money for, let's see what this guy is, for an 1100 or 1000 and do 2 contracts. I'm just going to try to get a hedge in here to mitigate some of that risk. So 840, $8, still make $400. So I mean, I make more money on this trade. Probability of assignment still very slim. I could add in the outlier hedge just in case the market got really aggressive to the downside, but this is a better income play, more bang for the buck, getting $400 out of a 2000 buy power. So if I get $400 income out of say 2100 buying power, that's a 19% return on buy power. Not bad. There's still loss. I can't take assignment to repair this one, which makes the IWM trade a little bit safer. Just food for thought. I like the income. That's obviously not a bad play. Probability of profit is 95%. 1900 on the RTY feed is still potentially in. It's in this area. So 1900 still has the potential to be threatened. This would be where my risk is at. I don't know. So as cool as it is to make $300 to $400 in the next 80 days, I don't really want this potential risk where I could take the IWM and say, okay, I can own it, I can repair it. It's a lot cheaper. I think I'm going to take that trade instead. So I don't mind this trade, but I've got to pair together like, the long out of the money puts. There's a lot more leverage. Potential loss could be, if we had a volatility event like we had back in August, this could be like a very painful trade. And I'm trying to avoid some of that. So, all right, I'm going to go IWM. Back to the IWM. And do I really like IWM that much? I mean, I still like the IWY. I just want to see a pullback on top 200 growth. I don't mind top 200 value, but it's just crazy how better these are performing than IWM. Especially IWX being so cheap. I mean, this one is $79, but performance-wise in this one, so it's gone up 35% in the last 5 years, but last year was not great. 12.4% underperformed the Dow. I mean, the Dow itself, which is top 30 price weighted market or a price weighted index, did 13%. Small cap top 200 value did less than that. So that doesn't get me super excited. But IWY, crushed it the last 5 years. Last year was up 36%. That outperformed the NASDAQ. That outperformed the S&P. That was a pretty darn good return. So I'm a little bit more excited about this one if I can get a better position on it. Maybe. All right. Food for thought. I think the IWY, it's not going to be as liquid. I'll come back to the IWM in a second. IWY. Yeah, I was going to say the option chain is going to be way worse. I'd have to go out to May on this one or February. Ugh. They're $5 wide. Would be an interesting spot to say I'm willing to own this thing. Maybe 200 or less. So if I did you can see the spreads are 5 points wide and the premiums are pretty much crap out of the money. So if I did a 215 by 210 by 205, get a little bit more income, similar buy power reduction. Would I be willing to take some ownership? Yes. Probability assignment, 5%. Probability of profit in this, 95%. Just outside the expected move. I get a little bit more income up front. And probably a better, more profitable small cap play. So anyway, if I took assignment 205 minus 5 minus 162, I'd own this at 198.38. 198.38 would be about a 19% discount. I would be wanting to see potentially my cost basis lower enough, and I just use options to do it, but I could lower my cost basis enough, hopefully down to like 180 or 175. Change this back to a black line. But for the income trade probability of profit, I like it. It's not a lot of buying power. I'm going to take this on my margin accounts. All right. So 215 by 210 by 205. Let me shift these all down one. $1.35. So 95% chance of profit at $1.62, 97% chance of profit of $1.35. Oh, I see. Okay, never mind. What was that? So the 205 by 200 by 199, $1.40. Man, that's not bad. What's the assignment there? 199 minus 5 minus $1.40, 192.60. $192.60 is 21.6%. That's a slightly bigger discount. Okay, I'm going to take this trade. Hopefully I get filled. I mean, the bid ask is pretty wide here, so I wouldn't want to take less than like $1.25 or $1.30. That's my minimum credit here on the trade. So let's see if I can get this one filled. No. It says closing orders only. Gosh darn it. All right, I need to call Tasty on IWY. I can't remember what other symbol I was looking at yesterday for closing order only. Son of a gun. I don't remember. I was looking at something where it said set to closing order only. Let me make sure all strikes. These aren't like non-standard or anything, right? All expirations. Crap. All right, I'll call the trade desk and see if I can get this one to actually be placed. Otherwise, I can place a trade on IWM. So I'll start with that, I guess. I'll settle for IWM. Freaking A. IWM. 331 expiration. And let's do this one again. So here's the deal. I'm looking for income plays. It's that simple. I mean, would I want to own something? Yes, but at a crazy discount. If I can own something 10, 15, 20% cheaper, I'm okay with that. Probability of profit is high. I know that we have a lot of things stacking up to be like, yeah, this market could be difficult. It could be hard to navigate. We're clearly on like, a slippery slope right now. Even though price hasn't necessarily rolled over, but it's potentially rolling over, right? Like, you can pretty clearly see this head and shoulders pattern. If this right shoulder holds and we have a neckline break, like that's a scary spot for the market, because that would push us right to the symmetry levels that I talked about. So a 575 symmetry or break of the neckline, high, low, break of the neckline puts us down into the 200 moving average. And I've been looking at this 200 moving average for months, saying I don't think we're going to go too much higher without finding this 200 moving average. So either we stay choppy and sideways and a lot of indecision and let the 200 moving average catch up to it before the market catches bid, or we actually have a breakdown and a flush lower that's going to scare the pants off of traders. And if you have cash, it's a good spot to be looking to deploy it. It's going to be ugly, it's going to be scary, but I'd rather put cash into the market as prices are falling, and start with income, start with out of the money, and have higher implied volatility so you can take advantage of that. And then we get some, hopefully some bounces at some decent structure levels. But I get it. Like, markets are looking a little shaky, and there's plenty of reasons why. I mean, historically, it's shown after we've had a 20+% gain on the year, like the following year tends to be fine. It's still positive. So momentum alone is good. This might be, that last little piece like we had during the 90s, where it's like the market was stretching right before we had the dot-com bubble. But the things that are stacking up against the market would be very narrow market breadth. Top 10 stocks are 35, 36, 37% of the entire market right now. It's like, it's so concentrated. The breadth isn't there. You've got a lot of stocks that are below their 50 moving average and below their 200 moving average. You got a lot of stocks in a bear market scenario, right? So the majority of stocks are treading water or underperforming or negative right now, and we're essentially being carried by the Mag 7 or top 10, whatever the top 10 is. What's top 10 S&P right now? Top 10 S&P stocks by market cap. We know the household names, and I'm curious, what am I missing? Apple, Nvidia, Microsoft, Amazon, Meta. Google has 2 of them, right? So you got GOOGL, GOOG, Tesla, Broadcom, and Berkshire Hathaway. Household names. Those 10 right there are carrying the market, right? You look at their performance last year, that was responsible for probably a third or more of the gains, maybe more than that. I think the market cap weighted Mag 7 or the top 10, I think, was responsible for almost like 50% of the gains last year. So if you didn't have that in your portfolio, you didn't make any money, pretty much. Maybe some Bitcoin, right? Anyway, point is, if I'm liking these trades, I'm just trying to stay safely out of the way. I mean, I can repair trades. I'm not really worried about that. So I still like this trade. March 31st, a 200 by 195 by 190, still collect over $1 of income. I'd obviously like to make a lot more upfront money because the probability of profit is pretty high, but I don't want 200 shares of the IWM at 190. I'm comfortable with 100 shares. That's fine. I can repair it and flip that thing for $5 or $10. I'm not comfortable taking on 200 shares. That's way too much cash. So as long as I can get in here for over $1, I'll take the trade. So $3 pending, $2, $1. Got filled for $1. Next. In. Okay. There we go. Got filled at $1.01. All right. So that trade's going in. I've got some scans on some premiums here as well that I'll take a look at. So we get this posted in my tracker, and then I'll post it for the Pulver alerts in the A1 Trading Discord. So this is an IWM, just a quick income trade. 331 expiration. So buy 200 put, sell the 195 put, and then sell the 190 put. $1 credit. Okay, if I take any assignment, price would have to be below 190. And 190 would be the assignment, minus $1 minus $5 would be 183.99. Okay, so copy that, throw that into the, I'll throw this under index trades for my, if you're in my Pulver alerts, you got trading journal, index trades, commodity trades, Forex trades, stocks, options trades. I'm going to put this in index trades, even though it is an option play, but new trade, IWM. Okay, buy the 200 put, sell the 195, sell the 190, $1 credit, 111 trade. Willing to own if price is less than 190 by expiration. Break even price will be 183.99. Yep. Okay. The chance of assignment is slim. We only have about a 10% chance of assignment. Trade itself has I think the probability of profit in this one's pretty high. Yeah, 95% chance of profit. So I think it's just a pretty simple income trade. I shouldn't have any assignment, but if I do, I want to make sure I've got the cash available to take the assignment. All right, so let me paint this box in here. 200. I'll just use this one. So the 200 down to 190. And that's my combination of a bear trap in addition to the income. Like I said, it's attractive to do the Russell side, or the Russell future side, but the potential risk on a futures market and the liquidity as well. If we see any type of like nasty crash, I mean, small caps are going to take it a lot harder than S&P and the Qs. So I'm just going to stick with I'm willing to own the IWM and repair it. I think that's going to be okay. So 331 expiration, buy the 200 put, sell the 195 put, sell the 190 put, $1 credit. So pretty high probability trade right there just for income. And that's pretty straightforward. All right, post that screenshot and then we'll move on. Okay, that is in under index trades. Very good. Okay. Let's have a look. We're still red on the day slightly, going back to where we started the week. This is the SPX. I'm just going to take this line and put it back down to the FOMC. So this is the FOMC low right here. So FOMC low from the 18th. There's PCE 2 days later. We retested that during the holidays. We came back up and retested the start of the FOMC breakdown right there. And I said this Monday. I think that prices right now are going to be stuck between this level and this level. And that's the only thing I really care about as far as directional trades. You know, could this market find a way to break and go higher? Maybe. Probably a lot more difficult, in my opinion, to justify all-time highs. You know, I think if anything, it's like the market might just hold and hold, and there's a lot of uncertainty. Maybe we need some earnings catalysts in order to drive markets higher. Earnings always starts with financials, and then we get into the Mag 7. And if earnings is going to show like Q4 earnings printing in Q1 are positive and the growth is still there, the multiples are still there, then maybe the market's like, okay, things are okay. The stock market is fine. Despite higher inflation, despite Wall Street versus Main Street, despite the bifurcated markets of what's real versus not, despite the bond market going higher, right? 10-year yields are going way higher. So if we take a look at, Mag 7, Apple's at 242 and change. It's like, okay, we're bouncing on Apple today. Fine. Amazon is okay. Let me just switch the charts here. Let's go back to SPX in this one. So Mag 7. There we go. So Apple, if we're bouncing off of the 50 moving average, do we come back up and retest, 247, 245? Is there any type of bid that goes into the markets by Friday? Thursday, the markets are closed. Okay, we have Jimmy Carter's memorial, so equities markets are closed in honor to kind of pay respects for the 100-year-old president. Amazon, looking at some pullback levels, I'd look at the 50, the 100, the 145. I still like Amazon a lot. I do have a bunch of trades running on Amazon still, and I want to take a look at this one for the portfolio for a second. So I've got a 140 by 135 and a 130 by 125. Those are expiring next Friday. Those are pretty much in full profit right now. I'm up $1,400 open positions. I don't think there's any chance of assignment on this one. They're well outside the expected moves. So I'm going to look at a fresh trade on Amazon. Let me see what these close for right now, actually. So I traded them for, I've got 1410 in credit. And right now, oh, these are all puts. Never mind. These are all puts. Sorry, these are cash secured puts. So if these are trading for like next to nothing, I might just close it and move on. Okay, I don't get an exit commission, so it's not a big deal. Let me see if I can get out of here for 1 cent. Cool. I'm just going to close these all down. That way I can free up some margin. That's $1,400 cash and a lot of buy power that I'm going to add back in. Yep. Very nice. All right, let me see what other accounts I had Amazon in. All right, let me close these up really quickly. I want to look at a fresh position on Amazon. Probably one of my favorite stocks. Just to say, if I had like friends or family reaching out to me and say, Chris, what are you going to do? Like if I just want to get started in this, I would say if you're trading the stock market, either buy the SPY, buy Amazon, dollar cost average into it, and don't care for the next 10 years, and it's going to be fine. Bitcoin, same thing. It's like maybe not 10 years, but certainly if you just got started somewhere in Bitcoin the last year or 2 or 3, you're not going to be regretting that decision. All right, so I'm getting some buy power back on these with closing out those puts. This one should be the same thing. Yep. So that's good. It's going to be some nice income right there that I'm closing out for today. And the nice thing is I'm closing this out for a 1 penny debit, which I'm totally happy with, and there's no commission on that. So very nice. Okay, no puts there. No puts there. No puts there. Sorry if you hear snoring on my lap. That is my dog. And it should have some puts here. There we go. So close these down. Okay, so all those Amazon puts have been closed out for profit. Now I've got some pretty serious buying power back. So that one, $308,000 in buying power, 146 in buying power, 240 in buying power, 194 in buying power. All right, time for some fresh trades on Amazon. Good stuff. And I have 1 trade running. Good. Okay, we're fine. Let's go. Amazon. Powell speaking later today. No, it's just going to be FOMC minutes, right? We have FOMC minutes today. That's just going to be a little bit of a statement. We'll see what the Fed says. If anything, does that get the market to move at all? Yes, no, maybe. 10-year yield, 4.68. Mortgages were creeping up towards 7+%. I mean, I don't know how bad it's going to get. You're seeing a lot of, bear porn and doom and gloom stuff on Twitter right now. If you look at the 10-year going higher, okay, look, I mean, if this goes up, this is what's scary, right? If this happens, everyone's talking about like, oh, mortgage is going to be 8%. Mortgages might surge to 10%. If you think that's going to be good for the housing market, I mean, that's insane. Like the Fed, if there's going to be a backstop, it's like we will have a housing market crisis. We'll have an affordability crisis if we see 8 to 10% mortgages. Because not only do you have higher interest rates, but you have prices that keep going higher. Okay, let me see if there's an average home price. Average sales price of new manufactured homes, that's probably fine. That's not the sales price. That's not even close. What's median home? Median home price of existing homes, single family homes. See what these are. All right, 410,000 or median home price. That was single family. So 410 on single family homes, or of just existing homes, 406. So between 406 and 410, that's your average home price. If you were to do a 7% mortgage on that, it's expensive. 8%, 9%, 10%, it's expensive. The rule of thumb is nobody should be putting like 20 to 25% gross down on a mortgage. And right now, based on the median household income and the median home sale price, it's like 40 to 50% of your gross income is going towards a house. Like people are going to be house poor if this continues. We're already there, and it gets worse. It's like, this is what I'm telling you. Like, I think the bond market might be the thing that breaks this year. And it could be, like a one and done break, and the market has to be like backstopped by the Fed, which just means like there's going to be another period of like chaos similar to what we saw. The nice thing is we've seen it before, right? Like look at how the market broke late July into early August with the SPY or the S&P, the futures, like everything broke, right? That little 2 to 3 day window from like August 1st, August 2nd, August 5th, that type of crazy flashy move could be what happens in like the bond market. And then there's an immediate backstop, and all of a sudden we see like a top forming on bond yields and we see a bottom forming in bonds, but it's going to be painful of how it gets there. So that's probably one of my bigger predictions this year is like, if something's going to break, it's the consumer, the housing market, because you can't afford to buy a house anymore, or it's very tough to buy a house right now. And nobody's going to move. If you've got a 3-4% interest rate locked in for 30 years, why the hell would you sell your house at a higher price? And houses are staying on the market for 60 to 90 days, a lot longer than before. And you're going to see like, I've got to move to a new house at a 7% interest rate, 8% interest rate. You're going to get way less house at a higher price. So it's just like, it sucks. So I think the housing market's going to be a big deal. Inflation, it's got to get better. If it doesn't, like stagflation is a very real like reality for the US this year. Maybe we won't realize it right away, but maybe later this year, like the second half of 2025 could get really crappy. So enough of that doom and gloom stuff. I just want to say like, it's not what I'm talking about, but the trades I'm making, the income trades I'm after, this is stuff that I'm considering. So what stocks do I like? I mean, I still think it's hard to go wrong with Mag 7. I'd love to see some pullbacks here. So I'm going to look at a trade on Mag 7. This is Amazon. If I could own Amazon 200 or less, I'm okay with that. Okay. So we'd get a 13.5% discount. I can lower the cost basis more. If I did take on any shares, I would then collar it, but if it stays here where all this is, right? If all this is like a little correction and it's really like orderly and kind of smooth, then the market might, catch a bid. But I guess the concern would be like, if this rolls over a little bit more violently, puts in a low, comes back here for a dead cat bounce, and then comes back down. Well, maybe it's a range trade, and so I've got to be prepared for, if I want to take ownership here around 200, I got to be prepared to lower my cost basis down to like the 160s, which I'd be glad to. And I think that longer term, Amazon is, give it time. I think it's a $500 stock. I think it's a $1,000 stock, give it time. Let's go here. I mean, when fair market value shows 365, I don't mind taking ownership at $200. I mean, it's cheaper than current price. and fair value is higher, I think this still ultimately becomes like a $1,000 stock, and it's another split, and you just play the game. So I don't mind anything around $200. Just depends on what my option chain looks like. If I went out, let's say to March 21st, 72 days out, a ratio spread may not be awful. I get $2.47 with an 85% chance of profit. There's an assignment risk of maybe 18%. I don't mind taking the assignment. If I did own the shares, I would own it 195 minus 5 minus 2.45. I'd own shares at 187.55. I'm happy to start there. Okay. If I go, instead of doing a ratio spread, let me see what the 111 looks like. If I do a 200 by 195 by 190, I collect less income, $1.70 versus 245. I own it cheaper if I get assigned. I mean, $1.70 is good. I just went from an 85% chance of profit to 89% chance of profit. I'm sacrificing about $70 in income. So, do I want the assignment? Yeah. If I bump this up, now I get 225. Let me see what this one looks like. This would be assignment at 195 minus 5 minus 2.22. I'm going to take this trade. So is this better than a ratio spread? All right, let me write this down. So if this was a Amazon, so closing order only on IWY, Amazon, if I have the 205 by 200 by 195, that is 222 for a March 21st expiration, versus if I do the 200 by 195 ratio spread, 250. So the 200 by 195, 250. So probability of profit's 85%. I'm only getting about $28 more in income, but an 89% chance of profit versus 85%, I take that slight favor. So I'm going to do the 111 instead. So I'll add in that trade right there, take out one contract. So now it's a 111. Wait a minute. Oh, there we go. Would be my break even. That's what I want to find out, I guess. So this break even would be 195 minus 5 minus 2.25. Break even 187.75. Okay. And the other one would be get rid of it. Do it that way. Put two contracts in for the 195. Now the break even would be assigned at 195 minus 5 minus 2.50, 187.50. It's pretty much not really the different. 187.50. So I guess the ratio spread is totally fine. For break even level, it's totally fine. I guess the question is, do I want the extra $28 and the extra 4% probability? Because that trade, less income. This trade, fine on income. Break even's the same. I'm just going to do a ratio spread. So a 200 by 195, two contracts. All right, see if I get like 240 to 245 in this. Buying power, I'm only going to do this on my margin accounts. So it's only $1,000 in buying power. I'd love to take on more shares of Amazon. But I'll then just own the shares and work it. I'll own the shares and work it. I like the trade. All right, I'm going after it. Close catapult. So here we go. 244. See if I get filled at the mid price. That is pending at 244, filled at 244. Okay, good. And then let's go across the board here. Filled at 244. Filled at 244. Let's see, 1608. I'll do this one. 1608's got, and right here. Okay, those are pending. So filled, pending. Come on, don't make me beg, Amazon. Give me 243. 243. All right, 243 to 244 got filled. New trade, Amazon. Ratio spread. It's all my margin and PM accounts. So it's a 3/21 expiration. Buy the 200 put. Sell the 195 put. There's 2 of those contracts. Collected 243 and 244 credit. Willing to own, and the break-even price would be 187 something. So if I'm assigned, it's 195 minus 5 minus 2.43, 187.57. Okay. Amazon is in. So I still have some shares of Amazon. I've got a collar trade in this one. It's 220 covered call. I've got a 165 or 170 put. So give myself some protection on the downside if things get a little dicey. But putting in this trade, the 205, or the 200 by 195. So start this thing at 200. Go down to 195. There. So this is a 3/21 expiration, 200 by 195 put ratio spread. Okay, I'll get this posted in my alerts. All right. So yes, I'm doing some live trades. Yes, I'll get to gold. I'll get to Bitcoin. I'll get to oil. I'll get to the dollar. I'll get to Forex. Okay. I'm in the markets too. I'm trading, but I'll get some analysis in. Analysis doesn't help. It's not trading for me. Like, I'm placing trades, but we'll get to the other ones. Just give me a few minutes. We'll power through in 10, 15, 20 minutes of analysis. Okay. All right. So screenshots in. Putting this in my stock options channel for Pulver alerts. Ratio spread. Willing to take the assignment at 187.57. We have about an 86% chance of profit. And my delta on the 195 is an 18. So about a 15 to 18% chance of assignment. Okay. And then put the screenshot in. All right. Amazon is in. Apple. Come on, Apple. Everyone click the buy button on Apple right now. Just kidding. Google. Meta. I like to see Meta fall back towards the 200 moving average before I get some action there. Microsoft might be the other one. I do have some ratio spreads already in. Maybe looking at a 1-1-1 here on Microsoft as well. Another income trade. I have one out to next week, which should be profitable for $1.55. Looking pretty darn good. Have one out to February 21st for another $1.68. We've fallen a little bit. I'm kind of looking at the same levels. Could I get something in like the 380 to 375 level? Possibly. Let's have a look. And then we'll do some power analysis. All right. So we have earnings on Microsoft on February 4th. We've got a dividend on February 20th. Probably do the same thing March 21st. I'm kind of liking that, like Q1. 380 is okay. That's our August 5th low. 380. I mean, I'm willing to own it. So 380, if I started there, that's another income trade. If I took the assignment, I'd own it at 370. Do the math. 370 minus 5 minus 2.40. I'd own shares at 362. Again, it's a bit on the pricey side, but 362 ownership would be a discount of around 22.5% off of all-time highs. So I think I'm okay with that. Again, if I went out 30 days to repair this stock, how many credits do I get? If I went out 30 days at the money, I'm getting like $10 to $11 for an at the money covered call. So it's a pretty easy stock to hold and repair. Even if I'm getting assigned, it's like, yes, I would have to tie up $18,000 in margin to take this trade, or cash, because it'd be on my margin accounts. If I tie up $18,000 and I flip it for $1,000, it's like, that's pretty good return on risk to me, return on capital. So it ties up a little bit, but that's why I want to use like the accounts that have a lot more buying power. So probably these accounts right here. Those 4 accounts I'll probably end up using. These are all portfolio margin accounts. And if I can do another income trade, that's another $1,000 of income. If I take the assignment, it's another $4,000 to $5,000 for the entire portfolio. So I don't mind it. Going out to March, right here. So I'll do the same math. Is it better to do a 1-1-1, or is it better to do a ratio spread? It's going to be about the same. If I take this one away and I just double up at the 375, I get 285 of income with a 90% chance of profit. Takes up 38.10 in buying power, or 238 takes 37. So what's the buying power? 3762. 3762 in buying power versus 38. But I get more income. It's, I don't know, it's about the same. And then break even, 375 minus 5 minus 2. If I get filled at the mid at 95, I mean 367, that's not bad. So 367. 367.05 on the ratio spread versus a 1-1-1. Which would be a break even of 370 minus 5 minus 2.44, 362.56. That's a way better break even. And I'm still making 244 on that trade. I think I like this one better. So 362 versus 367. I like that break even better. 362 from current price. 362 is, about a 22.5% discount. All right, I'm going to take this trade here. So hopefully 240 or better, getting filled in this one. This one is a March 21st. Only requires about $1,700 in buying power. Not too bad. All right, hopefully no less than 240. Got filled at 240. Easy peasy. All right, 9732. Getting filled there. Perfect. And there. Cool. All right, that trade is in. Microsoft, 3/21 expiration. This is a 1-1-1. So buy the 380, sell the 375, sell the 370, 2.40 or credit, and willing to own. Break-even price would be 362.60. Okay, post this in my stocks option trades. New trade. Got to have some capital in this one if you're willing to own it. Otherwise, there's still a really good chance of profit, 90% chance of profit on the trade. 90% probability of profit, about a 10% chance of assignment. So I've got the capital to take on the shares, repair them, generate the income, but basically I'm just going to go align with this. So I'll stretch this out a little bit further and put in a 321 expiration, buy the 380 put, sell the 375 put, and sell the 370 put. And that was for $2.40 credit. There. Okay, so trying to stack up some income on Microsoft. Done. All right, new trade on Microsoft, new trade on Amazon, new trade. I put a trade on Micron this week, trade on Snap, trade on NVIDIA. Palantir did that yesterday. TLT, I got into some diagonal spreads on TLT and a couple others. All right, now you guys ready for some analysis? All right, let's go some analysis. I'll go top down here. So we're down today briefly. I said on Monday, watch these two levels. These dotted lines that I have in my chart, SPY, just pretty much watch like the FOMC breakdown and that retest of it right after the holidays. So that was like Christmas Eve into Thursday, the day after Christmas. And then we came right back down to that PCE low, which was right after the FOMC. So we are stuck in this range for right now, which is actually working perfectly for some of my, one of my services called Daily Profit Play. We went out like 40 to 50 days. A lot of those trades are looking pretty good for profit. So hopefully price just does its thing and we just stay confused for a second. The concern to the downside would be that we do end up breaking this low and we have room to drop towards the 200 moving average. If it drops, like just be ready for a pretty nasty move towards the 200 and possibly coming back into this structure. So around like I'd say 550 to 540. Yeah, I could see price falling there, and depends on how big and how crazy IV gets, like implied volatility. I will probably be selling some premium or just putting in some credit spreads. Qs, very similar. Watching, we had a fake out there over the holidays, still kind of the same thing, like watching that structure. The Dow, I'd still like to see if the Dow can flush a little lower. I talked about this week. If the Dow can just flush a little bit lower, I'd like to see this correction area, like find the 200 moving average, a 9 to 10% correction, 10 to 12% correction, somewhere in there before I get long the Dow. I think it needs to shake out the United Health Group stuff. Russell, I just put the trade on. I'd rather trade other instruments. I'm going to call Tasty Trade today to see why. I need to see if IWX is offering more than closing orders. I don't want to just be forced to dollar cost average. I want to trade options. VIX is still slightly elevated. We're still in the teens, though. This isn't anything to be alarmed about. It's just slightly higher volatility. SPXY, that's kind of my first instinct when we have a sell-off, is to get long SPXY. Dollar index, still maintaining bid. Currency strength chart. Pound down today, dollar up. So I keep saying, like, this dollar index is probably going to rally. What's interesting is dollar index, gold, and silver, all could have like a bullish move. I still like them long. I think dollar is something that eventually becomes one of the best shorts of the year. I just don't know if it's going to be way up here before we end up getting a short on the dollar, right? Maybe like the first quarter, the first half of the year is dollar strength and the market kind of prices in this uncertainty or prices in higher inflation. And then like the second half of the year, we see that it's been priced in. Now things start to get, I don't know, maybe damage is done in the equities market, maybe damage is done in the bond market, who knows? But I don't think the dollar is worth fighting. I said, even if we get a pullback here in the dollar, I'm still long like 106 or 105.50 as a support level. To me, this dollar is likely going to stay bid. I think the dollar, it just looks better than pretty much every currency pair right now. It doesn't mean I love it. I'm long dollar CAD. And we have non-farm on Friday. So this will be something that hopefully hits my take profit by Friday. And then dollar Swiss, I'm pretty keen on getting this thing to 92. I'd love to say that we're going to double this move. If this is a low to high and we double that move, then we're talking about going back to parity. But I've got 20 plus positions running throughout these last couple of years, and I'm still holding them. So I've stacked it up a decent amount. If we hit 92, I'm just going to take the profit and move on. But I'm not going to be totally surprised if we hit 92 and we break this structure that we end up going, there's a big fat pocket right here. So I could see a break, let's say we hit this level and break up. Well, if we pull back again, I'd still look to position and maybe stack up more trades towards that level. But this would be greedy, right? That'd be my greed trade versus my planned, patient, technical trade. I make a lot more money when I'm planned and prepared and patient. So I don't make a lot of money when I'm greedy. Most people don't. Or you make it and then you lose it. So I'm just probably going to play it safe and take my profit at 92. Oil, I said watch out for the fake out on the 200 moving average on the daily. So far, I'm still not convinced that oil is making a big break to the upside. Not yet. Now, I said if it stays up here for, let's say, like 5 candles or so, let's say it stays up here for like 5 candles, maybe it's enough to show it's convincing, because this one only took 2 candles. This is 3 or 4 candles, right? I would say, we've had green, red going opposite ways every other day. So I'm not quite convinced yet. But if we have like a bigger candle red, then this is probably a fake out, and we're dealing with this structure again on oil. Still not going higher. But I'm not sure yet. So keep an eye on that one. All right, USO, see if it comes back and fills the gap. Oil futures, be careful on that one. I'm just not convinced. My bull call spreads I took, late last year worked out pretty nicely. I took partial profit just because I thought when we kept hammering this floor at $67 that we might break it. So I wanted to take the profit. Natural gas looking a little bit better. I'm long on natural gas out to 2027. I've got a trade on this one for UNG up to $23. Chart alarm set at 21.65, which is this high. I'll set another chart alarm here at $23. And this would be my diagonal spread, sell call, in the money, ITM for in the money. So I just want to get notified by that. Gold. I would still love gold to come back to the 200 moving average in the 25 to 2400 zone. It's interesting that the dollar is maintaining bid and gold is also maintaining bid. Is this a little tiny hesitation on gold that just stays sideways and then gold maintains posture? Look, gold might be a good play this year. It was a great trade last year. It might be a good trade this year. It's, gold obviously serves a purpose where it's an inflation hedge, it's a diversification, it's a non-dollar trade. I think it's interesting if the dollar is strong and gold is strong. Eventually, what's going to be nice is when the dollar gets strong and then weakens like crazy and gold just gets stronger. So, I mean, in that sense, like if you're patient with gold, I'm just waiting. Like I've got GLD shares. I played GC all last year. I'm in a bunch of different option trades as well. I'd like to see A, B, C, D. I'd like to see a correction. So I'm not really buying into all this noise right now. I'm looking to see if we have another flush lower. To me, that push down would be because the dollar goes up. If the dollar goes higher, I think gold still has room to go back down. Okay. And then gold to me looks way more attractive in like the 25, 2400 zone. But I'm longer term still bullish on gold. That is not changing. Silver's looking better. I may actually, you know what? Let me take a look at old SI. I might look at a trade here in SI futures. Previous resistance 26 and change. That's SI futures. Okay, something like that. So could I do a little income trade here? Possibly. Silver futures. March is $77 or 77 days. 26 would be the level that I'm interested in. Could I do a little 111 here? 26.50, 25 there. So 73 cents. I make $300. It's not great. 92% chance of profit. I do like the trade, but the potential risk is just insane. If we have like a crash in futures, that's a ton of risk. Obviously, that's not what I'm willing to take. So could I offset that? I mean, it's a nice little $350 income trade with a 92% chance of profit. But how low can I go for a hedge? Now I still make $300. If I double that contract there, I still make $300. Takes down the buying power quite a bit. Now I make $300 with a buy power reduction to 26.27. That trade's okay by me. So I think I'm going to take this trade. 92% chance of profit. 26. We're by. I mean, if I had any risk on the trade, it'd be down here. Chance of I mean, there's no assignment risk. I'm not taking assignment. I would just manage the trade or manage the loss, or because it's a naked put, I would just roll it. So I'd have about a 5 or 6% chance of assignment, which I'm not going to take. I'm just going to roll this out and give myself more time to be right. But for the trade right here, I'm going to go after an income trade on SI futures. So the 26.50 by 22, 26.25 by 26, 63 cents, pretty liquid. Can I get filled at 65 cents? 65 cents gives me over $300 after commissions. Let's see if this will get filled. So 0.065 not filling, 0.064 not filling, 0.063, 0.062. This is the mid price. Come on, 0.061. All right, this is my final offer here, 0.060. Got filled at 0.060. All right. I like it. Let's go here. Filled. And here. Filled. Okay. If you're interested in that trade, I do have a futures tab. This is a new trade / SI for silver futures. I went out to March 26th expiration, buy the 26.50 put, sell the 26.25 put, and sell the $26 put, and also buy the 19.5 put too. So this is a 1, 1, 1, 2. And I'm putting the hedge in there to reduce the buying power. Otherwise, it'd be like $7,000 or $8,000 in buying power. So I'm taking that down. I'm sacrificing a little bit on the credit side. About what's the actual mechanics here? So I'm looking at 0.060 credit. Trade after commissions. We got about a 93% chance of profit. If $26 price is threatened, this is a naked put. I will roll out in time for credit. Okay, and I'm looking at about $277. $277.90 income if price is greater than $26. I also have a profit trap on this trade. So let me get rid of this leg for a second. If I delete this leg, I've got a potential profit trap for $1,610 profit trap. If price is between $26 and 26.25. Okay, so that trade is now in. 3/26 expiration. Buy the 26.50, sell the 26.25, sell the 26.060 credit. So starting it right in there. Again, what I want to see price do is just go up. Price goes up, that's income. Nothing to do. That's the main plan of the trade. But there's a profit trap if price doesn't cooperate. There's a way to kind of repair this trade and work your way through it if that's needed. But hopefully this is just a straightforward income trade. All right, so let me take a screenshot of that, get that posted. Any questions? I haven't seen a chat pop up in a second, so maybe I'm just talking to myself. All right, screenshot is in, and I'm going to post that right now. So Pulver alerts getting posted there for SI futures. Boom shakalaka. All right, next up, Bitcoin. Bitcoin selling off a little bit. That's totally fine. I still think we have a pullback. And I'm looking for a pullback that gets us into here. High, low, lower, high, lower, low. I like the 90K to 75K area. Obviously, the lower, the better. So I'm looking for, additional buy-in levels between the 90 and 75K zone, previous all-time highs. We may not come all the way back to that around 74K. But if we come back and fill some of these efficiencies, this would be good. Let's see how technically pure Bitcoin is right here. And if we pull back in this zone, is it eager buyers, or is it pulling back for like deeper efficiency and a trend line support? Either way, it's like I still like buying the dip on Bitcoin. It might maintain bid here as well. But if we break the neckline or that little low from the PCE and the holiday lows, if we break that low in the stock market, Bitcoin's probably going to sell off too. All right. So I'm still looking to add some positions on Bitcoin. I'm holding shares of BITO. I've got it collared. I'm holding shares of IBIT. I've got it collared. I'm holding shares of MicroStrategy. I've got it collared. These are fine. I will probably trade MicroStrategy throughout the year unless something like terrible happens where it's like, oh my God, Michael Saylor's a crook and it's a Ponzi scheme. I don't know. I don't think that's the case, but this is essentially like a 3-time leverage Bitcoin instrument, and it's trading as a tech stock. It's just a huge disguise. Like essentially, this is trading like volatile Bitcoin. So anyway, I like the prices. Ethereum. I need to close these trades down. This is kind of my to-do list for today. EETH. I've got like $6,000 of profit on EETH, so I need to close them down to avoid the outlier risk at $60. So here, EETH, my 60 and 45, that was a ratio spread. Currently, those are all profitable. Or is this the 45 by 35? That one's fine. It's the 60 by 40 that I want to make sure I take some profit on. So right now, this could close out. Gosh, that bid ask is so wide. This is out to next Friday. What's my max profit? I think my max profit, so 9. So my max profit would be around $7.60. So 971 minus 210. So 761 is my max profit. And if I have to trade that for like under $1, I mean, I'm up around 821 minus 170. Okay, so I'm basically sacrificing about $90 to $100 if I close it out today, which is okay. I have plenty of room from the 45 by 35, but the 60 by 40, just to be safe, I don't want to take this all the way to expiration, because if we have another flush lower, I mean, this could easily drop $5. So I don't want there to be, I mean, I guess I could own it. Does this look a lot like Ethereum? It does. So, I mean, if I owned EETH, it probably wouldn't be the worst thing in the world. But I think what I'll do is I'll take the profit on that credit spread and then consider actually just buying shares and collecting premium if the shares are decent enough. Get out of here, Chrome. Nobody wants you. If the shares are decent, if the premiums are decent, what is option chain sucks on this thing. Premiums are probably terrible. 44 days out, I get $4 or $5. I mean, it's good premium, but I don't have a lot of workability when these are like monthly. Like these are way spaced out. This option chain is way spaced out with expiration, so I don't love that. I'd rather trade IBIT, I guess. All right. Anyway, that'll be a to-do list for me on ETH. Let's get some other stocks. I'll go a few more minutes. We cool? All right. Thanks. How about Japan? I haven't looked at Japan in a second. Nikkei's pretty much nothing. Japanese yen futures. Maybe I get what I want. Japanese yen futures. somewhere in here. I'd like to get long. I will probably buy a call, sell a call, and do defined risk. Probably less than 1%, but stack up a couple of orders and see if for maybe the second half of this year, if something breaks on the Japanese yen. Forex pairs, I'm looking at the dollar, Sarah. So it's like dollar index, don't fight the dollar. I think dollar strong is still safe. I'm still long dollar CAD, long dollar Swiss. Aussie dollar, I'm scaling in small. New Zealand dollar, I'm scaling in small. Euro dollar is going to parity most likely. I think that's a safe trade. Am I in it myself? No. But I don't think the euro dollar is going to be coming back above 106. So if you're looking to kind of level in, watching some confirmation levels, but taking this essentially down to parity. If it gets worse than that, 96 were the previous lows from 2022. So I like the trade there. I'd rather trade the euro dollar than the pound dollar, in all honesty. My euro pound position, I'm still in and long, and this is actually getting back to break even now, which is fine. I'm looking to take this up to the 200 moving average. I haven't looked, nor do I want to trade euro Aussie, euro CAD, euro New Zealand. I'm just scratching it off the list. Pound Aussie, pound CAD, pound New Zealand, it's off the list. Yen pairs, they're off the list. I'm only going to trade Japanese yen futures. So there's your rundown of Forex. Dollar crosses and Swiss pairs for positive swap. That's pretty much it. Yep. Euro pound's been pretty good. I'm trying to get this back to the 200 moving average. So if I can, we've got another 70 to 80 pips to go up. So I'll see if I can grab some profit on that. Mag 7 we did. Bond market, TLT, down for like 4 or 5 straight days. We'll see if this thing starts to catch any type of bid. I wouldn't be surprised. It really depends on the yield. This is an easy trade. If the bond yield goes up, this TLT is going to go down, and there's no getting around it. I know that there are some very smart people out there that are talking about like, I don't think bonds go too much lower than this. Anything is possible. This is why the trade that I did take on TLT is not out to this month or next month. It's like I'm out to 2027. I'm going to say in a 2-year window, I think I can get this trade to be profitable. And it doesn't mean I've got to wait on this trade for 2 years. I mean, you see my expiration on March 31st. So if somehow this thing goes up and it gets above $91, I still make 65. My break even is 86. I mean, I'd make like $4 to $5 income. So per contract, I think I'm in two contracts here for TLT. Let me double check that. Maybe it's 1 contract. I think it's 2. TLT or 4. I'm in 4 contracts. Okay, so if it gets called away, it's going to be like $1,500 income. Now that would be like pretty decent income in the next 80 days. And I'll keep doing that and keep doing that and keep doing that and try to make this as big of a profit as I possibly can. But I also know that could this go lower? Yep. Could the bond yield go higher than 10-year? Yep. Could the bond market break something? Yep. Like I'm prepared for similar to what I saw. I think I pulled this yesterday. I did a live session on the 10-year. Who remembers the UK bond market breaking? Because it just pushed to fresh lows. By the way, this happened today. Look at this bond market. This was when basically the bond market broke in the UK, and this is how ugly things can get. That thing dropped 23% from August to September in just over a month. Dropped 23%. So calling a bottom on TLT is not what I'm doing. Could this get way worse for wear? Absolutely. Could this be a 20+% drop? I mean, my gosh, we're talking 18, almost 19% if we get back to the 2023 lows. So it's possible we have like a double bottom. It may go a little bit lower for divergence, but I'm curious if the bond market's going to break this year. And does it force the Fed's hand to be reactive? Maybe. I mean, I'm sure we're going to hear about it regardless, but that's probably one of the big outlier moves this year is like nobody's paying attention to the bond market, the yields, how bad it is, how much it's squeezing, how stagflation could be a thing. It's just like the market won't admit it or won't realize it. It's like Wall Street's got rose-colored glasses on right now, and as long as Mag 7 performs, like everything's hunky-dory, but I don't know. So got to figure it out. By the way, my camera is not on me. All right, anything else for today? So yes, I play some trades. Still watching some China stuff. Not really a lot of excitement. Still waiting to see if China catches a bid. I'll know more on China probably by March. So if I get a surprise move to the upside, hooray. If I don't, I'm just working the cost basis lower. I only have shares of Alibaba, Baidu, and JD right now. The other ones I got rid of on that little pop we saw back in December. So JD, I'm still working the cost basis down. I think I'm out to the end of this month. Yep. So I've got a collar trade on with the own shares. Alibaba, Baidu, same thing. And let's take a look at the advanced decline line and then the S&P. This is another potential buy signal. Not yet, but the S&P above the 50-day. If this gets down to, let's say, $11 or less, this is percent wise, not dollars. Sorry. If this gets down to like less than 11, that means that only 11% of the S&P 500 is above a 50-day moving average, which means about 90% of the S&P is in a technical sell zone. So that is a pretty good indicator to offer some bottoms. Right. So there could be some more pressure here, which I'd kind of like to see it. I'd almost like to see the market get squeezed a little bit where it's going to force that kind of that market breadth buy spree. So I'm watching this. This is S5FI if you want to take the ticker down on TradingView. Otherwise, you're just looking for, how many stocks are above the 50-day moving average. There's certain websites that have this information too, like stocks.com and other stuff like that. All right. Chandler, how much longer? I've been rocking for, hour and 15. Just let me know. All right, we'll keep going a little bit. And then my above the 200 moving average, that's fine. That's not really a big indicator for me unless we're like unless we're way the heck down here. I mean, I suppose I could use it this way, but you can see we're way far away from how many stocks are below the 200 moving average. This would be like if we're in a freaking bear market like we were back in COVID or 2022, then sure, now we can start timing out like a bear market end would be somewhere in this region. Right? Like a bear market end would be somewhere in there where it's like, okay, the timing of the bear market would be okay, time to buy. So not a bad indicator when it comes to how do you buy a dip in a bull market or a bear market. Look at how many stocks are below the 200 moving average and just get an opportunity to buy, when it's like only 20% of stocks are above the 200 or 10% of the stocks are above the 200. That means that everything's just beat up so badly. It's hard not to buy it. NASDAQ, here's the above 50-day. I like to see the same thing. Does this get back to like 11% or 10%? That's a pretty good buy opportunity for the NASDAQ. Other stocks, Costco, too expensive for me to own it. Unless I say that with like controls of like 100 shares at a time. I'm not interested in allocating that much to Costco. I don't think the dividend is that great. Yeah, 0.5. I mean, you're better like literally being a member at Costco and given, you can have like a free membership with like your rewards. Based on how much you spend, they give you like a credit back and you can pretty much pay for your membership at Costco. But you're spending, I don't know, probably 20 grand a year in order to get a $200, $300 membership, which is pretty easy to do. If anybody's been to Costco, you're like, oh yeah, shit, I spend, $500 to $1,000 a week at Costco. All right. Zoro says, I have a question. Why retail 95% of the time is wrong in the market? Say you're gambling, randomly pick away. No, it's the stats are a little, it sounds awful that your retail trade retail crowd's so stupid, right? That's what they say. It's not direction. Hearing this directly from the broker, retail traders are usually just terrible at risk management. That's why they're wrong. Right? It's not that they can't find a trade, they can't find direction. It's that they get squeezed at the highs and the lows and they get stopped out. That's why they're wrong. Right? They're like their sweeps, those liquidity moves, those tests, those highs and lows. It happened like they risk so much, they leverage too much, and the retail crowd they tend to just not have enough time to sit through a trade. When you have to put in an entry and a stop loss, and that level is going to get tested or spiked, retail traders lose. And it's really crappy. And so the stats are, like retail traders do lose money, but usually it's because when you look at their P&L over, let's say, a 6 to 12 month window, their losses are usually way bigger. They just take like big, ridiculous losses you can't come back from, and then they stop trading. So it's like the life cycle of retail traders typically small because they leverage too much, they trade too big, they get stopped out too early and too often, and they don't come back. So it's like it's the revolving door of like stupid retail traders. So if you trade smaller and give yourself more room and more time, then you survive. You know, so that's my thoughts on retail traders. Everyone trades like too big, too quickly, too much leverage. And you're given leverage. I mean, I've got 51 in Forex, and I've got traders that are taking 201 trades in Forex. It's crazy amounts of leverage. Futures markets leverage. So anyway, so Costco, Walmart, Nike. I've got an income trade on Walmart here for next Friday. I might do another one here as well. This could have like a little consumer squeeze, but Walmart fundamentally still pretty darn good. Let me see what fair market value is on Walmart. It's cheap enough. I mean, it's not crazy expensive. I guess. I mean, 200. I mean, if right here, like if I said I could own it at the 200 moving average, I'd be really happy with that, and I'd still be happy with that. This is out to January. Let me get another ratio spread on Walmart if I can. So a stock I totally be willing to own. We're getting some decent flows. Like S&P is up to some fresh highs in the day. Freaking market maker levels, man. All right. We'll be getting some Apple flows here. Where's my Apple at? 100K Forex account. Yeah, I mean, I literally start with micro lots on a 100K account. And I know that doesn't impress anybody, and I'm not here to impress anybody. But when I start with a micro lot, here's what I typically do. 100K FX account. Here's how I typically build a position. I will take like a 0.05 starting trade size and plan on, 3 to 5 to 10 orders in a major support area. Right? So I'll wait for good technicals. I'll wait for the right conditions. I'll start scaling in with a little anticipation, and I'll start scaling in with confirmation. And I typically build up what would start out with like 50 cents a pip. I'll build it up to like $3, $4, $5 a pip. And then if I net, 100 to 200 pips on a position, or like I'm doing with, dollar Swiss at like a 400 to 500 pip area, I mean, I net out like, I don't know, maybe 400 to 500 pips net. And if you add it all up with all my trades, it's going to be like 10,000 plus pips at a dollar. It's like 50 cents or a dollar on 10. It's like I make a lot of money. But this is a way that I've never seen a trader that likes doing this, except for me. When I talk about this, it's like this is the only way that I've been consistently successful in Forex with manual discretionary trading. Trade small, build positions small, and then stack them up towards your profit targets with more confirmation. And that way I can start out really, really small, utilize virtually no leverage. And then once I stack it in, it's like I allocate, maybe 3 to 5% to my positions, and they pay out 2 to 1 or 3 to 1 or 4 to 1 because my profits are running in my direction. So I trade really, really small. Right. And so if you have a small account already, if you only have like 5,000 in Forex or 10,000 in Forex, you should trade nano lots, which is 0.001, which is like a penny a pip. You should be trading nano lots, and you can do the same thing, and you can survive this market. You can trade small. But, if anybody's in a prop program, you're supposed to trade X amount of volume, or your stop loss and drawdown has to be certain. If anybody's in a prop program with Forex, I would hope you've got a prop program that gives you at least like a 10% window for drawdown. Anything single digits is like, I wouldn't touch it. It's way too difficult to have a single digit drawdown of Forex. It really is. Or you're just trading so small, it's just hard. So I think like 10% plus drawdown or 10% drawdown is workable. I just say that from personal experience of 17 years of trading Forex. So anyway, this is how I trade. Right? So like I said, it's not nobody's like, oh my God, like it's exactly what I want to do. Nobody likes to trade like I do. And I'm fine with that because I know that I'm going to be here for the next 20 years, and it might be slow and steady. I might be the tortoise, but I do pretty well. So I'm never really worried about too much risk. I never sweat out my positions. I'm never emotional. I no longer have sleepless nights. It's like I did all that stuff early in my career. So in order to get over that, you got to control your emotions. To do that, you trade smaller and worry. It's like the risk is so small and insignificant. Just trade. So anyway, there's 17 years of Forex trading. distilled down to trade small. That's it. Doesn't work with futures as well because, you know, it's true. You'd have to trade like, you know, small. I mean, if there was a nano futures, that'd be a lot easier. But in futures, yeah, trade micros, but you're still taking a lot of risk in micros. I mean, I trade MNQ and MES quite a bit, but yeah, I mean, just doing a straight futures contract, even the micros, I mean, it's still, you know, $5 a tick, or $5 a point, and it's $2 a point, and it's way more volatile in the micro Nasdaq, right? So yeah, there's a lot of risk. You're gonna get like, you know, $300 to $400 swings every single morning, and unless you have an account that can stomach that, like, trade smaller, you know, but maybe futures is the market. But Forex, you can trade nanos for a lot of brokers now, which does make it pretty helpful. All right. Anyway, that's it. I'll go. I mean, Chandler, let me know if we need to go any further, but I'm going to wrap up here in about 3 minutes. I'm going to put probably another trade on Walmart. I'm just going to review some of these stocks. PGR, I've got a trade in CB. I think I did PGR instead of CB because the premiums and option chains was better. I did a trade this weekend, Palantir, Carvana. I'm not touching that thing. Zillow, Redfin, sectors. I'll take a look at those. I didn't really like the sectors as much. I did do one in XLC. I'm looking for one maybe in like XLE as a diversifier this year, but the premiums aren't that great. But I do have exposure in like Chevron and Exxon. I'm trading just like the energy stocks with dollar cost averaging. But I like Walmart. I'm trying to think where I was going to leave off here. Somebody's asking Aussie CAD earlier. I'm staying long Aussie CAD. To me, I mean, this, if you gave me, if you back against the wall, and I could take like somebody's horrific position in a Forex market on the Aussie CAD, New Zealand CAD, and I could be very confident I can work through a trade. Aussie CAD, New Zealand CAD, probably two of my favorite currency pairs because they never like to trend. You know, I mean, if you call this a trend, okay, cool, but look what it does, comes right back. You call this a trend, look what it does, comes right back. So this is like the give and take type currency pair where even though it's trending lower, it is very, very efficient in how it does it. So I mean, I looked at Aussie CAD this way. As this has been falling, I've been buying here at the 200 moving average. I'm looking to buy in here, buy in here, buy in here, small, and just trade the range. That's really all I'm doing on Aussie CAD. So I don't need it to turn now. It'd be nice if it does, but I don't need it to, because I'll buy some more small positions here. And then if I get a bullish pattern, then I'll stack them back up and trade back to the halfway point, or I'll trade all the way back up to resistance at the top. So to me, it's just a big range on Aussie CAD. New Zealand CAD, somewhat similar to that. You can see the swing right here. Big swing and lots of chop. So it's either sideways chop, or I thought initially this would be a channel, but we've broken that channel. So now that it's been falling, I'm looking at buying and holding in here and buying and holding in here. So add a position. There's my swing. There's support. There's resistance. I can scale myself in and space out the trades and then have this thing go back to the halfway point. That'd be my halfway point, or trade it all the way from bottom to top. Range trade. Okay. All right. I think that'll do it for today. Chandler, we good? I think I'm good. That's 90-minute session number 2 today, and I've got 2 more, so I'll save my voice for those. All right, thanks, everybody. Tomorrow, equities markets are closed. Jimmy Carter Memorial, and they're closing the equities market. I'm not sure if I'm pretty sure Forex will be open. Pretty sure crypto will still be open, but I think the bond market, equity market may be closed tomorrow. But then we have non-farm payroll on Friday. So still, if we're running a live session tomorrow, that's cool. We'll talk shop and see what else is looking good. But I'll let you go for today. All right. Thanks, everybody. Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
All right. Thanks, Chris, for coming on. Guys, we're going to stall for a little bit. We got some time until our next guest arrives. We had one of our guests, I guess, couldn't make it today. So we're just sort of working things through until we can figure out what the plan's going to be. Yeah, my camera's not on. I wasn't expecting to be on camera today, so I don't really want to present my appearance to 500 people. I hope you can understand. But yeah, maybe we'll just play through some of our little clips we have here, or something, or maybe we can take some questions from the crowd. Or we'll play it by ear as we go. We've got some time. We've got a little bit of time. Looks like Nick's going to come back, so maybe I'll be off the hook here. But I'll play one more quick break, and then we'll catch back up with him.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, I'm back. You can't get rid of me. What's up, guys? You know, when I do these bonus sessions after doing everything else, what it turns into is we're just going to talk about stocks and maybe a little Forex, because once I run out of topics, I got to get creative. And the good news is that I trade everything, so I can talk about everything. Let's talk about everything. I believe, what happened on our schedule today? Did we have was it Kenzo that didn't show up? Kenzo slacking? I'm just kidding. He probably had power outage or something. Also, need to can you fill in extra? Okay. Yeah, must have been Kenzo. He must have bailed on us. It's okay. Anyways, does anybody have, I'm just curious, some stocks that you want to look at? Does anybody have a favorite stock that they're watching? I know we have a good bit of Forex traders. A lot of people trade the NAS. A lot of people trade gold. Anybody trade any stocks? NVIDIA is trying to bounce today. Tesla. This is my stock watch list. Oh, Palo Alto's down again today. That's no good. I got a sell put on that one. Palantir down 3% today. Any valuable experiences you'd like to share about your trading career? Maybe we can all learn something. Yeah, I have the one thing that I always think is like super eye-opening is just my perspective as a content creator. This is a little bit sad, but as a content creator with a following in the trading space, I get a lot of messages of people's like stories of like what's happened to them. A lot of people, there's some dead bodies, if you will, all over the place when it comes to the trading space. It's actually sometimes hard because it's like, man, you just get these messages of people who are like, you think to yourself, man, these people should not be trading. Like they're over leveraging on everything and they're super aggressive with it. But yeah, Apple, my bias was bearish today, but it reversed. I will definitely look at Apple. Hold on one second. My cat got the door closed on her and she's screaming. Okay. Okay, so Apple is a position that I have a position on Apple. Let me see if I can show that to you. So pulling up Apple. I have a short call on Apple. And idea here basically is, Alan, just let me finish my thought and then I'll get to Apple. So as you know, from my perspective of just seeing a lot of tough stories for people, the thing that I've learned is just that you just need to really humble yourself before the market humbles you. I'm telling you, man, there's so many people out there who think they're smart. They think they're going to figure out trading in a year. And instead they put themselves into debt, right? There's just a lot of people who shouldn't be trading. There's a lot of people who just they're not psychologically where they need to be trading. And that is maybe one of the saddest parts of the trading industry. The good news about the trading industry is there's a lot less people, unfortunately, but a lot of people that have made for themselves a career out of trading. I've made a career out of trading in two ways. Obviously, the business side, right? YouTube and our software business. But then also, of course, actually learning to trade and getting on the other side of it has been a very difficult but pretty rewarding task. Anyways, let's talk a little bit of Apple here for a second. So Apple, I sold the 250 calls out for January 31st. Now, why sell calls? Why sell puts? Why not just buy and short stocks that you like or dislike? Well, the reason I love options is because it's kind of a way. Oh, is this the guy? This guy was angry earlier. I think. Instacuts, what's up? Don't have to, but I see most of his setups and they usually fail. He has a team. Have you seen his track record? Are you talking about me? I will smite you right now with my track record. If you're hating on me, we have this ongoing joke. Well, not really a joke, but we've talked about this. The content team at A1 Trading, myself, James, Chandler, we talk about how there's always one person in the rotation in the comment section that we don't know why, but there's always one person that just consistently kind of comes in, drops some anger, drops some hate, and then they rotate out. And then there's a new person that takes their place. Oh, have you seen his track record? You know, he's a fake trader. He's selling you something. But here's the thing. First of all, straight up, I do sell something. Most valuable things on the internet are attached to a source of income that makes that product or service so valuable. Instagram is an awesome application because it makes a ton of money for Facebook, Meta, etc. Everything that is usually top quality is not free because there's somebody who's incentivized to make a really great product, and that's why they're making money. Anyways, I'll show you if you're skeptical. I respect skepticism. I have nothing against being skeptical in the trading space. But just before you do make claims of like, oh, so and so doesn't make any money trading or whatever, I am not the greatest trader of history. Like, don't get it twisted. I wouldn't claim to be the best, but I definitely do claim to actually make money in the markets. Here's my all-time return on this trading account that I have, the one that I keep public. It's up 208% since inception. Now, that was years ago that I started this account, so you could say, well, only 200% should be up 1,000,000% by now. But I honestly just go at my own pace. I'm all about slow and steady gains. I trade a good mix of things. I trade stocks, indices, gold, oil, and I try and just keep it slow and steady and real. few hours ago he was talking smack, then I just came back to see he still is. That's nuts. I never know why. I never know why. There's always somebody who like takes significant time out of their day to like hate on other people. I don't get it. But some people, the other one is people like to come in and they say, you guys are selling something. Well, duh. None of this is free to do, right? You know, we put on a show, we have something to offer you. We have sponsors on this stream, and we build and sell software in the trading space. We don't sell dreams. We don't sell get rich quick. We don't sell nonsense. Are there people out there who are doing that? Absolutely. That's probably where the skepticism comes from. But just be careful that, you know, good people in the trading space exist, and don't let them get caught up in the crossfire of your skepticism. If you're skeptical about the trading space, I totally respect that and I get that, but don't go bashing people without actually, you know, considering the full picture, right? You know, is somebody selling you a dream, selling you, you know, no verified trading results? I'm on the same team as you. We should call those people out. You should, you know, be like, hey, this is a little sketch. But calling people out who do prove trading results is wild, especially when, you know, sometimes people also have just such an issue, and this is a rant because we have so much time today. Look, if your issue is, look, you're selling something, so everything you have to say is invalid. Sometimes you get those comments. Well, Warren Buffett, as an example, he is a multi-billionaire, right? Makes a ton of money from the markets. He also charges a lot of money to speak at events. He also has a business, right, that he makes a lot of money from. Most of the most notorious traders of history also ran businesses alongside their trading, right? If you go look at a bunch of the world's greatest hedge fund managers, hedge funds are business models, right? There's nothing wrong with having a business alongside trading. In fact, I would highly recommend that you do have other sources of income alongside your trading to supplement drawdown periods and to help build your capital at an accelerated rate. In fact, if you're just like bitter because you don't have another source of income on top of your trading, or maybe your trading is not even generating any income, don't let good people who are doing honest work get caught up in your rage and crossfire. I would encourage everybody who's listening, one of the best things you could do for your own trading is find more ways to generate more income off the charts to help fuel your trading capital. That is one of the biggest things that you can do to improve your trading, is to capitalize yourself properly. So years ago, I have a background in software engineering and I love the markets. But when I first got into trading, I didn't have a ton of money to work with. So I was looking at it and I was like, look, I need to build capital. What can I do? Well, I started offering my YouTube channel as trying to add value to the community. And then eventually we launched software products that ended up actually starting to sell well. And the first several things that we launched did not sell well at all. But we finally came up with a tool that people seem to really benefit from. People love being able to source economic data quickly and sentiment data and technical data. And that value add to the trading community has sold a lot of copies and helped, you know, to build my trading capital, right? So I would say to everyone who's listening, one of the ways that you can improve your trading career is, instead of, you know, trying to grow a tiny account by risking inappropriately, trade slow and steady, but find new ways to build up your trading capital. For me, back in the day, before I started the business side and I was trading while I worked a 9-to-5, I had a software engineering job. That's a great way to funnel income into your trading to build up your trading capital over time. So something to think about is just find ways to add more to your trading account outside of trading as a way to sustainably start to grow that trading balance, right? So just something to think about. So we'll continue on here a little bit. Just wanted to take an updated look and see at what we're looking at here. We got some NASDAQ continued bullish readings. Dollar CAD, dollar just continues to look really strong against several of our several of its peers. You've got Kiwi dollar, pound dollar, Aussie dollar, euro dollar, all kind of getting bearish readings. Then on the flip side, you've got dollar CAD, dollar Swiss getting bullish readings. I'm still long dollar Swiss with a small position here. I'll pull up dollar Swiss. I thought we were going to be able to get out of this trade. I was targeting a move back up just to the top here. Gave back a little bit of those gains. If we do follow through and make a move to the upside, then great. I can finally close out of that position and kind of look to wait to see if I can get any dips or any pullbacks on that FX cross. Okay, awesome. I think, guys, we've got on the live stream schedule, we got up next, Dr. Greg is coming into the live stream. I'm excited for this next session. It's a new guest coming on to the A1 Trading Show today, and I'm going to be sticking around and spending some time with him, going over some charts. And what we'll do here is we're going to just take a quick break, run a quick break to thank our sponsors, and then we'll be back with Dr. Greg on the screen. So stay tuned. We'll be right back.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
All right, and we are back with Dr. Gregory. How you doing, Gregory? Welcome back to welcome to the stream. I guess this is your first time. How you doing?
I'm doing great, Nick. Thank you so much for the invitation here. I'm really excited about being here, and the markets are just moving. They're fantastic. I love the dollar longs. It's on fire. So
yeah. Well, it's great to have you on, and I actually saw your content and shot it over to my team, the media team behind the scenes. I sent it to him. I said, this guy seems like he's got some great content on the macro side and technical side. So I'm glad that you're here, and I want to jump right into some conversation if you're ready. Talk to me a little bit about what your thoughts are on you mentioned the dollar. What are your thoughts on the currency market, and kind of what are you getting up to in markets right now? What are you focusing most on?
Well, exactly. The dollar is the big dog on the street, which is in control right now. And with the turn of events in the election, a lot of it takes U.S. dollars to buy. People don't understand the correlation between the U.S. stock market and the U.S. dollar. The U.S. stock market needs dollars. You need dollars to participate in this game, and so there's a natural demand for the U.S. dollar in order to, it's like going to Chuck E. Cheese and having the tokens, right? You got to have the token. You can't put a quarter in that machine. You have to have that mouse of that token. And so the greatest arcade of them all is the United States stock market, the equity market, the bond market. And so the dollar is in high demand, which means it's going to put a hurting on whether it's the euro or the pound. The euro is the anti-dollar. So just basically let's turn them upside down, and you got a great insight to get long dollar CAD, dollar Swiss, just like you're doing right now. Love that trade. Love that dollar Swiss trade. I took dollar CAD long, pound dollar short. It's been an incredible ride, and it's a binary. It's a very binary market. I think this is the best time to trade. You're part of people are part of a great community where they can see and get this powerful direction of riding the dollar going into 2025. It's just it's a dollar story. But I also want to look at that weekly chart of a lot of those currencies. You're approaching some significant support, and whether those areas are going to hold. Yeah, exactly. You're looking at maybe a pound dollar approaching some levels. I'm looking at Kiwi dollar. Kiwi and Aussie are like the time travelers. Are already there. right? Euro and pound and have not gotten there yet, but we're already at these significant levels. Like back in September, we got that low, the pandemic low, in 2020. So we've got these lows that we're so it's, and you see the market's kind of slowing down. The momentum is slowing going into that support area. And so traders are actually, contemplating longer term. Position traders are like, they've got their buy stops located in that area, and they're very patient. So, we could see a bounce from there. And so, and my thinking that we got non-farm payroll coming up with kind of we also have a inauguration coming up. We don't know what could happen. Hopefully nothing weird happens, but there could be something weird, the black swan event. I traded dollar Swiss when the SNB depegged, back in, and yet there's that long wick, a 3,000 pip move in about an hour.
Oh, yeah. Yep, right there.
So we can have something similar. I love your chart action. You go right to the point. That's great. You know your charts.
We both do. I can tell. It's awesome. Yeah, no, I mean, and to add what you were saying, Gregory, about, the dollar index, for listeners who heard him reference, how it's kind of the stock market in the U.S. You need dollars to participate, right? A lot of foreign investment rushing into the U.S. stock market as well, especially right now, Gregory, if you think about it, right? Like if you're somebody outside of the U.S. and you had to, buy dollars to buy the stock market, you've got a bit of a double whammy going on right now where your stocks have appreciated and relative to your home currency, right? If you're in Canada, if you're in Australia, especially, like if you took your currency, sold it, bought dollars, then bought the stock market, you've kind of got a double whammy effect going right now. So foreign investment into the stock market definitely does demand dollars. Same thing with U.S. bonds, which may be, a big part of the reason as well. A lot of foreign investors wanting to hold on tight to that U.S. dollar, which seems to be, staying strong. I guess if you could, Gregory, give me a little bit of an idea. So with this dollar, you mentioned the Australian dollar heading towards multi-year lows here. Is there a bounce coming, do you think? Or do you think more likely we're going to see some fresh lows on some of these commodity currencies?
We could possibly see fresh lows if we break that area and there's not, sometimes we think there's support there and it's just like a vacuum, a void where we could just have an explosive move continuing with, because there's nothing down there. If you look for years, you go back, there's nothing really down there. What's the catalyst? You've got the pandemic low back. Is that the 2020 low back there? Right?
Yep. 2020 low.
Right. And from a wave point, if that's a wave 3 and we're in a 4 consolidation, we could retest that and go even farther. So we could have more to drop. But you can see the market is very cautious at this area. The market, charts have a memory.
Yeah.
Unlike my wedding anniversary, which I know.
Yeah, right. No, exactly. And that's the thing is you look back there and as you just mentioned, there's a big void here in terms of if you can take out those lows on the Australian dollar, we could see, fresh lows coming into some of these commodity currencies, especially with, China's slowdown, just not really getting anything going there. That's dragging on some of these commodity currencies. So real interesting on that front. And I don't know if you keep an eye on the 10-year yield, but this has also been a real interesting story recently. What's this telling you?
It's telling me that we're, even though the Fed has been on a rate cutting cycle, we have long-term interest rates are still rising, right?
Yep. Yeah, and that's the thing is you look at this and you say, okay, if this breaks out, likely a lot of those currencies are going to see their lows get taken out, and then you're going to see potentially some real fears come into other areas. I don't know if you pay attention at all to indices or commodities. Do you mostly focus on Forex, or do you get into other markets too?
Well, I definitely have a holistic approach. All the markets are intertwined. They all have basic. I trade gold. I wrote the Gold Rush Blueprint, which looking at gold, and you can see that a pullback, higher lows, we could retest those old highs in that 2,900 or 20, yeah.
2,800 just about, yeah.
Right. So yeah, so I think that we could see continual rise in gold. Oil with the fundamental picture with drill baby drill. Last time we had Trump in office, we had oil below zero.
Yeah. Oh, that's definitely correct. And that's the question too, as you look at some of these commodities and you talk about, you mentioned gold, right? So gold has been, I gotta say, I've been mentioning this on gold recently. Gold's price action recently seems pretty choppy. It's not really making a decisive move one way or the other. But you gotta admit, for gold, this is very impressive considering how strong the dollar has been, that gold is holding its strength pretty well.
Yeah, it's amazing. Where a lot of the things that we know, a lot of the correlations that we are so used to, the inverse relationship between gold, inverse relationship between bonds, like all those correlations have like gone out the window. But the dollars usually, since commodities are priced in dollars, usually commodities are usually falling. But this is interesting with maybe the BRICS nations and maybe a gold-backed cryptocurrency, maybe some type of a Fed coin or some type of central banks are accumulating gold. So we may be on the precipice of something.
Yeah. Well, and then the other thing too is that you've had this giant rise in the 10-year, and yet stocks are still holding in there decently, right? You look at indices. Here's the S&P 500. We're sitting at 5,900. Targets all over the place. When you look at CNBC, Wall Street, everybody seems to be targeting the mid to upper 6,000s for SPX. I don't know if you do targets or anything like that, but do you think that for the S&P 500 in 2025, it's a kind of party rolls on kind of thing, or are we going to see more struggle with this rising 10-year and possible, less rate cuts from the Fed this year? Does that put pressure on this story for stocks at all, or do you think it can kind of party on?
Was an old saying when I used to work for a firm on Wall Street, and he's like, "Don't fight the Fed," right? And the Fed is in a loosening cycle. They're cutting rates, and that's putting fresh meat, for the animal spirits. And so I'm looking at like 8,500 in the S&P. I'm looking for we're just going to have another banner year because you just can't fight. They are when they are in a rate cutting cycle. Remember, rate cutting cycle, going back in the 1996, 95. We got that bull run. We always have this bull run when we have a loosening of interest rates. The bull rally of '82 was just started, on the back of the reducing interest rates after the Carter administration. God rest his soul, but
yeah, right.
I was a kid through those after that.
Honoring him tomorrow, and I mean that's a great point. I actually was looking at the S&P 500 yearly returns, and you notice exactly what you're saying. In like the 90s, there's this stretch where multiple years, not all in a row, but several coincided near each other with 25% plus up years. And that was the effect of kind of a true soft landing. So it sounds like you're kind of in the soft landing camp as well. I am as well. I think that, we'll see if it happens, more rate cuts this year or not. But as long as you mentioned don't fight the Fed, as long as the direction of the Fed still seems pointed down for rates rather than up, I think that that's a positive for the stock market. That being said, I guess if you want to get technical with it, is there, and I'm just testing the waters to see where you like to go, where you don't like to go, sectors wise, or specific parts of the stock market or indexes. Do you like the Dow? Do you like the Nas? Do you like S&P? Do you like Russell? Do you portion that out any further from that, or do you stay just kind of overall SPX kind of idea?
Oh, well, I'm a scalper, so I do macro, but I really hold a trade longer than 10 minutes.
Okay, wow. So you're really down there in the scalping. That's awesome.
Right. In tick charts, 50 tick, 100 tick, and we just get in and out, and I teach my students how to do that, and it's like flat and happy. I've kind of like PTSD from, the crash of 2000, and
Yep.
2008 and a number of things. So, but I do have some students that take my strategy and they go, hey, I'm holding it for, I've got one student who's short, he's short Kiwi from up in the 60s. It's like down to like we're 59 or 58 or something on the Kiwi. It's like, wow, you have so the pattern is all fractal. We know that, but I am really, really short term. But that topping, this kind of sideways consolidation, kind of like head and shoulders, kind of rounding top. It looks like maybe a retest, so that would be 5,700 maybe. Because we got that gap move around November where we had those strong green candles, and usually you have that type of price action. You usually see what we'll call pattern symmetry, where we see a move to the downside to fill that kind of gapping action. So yeah, so
something like that.
Exactly, perfect. And you got some lots of support right there.
Yeah.
And so I think that'll be a good place to reload. Whether you're using ETFs or something like that. Like my wife's got keep her kind of simple. I got to just get a triple bully ETF and then just ride it up. And cash out 3 to 1 and just call it a day, right? You don't have to stock pick, but yeah, that's a topping formation. It looks like it's not what I don't look at it as a correction or a reversal, but I think it would be healthy for the market to actually do that. And in fact, yeah, exactly that there's a pullback that you have back there. Was it the August? Was it before go up higher? Yeah, right there. Go
right
up
here.
Up
September.
Up right there. That support right there.
Yeah.
And they're high. Price returns back to the scene of the crime. We see price breaking out. We can see it come back and retest those July highs, right? And then give us. It'll be a healthy correction, right? It's not something to panic. And retail people probably panic and say, the world is coming to an end. But what we did say, we want to buy when there's blood in the streets, right?
Yep. Well, and that's the thing is we take a look at this this past year, and you can really see that there was not much of a major correction at all. In fact, this period was our brief period where we traded in the pre-market to have a 10% correction overall, but we never even in the open market saw a 10% down on the SPY, for example, and for 2024. That's very rare. Usually you do get a peak to trough move of 10% or greater within every year and a half or so. So I wouldn't disagree that I think that we may be due for some pullbacks, and you can still maintain a bullish idea overall. Right now we've seen a peak to trough only about 4.6, let's call it. So if we were to kind of complete that 10% pullback, that gets us down, over here. But even a 6%, like you're saying, around this area seems very healthy, kind of just to overall reset some of these gains, reset the move. Especially we've had this post-election stuff, and I wanted to ask you briefly about that too. Post-election, we saw a big bump, and then we've now consolidated and digested some of those gains. What are your thoughts on the next few weeks as we potentially see some things change with Trump coming back into office? Do you think that has any forward-looking effect on the market? Do you think the market's going to sell off into that event, and then perhaps just scared around what could change on day one? What are your thoughts on just the return of Trump in the stock market?
Well, I think it's Trump coming back is a positive thing for the stock market, whether you like him or disagree with him or not. It's all about making money, right? And so there might be some initial fear of what what may happen with cuts of jobs and workers and things like that. I have some AI models showing that really the employment numbers have been juiced up and kind of toyed around with for a while. So I think a lot of those numbers are going to be revealed that they're a lot worse than what we thought. Even Jerome Powell said himself that the job numbers were funny,
Yeah.
And they're probably going to blame those job numbers on the new administration. See, look, the job, they're not hiring, and so there's probably going to be some type of of the weakness. But they see you're going to go into January 20th. Guess what? The weakest seasonality. I've studied a lot of seasonalities with and you look at February is usually horrible. It's horrible. Usually extremely bad. It's the worst month for the stock market. So you look January 20th, you got what, another 6 or 7 trading days after that, right? So, and I'm sure you're going to blame, well, see, we made Trump president. Look how bad the stock market is. Well, February is a seasonality. It's bad for everybody, right?
Sure. I've seen a little bit of that theory go around as well, as like, the new president could maybe the setup, right? The economy is so strong right now, or perceived to be. We'll see if it turns into kind of a blame game shortly. I imagine that it will. It almost always does, right? There's always blame on the previous or the current administration, so on and so forth. But as you mentioned, it's all about making money in the markets. And at the end of the day, if we're talking about, Trump's less regulation and keeping taxes low principles, stock market initially did show an interest in that, right? Thrilled by that idea. We've consolidated here a little bit. I think that my opinion on it would be a lot of it is just like, okay, as we count down the days, what about those tariffs? What's happening on day one? Is the market gonna, and we also saw that recent bump up just briefly off of, the tariffs potentially being less restrictive than previously thought, or more lenient than. There was a brief window where the market jumped on that idea. So we can kind of see what the market's thinking there, right? You have this people in the market clearly would like to see the tariffs not be as bad as, or not as scary to global trade as previously thought. And I think that actually might happen. We might actually see like, okay, tariffs are going to come into play, but the actual news may be less scary than what the rumor was, right? And we see that oftentimes. Same thing with like elections in general. There's like this fear ahead of the election, and once the election passes us, fear is taken out of the story. We saw that in the previous 3 elections. I've noticed that gold, following the election of Trump this time, Biden the last time, and Trump the previous time before that, all 3 of those scenarios, you had a sell the news event in the price of gold. So just something to think about. There's this little bit of, sell the fact, if you will.
You'll buy the rumor, sell the news.
Yeah, exactly. So
Great
just something to think about. But Gregory, what else is kind of top of mind for you? Is there any other markets that you're most focused on going into 2025? What are your biggest, convictions for this year?
Well, my biggest conviction is continued selling of the euro and a long dollar CAD. With what's going on with Trudeau, markets don't like instability. They don't like political instability, right? So when you have Justin Trudeau resigning, and also you have Macron in Europe, and the things going on in the UK. There's a lot of political instability. So I think political instability, markets don't like that. And the dollar is a bastion, a fortress. It's the cleanest shirt. People complain about the US and this and that, but we are the cleanest shirt in the dirty clothes basket. And so it's still a dollar strength. And if we have lower oil prices, lower consumption from China, dollar CAD is poised to continue to make new highs. That trend is beautiful. That's a beautiful trend. We have like a high and tight bull flag. Looking for the breakout of the highs. It's a beautiful chart.
Yeah, it definitely is. I mean, you've got just a monstrous uptrend for the dollar CAD. And as you mentioned, the Trudeau resignation adds to the uncertainty of the Canadian dollar and the Canadian economy. Although, maybe a little bit of the reaction was like, oh, hey, maybe somebody new will be able to kind of sort things out, right the ship, if you will. But it's yet to be seen. And right now, as you mentioned, the easiest trade on the block, quote unquote, is sometimes the best one, right? Just staying bullish, the economy that seems to be cutting rates the least and seeing the strongest economic data until that changes, right? That's kind of the quote unquote easy trade. Now, for audience members, that does not mean you go out there and you're like, oh, this is an easy buy the dollar, it never goes down move, because there are clearly times where, the dollar gets very weak. But the trade has been recently, that's the path of least resistance. as long as you're managing risk appropriately and finding good setups and cutting off trades that don't work, the idea is that the trade can continue on. I mean, that dollar trade has been, take your pick. I mean, if you've been short euro, short pound, short Kiwi, long dollar CAD, long dollar Swiss, like I mentioned, you've got dollar CAD going. I mean, these are trends that are rare, but can be very profitable with really good risk to reward on these kinds of. So a question for you, Dr. Gregory, too, on these currency pairs like dollar CAD, how do you manage a stop loss? Because you mentioned you're mostly scalping. Are you scalping Forex as well, or do you hold swing trades for Forex?
No, I scalp Forex as well.
Gotcha.
And I drop down to maybe like even the 15-second chart.
Oh wow! So you're really scalping. And what are you looking for when you're down on the 1 minute on the low time frames like that? What are you looking for in terms of setups?
Well, I look for movements against the market tide. So I'm looking at sell-offs, oversold. I always love oversold in uptrend. The trend is your friend. It's like the best neighborhood, like 90210 Beverly Hills, but you want to find the worst house in the best neighborhood. So the lower time frames where your worst neighborhood is located, right? And when you see something like big sell-offs in the 1 minute, in the 15-second chart, then it's just like, hey, I see a car in the driveway or with grass growing up and the fence falling down. Right, that's value, right? You want to buy value. You mow the lawn.
Easy fixes.
Exactly. You're not trying to be a hero. You're not trying to jump on the grenade. But I want to find the oversold, I'll use my oscillators. Find the super oversold on a 1 minute, 5 minute. I'll just take a bounce like that bounce that just happened. I would, look at that and then grab 3 or 4 pips. You grab 3 or 4 pips, 10 standard lots, you're grabbing like $300 or $400 a day. It's like, a couple of minutes, do that a couple of times, you're done. And that's what we teach at ETU, just to get in, get out, pip and run. Why buy and hold when you can pip and run? That's our kind of our, that's our.
Sure.
Yeah, that's what we do. So.
Yeah, I love it. That's awesome. Well, very, very cool. And again, thanks for taking the time. It was awesome to have you on the stream, and I hope that we could do this again. It was a great session, and I can tell you really know your macro, which is always great to have people. We have a lot of people on the stream that are big fans of learning and focusing more on the macro, getting more interested in that side. So how can people, Gregory, how can they find you if they would like to find out more information? What's the best way to connect with you or to find out more about your services and your content?
Oh, you can go to elitetradersuniversity.com.
Okay.
And that's our website. And also have a YouTube channel, which I post content, which you found, Gregory McLeod Trader. And so we have we post content weekly and tips and things like that. So that's the best way, for the scalpers. So
awesome. Well, we've got your channel linked here in the chat. And thank you very much, Gregory, for coming on. It was awesome to just chat some markets with you and feel out what you're thinking about with this dollar uptrend, with the stocks and indices, everything going on right now. So thanks very much for coming on, and maybe we'll have you back soon. It was great to talk to you.
It was awesome. Thank you for the honor and the pleasure to be here. Nice to meet all you guys, and I wish you happy trading.
Thank you. You too, man. Awesome. Well, we'll continue on here, guys. We have a busy schedule counting down to meeting minutes today. We've got just a little bit longer here. What are we looking at? An hour and a half before meeting minutes drop, which could be interesting, could be market moving. Show's not going anywhere. Up next, we've got Forex James taking over the stream here to talk some more markets. Talking lots of currencies today, and we know James will continue that story for us here. Before I step out, let me just remind you guys, if you're interested in getting access to the Edgefinder or our VIP group, you can send us a direct message on our website. Head over to a1trading.com. We also have on our site, we have a bunch of free stuff as well. So if you're looking for free courses, if you're looking for better brokerages, prop firms, indicators, you can get our signals access, the stock box, Edgefinder. All of it can be accessed there. And if you'd like to chat with us, click this link in the bottom right to speak directly to our support team. We'll be right back after this quick break with Forex James.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello guys, how's everyone doing? I'll just move this there. Cool. Good stuff. So we have got FOMC coming in what is it, an hour and a half? Yeah, about an hour and a half. So how is everyone doing? We're just about to finish, well, halfway through the first week of the year. So far, price action and the markets have been very, very simple, very clean, very easy to digest, really. So if we look here on euro dollar, I mean, you know, I've been speaking about euro dollar for quite a few months now. All it's been doing is trickling to the downside. I wouldn't really suggest that this has any stopping point right now. We've got, again, FOMC in about an hour and a half. I would expect the Fed to be relatively hawkish. So, sorry guys, just reading the chat here. Lee, good to see you, man. Hi Rule. Thank you. Going no beard look in 25? No. So the no beard look is because my barber was closed over Christmas and New Year, and I started to look a little bit homeless. Hence the hat and the no beard. So I just shaved my beard off. I'll restart and let my barber sort it next time I see him. But as I was saying, I would expect the Fed to be pretty hawkish and suggest, you know, we're not going to have a rate cut. So positive for the dollar, still looking towards 110. After 110, looking towards 112. Although they look like they're quite far away, they're not really in the grand scheme of things. I've got this annotated here because all over Twitter for the past when was this? 2 days, I would say, we've had people on retail Twitter saying that the dollar's topped. You know, the dollar's going to start reversing now, which simply, in my opinion, isn't the case. You know, if you can name me one thing that is going to change the course of the dollar in the near term, be my guest, but I can't think of anything unless the Fed comes out and says that they're actually, you know, super dovish, which again, I just don't see happening. So if we're accounting for the positive sentiment around the dollar, we also then need to pay attention to what the technicals are saying. Where could price possibly go? And if we look at the quarterly chart here, I think I discussed this earlier today or yesterday, I'm not sure. But the quarterly chart looks very, very good. We formed this channel back in sort of 2011, 2009, depends where you want to draw it from. But since then, we've been respecting and following it very, very nicely. So following just general rules of trends and patterns, you would expect price to continue up into sort of the 112, and this would then form a double top for a potential reversal from there, or even a slightly higher move to the new top of this channel. So yeah, either way, I think in the near term, we're pretty set on the dollar continuing to the upside, really. So no change, euro dollar down to parity. We're actually getting quite close now. It is coming. It's just trickling. Today's been quite aggressive to the downside. Actually, this morning was quite bullish, but yeah, corrected to the downside quite quickly. So I'm currently in euro pound shorts. I've been in this position since this morning. I did take one position earlier before this one on euro dollar, came out of 0.5% gain, so it's not too bad. Currently up 7.41% for the month, aiming for 10% this month. If I could do 3 10% months back to back, I'd be very, very happy with that. So if this trade works out, then perfect. But yeah, basically just a very simple mean reversion. So if you look on the daily, we're at the top of the Bollinger Band. The RSI is a little bit extended, but it's not overbought yet. The H4 is overbought, broken out of the Bollinger Band. H1, same thing, maxed out the Bollinger Band really, in the RSI is oversold. Overbought. So yeah, just very simply looking for a mean reversion here. Obviously playing off the euro bearishness as well. Phantom, it should hit parity by April or May. Yeah, I agree. I think sort of mid to the end of Q1, maybe the start of Q2 will be pretty much there. You're in Euro, USD, and Euro pound shorts, Euro dollar CAD long. Beautiful. Yeah. I think dollar CAD, dollar Swiss are great calls. I think Nick's in dollar Swiss. I actually caught a trade off him. He came into my stream one of the mornings. I think it might have been yesterday. Said he was in, so I took a very small trade. It came out with about 0.5% on that one. But yeah, dollar Swiss to me is just a little bit concerning, really. So we've got the 200 weekly moving average, which, you know, these are all technicals. It doesn't mean that much, but they're still, they're still relevant levels. They're still things that can be used, and still things that can influence buying and selling in the market, especially on high time frames like the weekly, along with this really strong level of resistance that we've seen through here that's not been broken above since it was formed in 2023. So that's what I'm paying attention to. If we can see a break, then I might look for a long position. If not, then fine, I'm not in the trade anyway. However, the fundamentals more than support this trade to continue to the upside. Similar thing here with dollar CAD. I think we're very, very set here to continue heading to the upside. In terms of take profit levels, I would suggest where I've got my marker here is basically all you can find in terms of previous structure to have a take profit, and that's because we've obviously got these two previous highs here from 2020 and 2016. Beyond that, it would be a case of just having to trail stops and continue to follow the market as it continues to rally to the upside, because, as I said, there's not much in terms of structure for you to go from beyond that level. EJ starting to have a reversal. Yeah, on a technical basis, but the fundamentals, in my opinion, are still more favoring to the short side. And again, it's more of a mean reversion trade. So when price is very extended and my overall bias is to the downside, I'm more than happy to take that trade. Any idea on oil? Oil's tricky because I would love to go short here. I think this looks really strong. We've rejected this daily 200 perfectly, similar thing to what we had previously, and before that as well. So you can see the trend is quite convincing here. The thing is, it seems more like we're actually quite bullish on oil. Let me just refresh this to make sure I've got the newest data. Yeah, so oil is very bullish, actually. You know, it's got a score of 13. It's pretty high. I think it's actually the highest it can go. I'm not sure. Maybe not. But either way, yeah, wouldn't really want to go short based on what's driving the market and what the current fundamental factors are. So if you're wanting to go long, you would really want to wait. Let's see, how could you do this? So if we're expecting a pullback from here on the 200, you'd want to go H4. Let's see, what can we pull off here? I guess this would be the easiest or the most simple entry I can see at the moment here. So we'd be looking at these previous highs around here, and along with this 200 H4 moving average to come and help sweep price off this level, and help it influence some buying activity. So yeah, very, very simple on oil, but overall, I personally don't have much of an idea, to be honest. I think long term, I'm actually more bearish on oil, as we start seeing renewable energies become more of a part of the discussion. But obviously that's sort of going into 2030, 2040, 2050. That's definitely not a short-term trade idea. I'm debating whether to close the long. Do you mean the long on dollar CAD? I'm a bit confused, Phantom. Gold. Yeah, there's nothing here on gold. It's the same thing. I've been talking about gold for quite a long time now, and there's nothing here. There's no macro catalyst. There's no reason for me to be in this market. There's just nothing there. If we look at what was driving gold previously during this whole move to the upside, when we saw new all-time high after new all-time high, it was basically the fact that we had essentially global rate cuts. So if you look at all the major central banks, they were all cutting rates. It wasn't really the hiking cycle. We also saw uncertainty with the US political state. Obviously, we had elections last year in November. So throughout the first 3 quarters of the year, people were a bit uncertain what was going to happen. We also saw Russia, Ukraine. We had the Middle East. There's also some flare up with China and Taiwan, although that didn't lead to much. It was still one of those things that contributed to a bit of uncertainty. And mostly those factors aren't quite as relevant these days. So obviously Russia, Ukraine has been going on for a long time. It's priced in. There's no escalations. Same thing with the Middle East. We already, we know Trump's won, so the uncertainty is there. It's gone. The Fed cutting is slowing, if not stopped already. Obviously we'll see later this month, but yeah, gold just doesn't have anything that makes me want to buy or sell, really. And the technicals are still stuck within this range. There's no defined trend. GBP's weak today. What do you think? Is it the beginning of a bigger swing? I'm not sure, to be honest. I'm not sure what drove the pound to lose the value it did. Someone told me it was the Bank of England said something, but I couldn't find any evidence of that. I didn't find any news regarding the Bank of England at all. So it may have just been a correction. If we look here on the daily timeframes, it seems like nothing really has changed. We've been stuck within the daily range for a long time now. Actually, when was this? Since September. So yeah, significant amount of time just ranging sideways, which is why I'm quite happy again to go in for this dollar cost average to the short side, looking for this range to pull back and continue ranging. So yeah, I wouldn't suggest there's any huge thing to pay attention to with the pound now. It's more just the continued drivers. Dollar Swiss. Yeah, okay. Yeah, the dollar crosses are very simple. Essentially just buy dollar, sell everything else. Oh, GBP lost value because Trump said he won't deal with the current administration as they're all idiots. Oh, they are idiots. Interesting. Okay, I didn't know that. See? You guys come here, you might learn something. I come on, I might learn something. What a good relationship we've got. Yeah, well, actually, that might be a little bit more serious than I thought. So I'll have to reconsider, do a bit of research into that after the stream. But either way, it is what it is. It's still extended, so I would expect some sort of pullback in the near term. Pound dollar reversal. What do you mean? I wouldn't. Yeah, no, I wouldn't be looking for any change of trend or anything within the dollar crosses. Pound dollar, euro dollar, New Zealand dollar, Australian dollar, all going to the downside. It's just a waterfall. You don't be the guy trying to buy each bottom. You will lose 9 times out of 10 until you eventually catch the bottom, and then you close out for 1% profit with fear. NASDAQ? Yeah, we can do NASDAQ. Interesting. We discussed NASDAQ on my last stream here, not the one today. I think it was yesterday or the day before. I was looking at this trend line to the downside. We respected here. And it looks, obviously, well, now in hindsight, it was spot on. But at the time, I was saying it's a little bit of a dodgy place to start looking to buy. So the next levels that I can see that would be relevant for going along would be this one here at 20,800, and then the next one at sort of 20,000 flat. So from there, that's basically the only levels that I would be interested in going long from. I think this will be quite a solid one, but we'll have to see. I would suggest that the rate pause that seems to be sort of the narrative at the moment, so the rate hold that we're going to get by the Fed is basically priced in. So I wouldn't say that's going to be a huge factor. Obviously, on the day of the statement, it might be, but we'll see. Dr. Gregory, thank you, buddy. I appreciate that. Yours was really good as well. It was nice to see. We get lots of cool guests on this show. It's nice to see. Also, our companies have very, very similar names. So that's, great minds think alike. Paramdeep. Unfortunately, I don't know for sure. I've heard two things now. So Attila in the chat said it was because Trump said he doesn't want to deal with the administration in the UK because they're idiots, which, to be honest, makes a lot of sense. I wouldn't want to deal with them either. But I've also heard there was Bank of England said something, but I don't know what. So again, I'm going to have to go off stream later, and I'm going to have to do a bit of a deep dive because I can't see any news releases. I've got all these news terminals. I've got Bloomberg. I've got Financial Juice. There's nothing. I can't find any information. And it could just be some small news. I don't know. But anyway, can you say the swing for pound dollar? If you're wanting to go in for a swing on pound dollar, I would. Okay, so I see two things here, and these are both options for what type of trade you are. I'm going to obviously you said swing, so we'll go for swing. But if you're conservative and you want to be very, very safe, I would wait for this weekly level here. Let me zoom in. So I'd wait to see what happens with price here. Either we break down and continue to the downside, or we show some sort of rejection and then maybe break to the downside. The reason I'm saying break to the downside is because I'm still very bearish on pound dollar. I'm not looking for any long-term buy situations. However, again, as I said earlier, weekly levels, basically anything can induce short-term buying, as we see whether it be a reversion or larger institutions buying price up to then sell at higher price, whatever it may be. Anyway, so you could do that and wait to see how price reacts at the level that we're at now, or wait for a bit of a shorter term and wait for a pullback here, stop loss, pretty standard, above previous highs, take profit, wherever you want to put it. And I would be looking basically for something like this, maybe a bit higher, something like that. Dollar is strong. Basically, every major pair should fall. Yeah, pretty much. Vroop, your question is as good as mine, or your guess is as good as mine. Because the human nature and the way we're all taught to trade or told to trade at the start is to buy low, sell high. That's the whole aim of trading. But it doesn't really work like that when you get into the nitty gritty of trading and things. But it feels much better. Let's say people were shorting all of this move. Let's say they shorted here. They'll hypothetically get stopped out at some point. Short here, get stopped out. And then they'll catch something like this where they might only get a little bit of the move. But then they can say, I called the top. I got the top of pound dollar. I'm the one that did it. And, you don't really account for all the losses you had while trying to do it. rather than waiting for the move to happen and then trying to capitalize on the momentum and on the trend that's already established. It's just the way we work. It's no one's fault, really. It's just, humans are a bit stupid inherently. Man, this trade's so frustrating. I've been sat in it all day, really. Just no movement here whatsoever. So 1:30, although this is I think it's American time, so it's slightly different. So it's probably around 9 o'clock for me. It's just one of those trades. Although Euro Pound's not really known for its volatility, but hey ho. Hey James, we in Africa are here from Cape Town, South Africa. United SA, great stuff. Glad to hear it. It's really weird. I was saying on my stream this morning that I'm sat in a room, no one here, talking to a microphone and my monitors, but yet there's all these people around the world just watching me talk to a screen. It's crazy. Crazy world we live in. What's the word on rates in minutes? The rate decision isn't today. We've got FOMC today, where hopefully we'll probably, likely, maybe get some sort of signal as to what's going to happen. Although it seems likely we're going to get a hold. I wouldn't suggest we're going to get a cut, a hike. Here you can see. So if you don't know what this is the Fed Watch tool. And it essentially tells us what market participants are expecting. So it gives us this probability. So you can see we've got a 4.8% chance of an ease, which is the bar you can see here. We've got 95.2% chance of no change. So that's a rate hold. And that's the bar you see here. Hike, we've got no percent chance. So, no one's expecting a hike. So there is no bar. So it's very simple, but it's a great tool to, get an idea of what the markets are expecting and what you should expect. Can you take a look at Euro Swiss in a sell? Of course I can. Let me just see. There's no edgefinder reading, so I can't give you much on that side. So if we look at the overall trend, very clearly, well, actually, it's not very clear, but it is to the downside if we follow the moving average, which is the way I define trends. Generally speaking, it looks quite range bound on the daily, so I wouldn't really pay too much attention there. If you're on the weekly, again, weekly's quite range bound. I wouldn't really have anything to say there. The H4 moving to the upside quite nicely. I'm just having to think if there's anything that comes to mind with this market. I don't think there is really. Let me just have a quick look here. So ongoing European political risks coupled with the Swiss safe haven status favor lower Euro Swiss. The ECB dovish cut also limit Euro sports relative to the S&P cautious stance. So we do have a central bank differential, if you will, but I wouldn't say it's really that bad or that good, depending on what you want. So if you're short or you're already in short, let's say, I'm going to assume that you're in short here. Just trying to see what I see. I don't see anything. That's the problem. Stop would have to be above this resistance. I don't think there's anywhere really that makes sense other than this. Take profit. If you're going for a longer term trade, I would suggest down here at the sort of double bottom. But yeah, other than that, I just don't really see much else. Sorry. Tough gamers. You asked me this before and I gave you the answer. I actually gave you quite a good answer as well. Rewind. Because I'm not doing that again. Let's see. The S&P. I actually took some profits on the S&P. So I invest not well, actually, yeah, I guess I do. I invest every month into the S&P as just a long-term investment. Decided to take some profits actually, which I've never done before. Mainly for a business opportunity, but I'm feeling a little bit naked now. I know it sounds a bit weird, but when you've been holding and investing into something so consistently for so long and you take money out, it just feels a bit strange. So yeah, I'm now gauging when is the best time to start reinvesting into the S&P. Your SL is above highs, Anthony. Perfect. You're pretty, I don't want to say safe because trading is not safe, but I think your stop loss is in a sensible place. If you started trading in any prop firm, assuming, how much funds would you start? I would always go, actually, if it's me personally, in my situation, I would go with probably 100K. So I would normally avoid a 200K. And the reason is because 200K accounts normally are about $1,000, give or take, depending on what firm you're with, but that's sort of the industry standard. But I don't really want to spend $1,000 on a challenge that I probably won't pass. Statistics are really against you. So what I'd want to do is go for 100K. So if I do pass, it's still worth my time. Whereas if I got a 10K account, for me personally, it's not going to do much. But that also reduces the price. I can see how the environment is in terms of the trading conditions. I can see if the firm's dodgy. I can see if I can pass the challenge, all that sort of stuff for about half the price, and 100K is still 100K. What's the move on gold and silver? There is no move on gold and silver, in my opinion. Actually, I've not checked silver, but gold, there's absolutely nothing. I don't see anything on silver for me, really. The technicals aren't as bad. I suppose we do have a slight level through here that could be considered a break and retest. We do have the 200 moving average here, also acting as dynamic resistance. So if I had to lean either way, especially looking at the dollar dominance, I would more be looking for something like this, just down to the previous lows. So nothing crazy, but again, that's all I see, really. You're in New Zealand US dollar sells. Perfect. I love it when you guys tell me you're in positions that just make complete sense. Sometimes people will say, I'm in this trade, and I got no idea what compelled them to take that trade. I'll always try and understand, but sometimes I just can't. But honestly, with most of you guys, or pretty much all of you, you normally have really good decision-making skills on what trades are high probability, which is cool. So New Zealand dollar, a bit conflicted to say this because it might give people a wrong idea, but it's what I've been doing, which is essentially just sell every single pullback that comes on the dollar crosses. I've been doing it on euro dollar, but New Zealand dollar has been moving very, very similarly, or in a very similar way. So to be honest, you can't really go wrong unless you mess up the stop loss. You're pretty set to go. You might get caught in a pullback, of course, but generally speaking, it's a pretty doomed market right now. So answer me this question. You have your personal account and are able to be profitable, but if you get funded and assume you won't pass, I don't understand that. Please explain. Yeah, of course. That's a good question, actually. So yeah, I mean, statistically, I can't pass. I mean, if you look at my average performance, you would think I could, 8% month on month average, 11% drawdown on almost a 40% gain. It makes sense that, I could sit here and say I can pass prop firms, but to be honest, nah. So what I'm going to do is something that probably most people won't do if they do prop firm trading. This is my history with prop firms. This is it. This is all I've ever done with a prop firm. I had one here that I passed phase 1 and 2. And to be honest, this was, I'm not going to say it was luck because it wasn't luck, but I basically full margined on a trade I was really, really happy with. So I passed it. Then the day after I passed, I hit daily drawdown because, to be honest, I forgot it was a thing. Then I tried again, failed phase 1, tried another one, failed phase 1 again. And the reason is because, well, it's two reasons, actually. One, because my strategy isn't tailored for prop firms. If you guys saw, Nick had the prop firm kid on earlier. I was watching his segment, and he was saying that his strategy is basically, or from what I understood, his strategy is basically tailored towards prop firms, whereas mine is not. Mine, it's very aggressive, especially for prop firm rules. So there's that, and also the fact I just can't take prop accounts seriously, to be honest, because I don't need a prop firm account to be able to pay bills or to do anything. It'd be more just nice to have some extra pocket money. So if it blows or I get into some drawdown, I don't really care. And it's a bad mentality, but it's the way I'm wired, unfortunately. And the way I trade now, prop firms don't allow DCA trades, or at least a reputable one. So, for example, I would normally go for FTMO or one of the big known ones. But yeah, DCA trading, martingale, grid trading, all that sort of stuff is banned. I'm shorting egg market because that's because there's been no eggs in my grocery store. Alan, they say that's like the best way to trade. Going off your own experience, I don't know what the saying actually is, but yeah, I think, to be honest, that is the best way to do it. It's like invest in the stocks you like. Like, if you like Nike shoes, go and buy Nike stock, for example. I'm not a stock trader, so don't quote me on that. It's just, again, something I've heard along the way. No, Brady, speaking facts, knowing what is high probability and what's not. High probability is key. Trial and error, yeah. In summary, even if profitable pool traders like James fail them, I believe rules are meant to be. Yeah, this is the thing, Alan. This is one reason I don't like props. I've got quite a small following now, but the Elite Traders, my company Instagram page, has got did have about 60,000 followers. And during our prime, when we were, really big on marketing, we had, I'd say, 4 or 5 prop firms every week, new ones I've never heard of. They'd come, they'd message. I can give you an unlimited account if you can market for us, if you can, refer clients, all this sort of stuff. I never took a single one of them, but I can't agree with the rules that they do, just because if I am a new trader, let's say, I'm someone that's got $100 in my account, I'm new, and I see this guy saying, I've just made 10K with this prop firm. I'm like, wow. But yeah, the rules are just not really built for long-term success. And yeah, I'm going on a little bit of a rant here, so I apologize. But there's obviously people who make a lot of money with prop firms. I know a few of them. But I think for the general person, for the average trader, it's not really a long-term solution to a lack of capital. But again, I just want to clarify, this is my personal view. That's not a view of A1 Trading. It's not Trader Nick's view. Obviously, I know Nick does sponsorships and things. It's just the way I view things. I don't want to get Nick in trouble there. Jose, okay, so it's more each individual thing, how they approach trading. Yeah, I think if you are a prop trader, I think you really need to have a strategy that's tailored to a prop firm rules. What if today God wants you to help a needy person? Would you do that? That needy person just needs a prop account only. No, I don't do charity, sorry. And well, anyway, yeah. The amount, honestly, if I gave money to everyone that asked me, I would be bankrupt. Carmaine Foods is an egg distributor known as the Amazon of eggs. Look at Alan with the top egg research. He's the egg man. You know what's funny? One of my guys at Elite Traders today showed me that he's trading. I can't remember what it was. Let me see. What was he trading? Feeder cattle futures. I didn't know that was. I've never heard of feeder cattle futures. And he's popped up. He was like, "Yeah, I'm looking at this trade." I'm like, "What the hell is that?" I know you can trade like orange juice and coffee and all that sort of stuff, but it goes so deep on what you can actually do. And here I am just trading euro dollar like a stale piece of bread. Still stuck in a range. I was hoping to open it then, and we had actually, let's see, how many pips do I need here? A 47 pip drop would be beautiful. That would make my day quite nice. US markets are closed tomorrow, so probably won't be trading now. I'll obviously leave this trade open, but other than that, I don't think I'll be doing anything for the rest of the week, really. You can trade the weather. Yeah, it's crazy. It's crazy, crazy stuff. You know what would be good is if what was I going to say? Never mind. I forgot what my crazy thought was going to be. Revelation incoming. Yeah, a great revelation. I completely forgot after 5 seconds. So we've not actually covered much in the markets. There was a guest who was on earlier who's pet chicken. Yeah, Lee, that's the guy I was talking about, the prop firm kid. He had quite a good segment, actually. I enjoyed that bit. Again, just because I don't like prop firms, it doesn't mean I'm against the thing. Anyway, you get what I'm saying. For my Optio trade to make good money, I need Euro USD to fall 100 from here or rise 200 by the end of next week. Oh, are you in one of those things, an options trade? I've got to be honest. This is what I mean, because I'm so locked into just basic FX CFDs. I got no idea about stocks, options, futures, all that sort of stuff. I've got no room in my brain for all that sort of stuff. So you're talking French. I don't eat meat, so it's going fine. Yeah, I try to limit my meat intake, but sometimes I fail with that one, unfortunately. So let's just see. Let's get back to charts. Let me see if I can find anything useful. The dollar yen is still below danger level, but approaching quite quickly here. So 160, if anyone is thinking about trading dollar yen or is in dollar yen, just make sure you've got 160 marked up, put an alert there. Now, I'm not saying that 160 on the dot is going to be an intervention, because that would be too obvious for the MOF. They don't like to be obvious about what they're doing. They're always a bit annoying. But within sort of the 160 range, we could then start expecting some sort of interference by the Ministry of Finance, which will always be fun to get caught in. So, yeah, be careful. I might look for a short actually beyond 160. So within, let's see, so high there, 160 here. So within this level, I might go in short. Very, very low risk. Again, this will be pure gambling, just seeing if the Ministry of Finance does intervene. But if they did, we could catch something quite nice. I'll consider it, but it's definitely not, that's not a strong trade idea at all. If we get hawkish FOMC, I believe we can tap 160 by end of week. Yeah, I wouldn't say that's impossible. I have a buy limit on euro dollar waiting for lows to be swept. Okay, good luck. That's not within my range, but people can make money trading different sides of the same market. What else do we have here? Euro pound. Tricky. Selling my house to go all in. USD JPY is risky. You should look for euro yen. Yeah, maybe. But I don't like the yen. I think it's evil. It's not nice. It's not my friend. Don't want to be in it. Don't want to touch it. Even if it apologized by having an intervention, I still don't think I would want to really be involved with the yen. What caused volatility on pound? Mary, your You tell me. I said it earlier, but I've been told two different things. I've been told it was the Bank of England, and I've also been told it was because of Trump. But I've seen no evidence of either of those things. I've been looking at news terminals. Bloomberg's got nothing, so I don't know. Yen is hard to trade. Yes, the yen is pretty gross, really. It was all sunshine and rainbows not long ago, back in the glory days when we could just buy dollar yen and sit and make money from swaps and make money from the market. That was, peak trading. But then since that, it's, nothing lasts forever. And now we're stuck in this mess. So yen is kamikaze style, chop you up without warning. Yeah, exactly. Yeah, no, definitely not participants in that. Dollar seems to be struggling a little bit to reach 110, but again, that might change when we get FOMC to see. Likely the markets are just waiting now to see what happens, or to see what's said. Euro, again, no hope. Pound, wouldn't expect any hope there either. We might be seeing short-term buying interested. Oh, sorry. Stronger selling on the pound than the euro today, but I wouldn't expect that to last too long. I think overall the investor sentiment is much more against the euro than the pound, although they're pretty bearish on both of them actually. Slowly, guys, I think we moved an extra half a pip in this whole time that we've been sat here. So that's cool. Call me Money Printer James. Still in about 1.6% DD, which is cool. Cool beans, cool stuff. What was I going to do? Oh, yes, I was going to check the time. So, okay, cool. I've got about 15 more minutes, guys. If there's anything you want me to go over specifically, I can do. If not, I can keep talking. So I do best. And then Chris will be coming to take over. Actually, I'll just show you. That's easier, isn't it? So this is me. Then we've got go away. Then we've got Chris. Then it's Nick again. I think probably Nick and Chris might be on at the same time. I don't know. Sometimes that happens. Then we've got FOMC. So we've got quite an interesting rest of the day, actually. Late finishing day for me. It's one of the downsides, actually, of living in the UK is that if I lived in America, I could get the news out of the way pretty quickly. But normally in the UK, I have to wait, NFPs in the afternoon, FOMCs in the evening, so just a bit annoying. You trade gold? What's with that fall? Let me check. So the gold market has reacted from the previous US news that we had. So we had today ADP and unemployment. So unemployment was lower than forecast, lower than previous. So this is positive for the US labor market, causing dollar strength. ADP wasn't very good, but to be honest, who cares about ADP? It's pretty, ADP is just a bit gay. Actually, I shouldn't say that. I was really please ignore that. It came out of impulse. NFP is just not. ADP is just not really a relevant indicator for the markets. Taking a nap after FOMC. Yeah. The larger decline for the pound is a reversal of last year's trend when it depreciated against the dollar. Yeah, maybe. The drop in gold happens after the news. Yes, correct. The markets are going to be pretty slow now until we have FOMC. It's obviously mainly just waiting now. There's nothing else to do. Sticky inflation and better growth earlier in the year. And Bank of England was more cautious about more cautious about cutting rates than its peers. Yeah, the UK situation is interesting because the way I see it, the pound is very overvalued for the way that the country is. And it's very difficult to back that up because obviously the papers, and when I say papers, I mean the sort of data points aren't really reflecting the way that life is here. So I'm finding it very difficult to be bullish on the pound. Do you see US 30, S&P 500, NAS 100 going up during today's FOMC? No. No. So the way that rates work is actually quite simple. Well, on the surface, you know, the way you can think of it is very simple. So if we have high rates or high rates or rate holds, this means it's more expensive for companies to borrow money, essentially. So let's say let's say you are a business and you want to take a loan to buy some land somewhere, to buy, you know, to expand your company, build a new office or whatever it may be that you want to do. It's going to cost you a lot more when the rates are getting held or going higher. Whereas if rates are getting cut, it's a lot cheaper to then go and expand your business, to grow businesses. And, you know, basically that's basically how it is. So when we have, let me go back to, let's just say the S&P here. So when we have a rate hold, likely we're going to see lower prices on the S&P. If we have a rate hike, again, likely going to see lower prices. If we have a rate cut, generally leads to higher prices. This is reflected really well on the RTY, which is the Russell, which is basically smaller cap companies. But yeah, that's the way you can think of it. Again, you know, you don't need to really overthink it. That's basically as simple as it goes. Obviously, when businesses do better, when they can expand for cheaper, it benefits the stocks, and obviously vice versa. Cool. Okay. Yeah, flat markets at the moment. Oil is pulling back quite nicely actually here. Yeah, the daily's not looking great. I might take a long position on oil actually. Not now, but if we can see a pullback to the sort of previous highs, to me this would be a very solid break and a retest to continue higher. Obviously, you know, as I said earlier, the edgefinder has a very bullish reading on oil. So to be honest, if the technicals look really, really good, the edgefinder is also in favor of it, then I'm quite happy to take a go. You know, worst case scenario, I'll lose 1%, 2% maybe, but you know, it is what it is. You got to take a risk to make money. Yeah, no problem at all. That's what I'm here for, here to answer questions and help you guys out and have a chat, of course. Why did the drop in gold happen 4 hours after the news? It didn't, did it? Let's see. So that was oh, it did. You're right. That's a bit strange. Did it? When was... Yeah, it did. I'm not sure, to be honest, but I would assume it was still news, probably getting digested. But yeah, I'm not sure why it happened so delayed, but you know. Gold literally dropped 2660 to 2640. Yeah, don't know. Either way, you know, it's happened. What can you do? It's the easiest way to think of things. Euro pound still boring. Nothing going on here. So I think I'm probably just going to close this and come back in the morning, see what happens overnight. Futures charts? No, I don't trade futures. Don't use the futures charts. I did go through a period of using futures, but I don't like the way they work really, or the way they look. So if we, this was my indices. So the DXY, Actually doesn't have it, but normally there's a lot of market gaps and things, and it's just not for me. Quite happy with the standard CFD charts. Dollar NOK. I've been speaking about dollar NOK for a long time now. Actually, it's probably been maybe coming up on 6 months, maybe a little bit less. But I'm still interested in going short. But the problem is that, again, it's not really in line with the fundamentals at the moment. But if we look at just the way the technicals are going, or the way the technicals have moved in the past, it makes sense to expect some type of downside movement. Now, again, that's a very, very loose way to sort of look for a trade, but technicals look really, really strong. And as soon as we can start seeing some dollar weakness, that would be good. The oil market's also quite supportive for the Norwegian krone. So we'll see if oil can continue to gain value. And if we do start seeing the dollar depreciate, maybe this trade would be quite beneficial, or would benefit quite well. If you had to choose only taking shorts for the rest of your life or longs, I would take shorts. Euro dollar would be the only thing I would take if I had to. And the reason is because the US economy is very strong. Even if it's going down in value, even if euro dollar is bullish, it might be bullish for 3 months, 4 months, 5 months, I'll still be able to make money off reversions. And overall, I would say the US economy and the US dollar is stronger than the euro in the long term. So I'm quite happy to just be a short trader. Herbert, I think you're probably the 5th person that's asked me today about the pound. And I'm going to answer it for the 5th time. I don't know. I've been told Bank of England, I've been told Trump, but again, I've not seen any evidence of either way, so who knows? MLF will intervene when they wake up. I haven't seen Norway's fundamentals, actually. I was keeping up with it, but then I got sidetracked with other markets and kind of left it on the side to collect dust. I've just been paying attention to where the price is and what's going on with the dollar. Is there anything that I should know about Norway? We appreciate you for repeating yourself. I'm going to assume that's not sarcasm. But yeah, no problem. I know people come in different times and all that sort of stuff. But I'll be honest, I'm not always the nice guy. I won't always repeat myself. Let's just see. It would actually be really nice if we could get a little bit of dovishness from the Fed, just so we can have a nice correction here or a nice pullback on these dollar pairs, and then I can start shorting again. Because at the moment, I can't do anything at these levels, which is a little bit frustrating because I'm just sat. I don't really like to just sit. Thank you, mate, for Find Your Bio beer. Yeah, no problem. I mean, that gave you a very basic explanation, but yeah, as simple as it is, I don't know. I won't ever try to sit here and reason things that I'm not 100% sure about. I remember actually I was in that situation when I was in my learning phase. I was talking to someone, and they looking back, they very clearly didn't really know very much about the macros and economies and things. And I would ask them questions, and they give me very vague answers, but enough to give me sort of an idea. But they were never really spot on. It was always a little bit, questionable. What do you actually mean? And I know it can be very frustrating when someone tries to give information that they don't really understand. Cool. Okay. Just checking some things. So again, I'm going in about 5 minutes. If there's any final questions, let me know. If not, then that's cool. We can sit here in silence for the next 5 minutes. No, I'm joking, of course. I don't want to lose viewers for Chris. Chris is coming on after me in about 5 minutes, so make sure you stick around. But yeah, overall, to wrap up my segment anyway, dollar continue up to 110, then next stop really is 112, unless we see a complete change in the economics, which I don't think we will. It doesn't seem like that's the situation. But again, we do have FOMC, so I could be completely wrong. The yen, I would expect the yen to continue to depreciate until at least we reach this level of, previous intervention level of support, whatever you want to call it here, around 62 to 61.9. From then, that's where I will start looking and expecting an intervention from the MOF. Euro and the pound, I would expect to continue heading to the downside, regardless of any short-term bullishness or any pullbacks. Norwegian bank sells a lot of NOK since our pension funds is in USD. Oil economy is stagnant, struggling with inflation. Interesting. Okay, Camel beats. I appreciate the input. Yeah, again, I kind of one of those trade ideas that I had a while ago, and it just kind of forgot about it after a while. Oh, Instacuts is here. Interesting. Cool. Anyway, wrong tab here. So yeah, I think we're pretty set, to be honest. I wouldn't suggest there's any changes, any trends coming. Euro dollar, pound dollar, all of dollar pairs continue down. Euro pound, I would expect to continue down as well in the longer term. Short term, we might continue to see some buying interest, but not going to shake me out. Yeah, okay. Let's see here. I suppose actually we do also have these relatively strong supports. We had one on pound dollar. We've also got one here on the Australian dollar. Will this hold? Probably not. It's a similar thing, even when the euro dropped, I think it was around 8%, 7% at the time. We had so many people saying, buy euro dollar, huge daily support. We've got trend line here, and they were all wiped out. Thoughts on US 30 downside? I'm not very optimistic on the stock market at the moment. When I say stock markets, I'm referring actually to the US indices. But yeah, I'm just not in a position where I would really want to be going in for longs. I only ever buy the indices. It's a rule I've set for myself, because the overall trends are bullish if you look on the daily, the weekly. So you're always going to have that edge in your favor if you only ever buy them. But you've also got to know when to not buy them. And in this situation, I don't really think I want to buy this market. Although the technicals don't look too bad, we're out of the Santa rally season. That didn't really bring much. I don't think we've even got that much seasonality on our side. I'm not 100% sure. But yeah, it's nothing here, to be honest. Camel, I appreciate that, my friend. Thank you very much. USD pairs are monthly supports. Yeah, they are. But again, the supports, technicals are all great stuff for short-term buying interest, selling interest. But when we've got very strong macros, we've got very strong drivers in the markets, they're generally ignored pretty quickly. So, okay, just making sure of something there. Cool. Okay, so Chris should be here in a minute or so. I'll wait for him to arrive and then I'll head off. But guys, as always, it's been wonderful to talk to you. You've been great. Thoughts on Bitcoin upside potential? You know what? For the whole of 2024, I was saying I don't really care about Bitcoin. I'm not a crypto trader. But in December, I bought some crypto, and now I'm watching Bitcoin, I'm watching XRP, I'm watching Ethereum like a hawk. As soon as I buy, they start heading to the downside. So typical. Hi, Nick.
Hey, James, that's how they get you. You start I wasn't a crypto trader either until I suddenly was.
Yeah.
Well,
No,
I mean, the
yeah,
thing is
exactly.
with crypto, it's just a risk asset. I added actually just shortly before joining, I added a little bit more to my Bitcoin long position. I'm bullish on Bitcoin this year. And, here's the thing. You can say like, oh, I'm bullish on Bitcoin, and that can age like milk or can age like wine, right?
Yeah.
But the beautiful thing about being a trader is we use something called a stop loss in this case for me, the way I trade Bitcoin. You
Yeah.
can actually dollar cost average on Bitcoin, but and a lot of people do this. You just have to be real careful with this because this is like super volatile in terms of percentage moves. It could be down 7. We know actually historically from Bitcoin's price action that 70% drawdowns are actually kind of the norm, which is insane, right?
Yeah, no, that's the thing. So luckily, well, I'm saying luckily, I'm not sure yet, might be unluckily, but it's just on a ledger. So I'll just deposit monthly, treat it almost like an investment on the S&P.
Yeah.
But yeah, I wouldn't really want to be in a position of DCA trading on CFDs or futures or anything like that with Bitcoin.
Yeah. No, I mean, I feel like, and if I'll let you go because I know you've been on the stream for an hour, but listen for a few minutes. Maybe I'll ask Chris about this, but him and I both kind of have our takes on allocating a little bit to Bitcoin in our portfolios. But James, gonna relieve you of your duty here. Thank you very much for coming on the show and sharing. I know you've been doing streams on your own channel, streams on our channel, so you've got the same disease as we do. We're just streaming all the time nowadays. We've turned into like more sophisticated gambling streamers, right? That's us now. Anyways, James, thank you for coming on. We dropped the link here to your website for anybody who'd like to check out Elite Traders. For more information, head over to elitetraders.io. You guys can also find James on his own YouTube channel. Just search up Forex James on YouTube. Subscribe to him there. James, thank you very much, man, for taking over the show. We really appreciate it. And
no problem. Thank you for having me. See you later. Right. Have a good day.
See you, man. Okay, guys. So we've got, let me actually switch so I can share my screen here. I mentioned just for a second that I just added a little bit to my Bitcoin long, kind of brought down my average cost just slightly on Bitcoin. And again, Bitcoin is an interesting topic. You either love it or you hate it. And there's like kind of not a lot in between. I guess you either just don't care or you love it or you hate it. It's got to be like somewhere in between. I lean towards love it. I used to not be, and I got to be careful with this because it seems like I'm just following the crowd here. I hated it when it was down. Now I'm loving it when it's up. Nick, you're just flip-flopping back and forth. Well, I'm a momentum trader, so I'm trading the momentum. I like the momentum. I like the story. Trump seems to like it. Elon Musk seems to like it. That's enough for me to play the momentum game with Bitcoin and play it carefully. I'm not leveraging up and where a lot of people, I heard actually Chris discussing this very topic earlier. Maybe I can ask him about this, but I discussed this very topic. He was discussing this idea. A lot of people make a lot of money in a bull market, but the ones that abuse a bull market, like they levered up and they trade irresponsibly, they almost inevitably give it back, right? So the question is, can you make it and not give it back? How do you do that? You stay disciplined, you manage risk, you don't act like a fool, and you admit when you're wrong. So what we're going to do here is we are going to bring in the one and only Chris Pulver to discuss this very topic with me after this very quick break. Let's just roll a quick break, and then we'll be right back, set everything up so that Chris and I can jump into some charts as we count down to meeting minutes. We'll be right back.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Okay, and we've got him back, Mr. Chris Pulver. How's it going, man?
What's up, Nick? How we doing? Little FOMC, first little sampling of the year. What's the message going to be? Rate cuts, maybe not until June. So let's see if that does anything to the market. Markets are going to hang on to higher for longer for right now. It's funny how we say higher for longer and we just cut 100 basis points.
Yeah, right. I mean, I'm wondering the same thing. Are we going to get any? I mean, January is almost a certain no cut. Now you've got the dollar flying high, and I would be shocked if they did anything in January, simply because, again, now you've got Trump moving in, right? There's all these questions about policy. Man, I've got so many things to ask you about, Chris. But here, I got to stay true to what I just discussed with our previous guest. You heard me mention it a little bit. Allocation to something like Bitcoin. And whether it be Bitcoin or the Solar Edge ETF or a Solar ETF or ARK Invest, whatever your pick is, high risk stuff, allocating a little to Bitcoin. I know last year you had some good exposure to Bitcoin, probably helped you out a lot. Actually, it did. I know you sat through the consolidation and ended up paying out well for you. What's your thoughts on that? Allocating towards Bitcoin. I know you mentioned at one point like a 10% allocation in a personal portfolio. What is your thoughts on Bitcoin allocation and or just risk on extremities like Bitcoin in an account?
I like it. So I looked at a really simple allocation for. I'm not fully into this simplicity yet, just because I do have other positions, and obviously like sessions like today, it's like I'm pretty active on just let me look at some income trades. I'm willing to take some ownership, willing to repair some stock. But if I could start from scratch and have no positions on at all, this is probably what I would consider doing. 60% in the SPY. So this is a 60-30-10, Nick, the way that this looks. This is a 60-30-10. So this would be, I'll just type this out here. So this would be 60% SPY. This would be 30% GLD, and this would be 10% IBIT. Okay. Now, I personally would almost rather consider, I kind of like 50% SPY, 25% GLD, and 25% BTC or IBIT. I kind of like that split right now. It's like, I'm not going to do this for client accounts. I have more positions and more things to generate income. So this isn't just like a full, I wish this was just a full portfolio, but that's probably what I do, because each one of these I can trade options on. If I allocate, I mean, I would want some capital to own the underlying. So I'd own the SPY for at least 100 shares. I'd own GLD for at least 100 shares. I'd own IBIT for at least 100 shares. So as far as allocation, if I had a 100K account, do the percentages that way. So 50 grand would be allocated to the SPY, 25 grand allocated to GLD, 25 grand allocated to IBIT. Now, you can control options in most of those, but right now you don't have enough capital. If it was just 50 grand for the SPY, if you have a cash account, that's not enough to control options, because it's going to be like 60 grand in cash right now when we're sitting around $600 on the SPY. But you can still play options around it, I guess. If you have a margin account, you're okay, but you are like fully invested, right? If you have all your money invested, this is a pretty simple way to do it. I like that Bitcoin allocation because I think, like you just said, I mean, Bitcoin is getting a lot of legitimacy. It's you've got like BlackRock, for example, when it put its hat in the ring. I think that's what fast tracked the ETFs. Then they all came out. Now you've got ETFs that are coming on Ethereum, possibly Solana. You've got a pro crypto president, whether it's real progress that's made, politically for Bitcoin, or if it's just straight up pandering and it's all talk and it's just typical Trump hyperbole. But at least it's being talked about. I mean, it was a day or two ago, like Michael Saylor was, with the Trump family. So, I mean, everyone that's pro Bitcoin, and I'm not a maximalist. I literally talked about this yesterday on one of my live sessions, and you had just said it. People are either like, you hate it like a Peter Schiff, or you love it like a Michael Saylor. I am in between, because I'm a trader and I look at it like I see the reason to have it, to diversify. I see what it's been doing performance wise. It's hard to argue that every year that it doesn't go to zero, it's legitimate. And now you've got BlackRock and you've got Fidelity and you've got ways that typical like Roth IRAs and IRAs and there's all sorts of ways to allocate to it now that are way easier than the digital wallets and the things that most boomers aren't going to be able to do or not wanting to do. Now it's like financial advisors, tens of thousands of financial advisors with trillions of dollars under management are going to start allocating like 1% to Bitcoin, 2% to Bitcoin, and heck, if you're in the QQQ, you have exposure to Bitcoin because MicroStrategy is in the QQQ now. So you can't get away from it. So either way, like you have exposure to it. I just don't know if it adds like more gains, but there's always a trade-off in the markets where more gains is typically going to be more risk. So I think that volatility will increase because of that allocation. I know MicroStrategy isn't, a top 10, but it's essentially trading at like 2.5 to 3 times Bitcoin volatility right now from what we've seen with these recent swings.
Yeah. Well, and I just also want to say what you've got pulled up here, Chris, for our listeners, for everybody who's watching, I would encourage more people to really consider what I call it in my side of things is target allocation. I have a Google spreadsheet, just like Chris has got there, like I have a Google spreadsheet and I call it my target allocation. And I go back to it probably monthly and I just say, hey, where am I at on the risk curve? Am I feeling more risk on? Am I feeling more risk off? Based on, I'm not necessarily feel, but I do my checklist. You guys know I got a systematic way of looking at the edgefinder. By the way, just quick edgefinder plug, check this out. We just added core PCE. So finally got some more inflation data coming. This is the year that we have got to have some more inflation data added to the edgefinder beyond CPI. We've got core PCE. We've got PPI year over year coming. So we're going to just add more and more data here. But inflation data is very, very front and center this year. So we're going to make sure we have all of that for you. Red means it missed. White means it hit expectations. Blue mean it beat forecasts or higher than expectations. So, December, we had a bit of a cool PCE market like that. We're going to go into January now. Question is going to be, how's that look? So really going to be an interesting thing to continue to watch inflation data. It has impact on pretty much all the markets that we talk about, right? If you get that 10-year doesn't chill out. I heard you talking about this, Chris, earlier. I'm fighting the good fight on TLT. I've got a long position assigned to me, 900 shares. So I did 9 contracts, which obviously shoulda, woulda, coulda sold those much lower, but I didn't. So I'm assigned the shares. I'm going to sit on these.
Where's your price at for assignment? Is it there 90.28?
Yep, I did. Okay. I sold puts at
91 or 92. Yeah, okay.
And I got a good credit, but then got assigned the credit. So I took the shares and I'm going to sit on it. And I think I mentioned this. And I want to get your thoughts on this, Chris. My positioning in 2025 is a bit of a barbell effect. I've got Bitcoin, SMH, and the Qs on one side, and I've got TLT and healthcare on the other side. That's like the barbell approach where I've got like the defensive stuff over here, and then I've got the high risk stuff. And I don't have the RSP. I don't have the guts, I guess, of the middle of the pack. I have just the kind of extremities, the high risk stuff and the high stuff there. What are your thoughts on that? How are you positioned? Are you more evenly distributed? Are you more diversified than that? What are your thoughts?
I'm probably a little bit more diversified. I have a little bit of everything. Right now, I'm simply doing a lot of scans where I'm just looking for premium, where it's like I'm looking to do, I have enough capital. I mean, part of that was, and I'm still right now, let's go cash available. So I've got 1.2. So 1.2 out of 2.6. I still have 46% of the portfolio in cash. So I still have a lot to allocate. But I would say that, I mean, if I look at the whole portfolio from top to bottom, it's like, okay, I've got some futures in here for right now. I've got Mag 7. I've got some airlines. I've got some China plays. I've got Bitcoin, Berkshire Hathaway. I kind of trade that like the S&P. I obviously have index exposure. I've got Brazil. I've got some Argentina. I've got gold and silver. Trying to think. Got some retail, got insurance. I did some PGR, Pfizer. Pfizer was a brutally long campaign trade last year. I still made some good profit on it, but I had an interesting, I had to do something with Tasty Trade where they didn't wash my position like I initially taken the trade. Like I had a long call at 25 and I sold at 26.50 against that. They didn't just close those trades out together, they told me that I needed to call in and request an exercise on the long call. And I'm like,
Oh,
why the hell would you do that? Why would I want to be assigned 1,000 shares short when I'm long at $25? Like, that doesn't make any sense to me. They're like, well,
that's
you need
weird.
it. So it was a weird thing, but we got it figured out. But it did chew into about 30 or 40 cents of my profit, which on 1,000 shares kind of pissed me off a little bit. But anyway, I established a new campaign trade on it. So I got some pharmaceuticals. I just rolled a cash secured put on Johnson & Johnson today, which was a leap. I did like a cash secured leap where I sold a put from last year's like summer into this year's summer, and it was $140 strike on Johnson & Johnson. Well, I just rolled that out again out to another year. So this is now 2026, and I rolled it down to $130 strike. So I rolled it down $10, but I still kept another $1.30 profit. So I think Johnson & Johnson's still like fair around like the $160, $170 point. Healthcare still hasn't found a bottom yet, so I'm certainly not trying to call it. I'm just trying to. That's the nice thing about having some cash secured puts is you have the flexibility to roll things. So I'm obviously I'm talking a lot. Like, I have equal weight, so I have SCHD for dividends, SCHG for growth. Those have each around 200, 300 symbols in them, so it's a little bit more diversified than the indexes. I've got equal weight QQQE and RSP. And then I've got some speculative stuff, man. Like, volatility wise, I'm trying my hand at MicroStrategy with the collar positions. I am trying to get some assignment of Tesla. I think Tesla's going to be another good stock to maybe play around with. If you can own it and protect it. Like, I wouldn't want to just have Tesla like open-ended. It's like, I want Tesla for income, Tesla downside. I think that we talked about this when Frank was on with us too. I think individual stocks could be way more volatile this year than people want them to be.
Yeah.
When it's like buy the dip every, Tesla's down 5%, buy the dip. It's like, well, we've already seen like a 20+% correction. We've already seen a 40+% correction in MicroStrategy. So just be careful what you wish for, because if you're wanting dips on things, you might have a 30, 40, 50%. And I'm not sure it's going to come right back and snap to those all-time highs. So just on trading like crazy high volatile stock. And I just think that anything I own, I'm going to be a lot happier and sleep a lot better knowing that like the downside is pretty well protected. So that's my plan at least.
Yep. Also, someone said it earlier. I'm missing the message. Chandler or James, if you see it, pop it up on the screen. But somebody said, oh, there it is. This group of people changed my life. You guys are awesome. Appreciate that. That's what we do this for. We love hanging out with the community and just talking stocks, talking Forex, talking indices. We're happy to be here. And hopefully we can continue to help you guys in 2025, just sharing some experience. I mean, Chris and I, Chris, I like to say it this way. I don't actually consider myself like an educator, to be honest. I mean, nothing wrong with being an educator, but I'm first and foremost just a trader, just doing this thing. I know you are too, like at the forefront. We're just doing this thing. And then, if you learn something, excellent. But that's not, for me, not the primary focus. Anyways, I just wanted to follow up really quick. Tesla, we talked about this probably a month ago. I survived staying in the trade because, I didn't survive. I had position.
Did it get called away?
No, that's the thing.
It didn't. Wow.
I avoided assignment.
Okay.
I guess just
it didn't get called away. Yeah.
Yeah, so I then have now sold the 131 January 31st calls and going well on that one too. I mean, Tesla is just, the volatility on this thing is absolutely insane. I mean,
yeah.
I got like $2,000 to sell this call, and it was like what was it? Like $60 away. I mean, it's just crazy how much there is to the premium on this stock. I'm playing with house money on this one because this stock is up at this point 73% for me from when I initially bought it. Crazy. And then I'm just collecting, premium selling these calls. But we'll see how long I can play that game. I'll probably get it called away eventually. Or the worst case would be I don't get called away, but I keep holding the stock and I'm just selling these calls as it falls. Yeah. We'll see what happens first. But, one or the other, I'm just going to continue to sell. Just bringing this up because you mentioned playing Tesla. For income, you're wanting to do that. I'm kind of on the same page with that. I want to just continue to capture some of this volatility, continue to sell some of this volatility while I can on that. I also do, I guess I do have some Russell stuff. I like the Russell this year, Chris. I'm slowly pivoting back in that camp. I'm going to try it again here. Last year I was a little early on this idea with the Russell. This year, I think it could actually see it. I think we could see more rate cuts than possibly everybody's thinking. The dollar's so strong. TLT, Russell, these names definitely would benefit from a bit more rate cuts, obviously. We'll see if we get them, but I like the Russell either ways. I think the environment is decent. Also, domestic companies might get a little bit more favoritism from Trump if tariffs and onshoring stuff continue. So I like the Russell story. I sold a put 215. Actually, speaking of rolling, I sold a 211 put, cash secured put. Then when it popped up, I actually rolled it up to 215. So I'm sitting on a 215 short put and just going to continue to monitor that trade, trying to avoid. I'm kind of like you, Chris. I'm now trying to I don't mind getting assigned, but I'd prefer not to.
Yeah, I mean, my plan right now is, and that's why I'm putting in my Pulver alerts. It's like, probability assignment, probability of profit. I'm putting those in there because, like, for me, it's like I'm taking a lot of these trades where it's like 80+% chance of profit. Maybe a 10 to 15% chance of assignment. I'll play those probabilities where I can take on the assignment. If I do, it should be on like the kind of the extended side of the move. So based on what market makers are forecasting, what the options market's pricing in, I would be like getting assigned essentially on like the end of what hopefully is like the extended move towards like a 2 standard deviation move type thing. My screen right here, I thought this was interesting. The S&P 500 1-year seasonal pattern since 1949. I love going back to find all these things that are like 50 years old, 70 years old, getting all this data. And it shows that the post-election year, after a party loses, typically it starts off a little rocky. So all post-election years, you can see it's like pretty flat. Maybe Q1 is not that great. And then post-election after a party loss, it's a little bit deeper. So going from, Democratic administration now to Republican administration, it starts off a little bit to see if there's any like change in policy. I'm pretty sure, I mean, this is what we knew was happening last year with, whoever was going to win, whether it's Kamala Harris or Donald Trump. We knew that fiscal policy is going to be government spending money. It's interesting how everybody knows about it now. Everybody thinks the debt ceiling and the debt spiral, and everybody sees the debt is climbing, and it's been just extremely parabolic essentially since COVID. But it's almost one of the same type of situations. Like, we were bullish a lot last year because everybody was worried about a recession. And everybody's been worried about a recession since 2022. So the whole thing on this debt cycle too, it's like if everybody thinks that the debt bomb is going to blow up, if everybody thinks, it's like if that's what the whole retail crowd is like, it's like this can get kicked down the road forever if the government and the Fed are pretty much in tandem with like how they're going to handle this stuff. I'm not saying it's sustainable or that it's safe or that it's not going to cause deeper problems, but I think the more immediate problems we have in 2025 would be if something's going to break, it's probably the bond market. I think that the yield situation with the 10-year yield is going to be like the single most important chart to watch, because if that goes higher, we are talking like legitimate stagflation in the US. I don't think we can out-earn or outgrow a higher inflation environment without having massive job losses or massive job cuts, because if you're going to see corporate profits increase, I think they have to do it with layoffs. And that's never a good scenario. That's a terrible environment. And you could have like a nasty recession just on Main Street side. But I think we're also a long ways away from just cutting a bunch of workers. But the 10-year yield, I don't know, man. I really hope that nothing breaks. But what's your confidence level of everything stays like silky smooth and nothing breaks and it's still this smooth landing, no landing, soft landing? Or does like something break and we have like a jolt in the market that is like an August 5th type thing, like a volatility event? What do you think?
Well, I think you bring up the 10-year yield, which is a really, I yesterday put out a post about how the 10-year was the chart of the day for me. But to be honest, it's like the chart of the month, maybe even the chart of the year. This thing is threatening some levels that we haven't been to in a while. 4.75, let's call it. You start getting above that, then I think people are going to start getting a little bit more worried than they already are. Dollar's really strong. You're seeing TLT fall from this. Stocks are getting challenged by this. You got Bitcoin commodities, they're challenged by this. This is, is this overbought? Is this, due for a bit of a pullback? Maybe, but the bigger question would be, are we going to enter into kind of this continued uptrend that we've seen on yields? Also, I just want to give a quick shout out. Tori Trades in the chat. What's up, Tori? Thank you for stopping by, saying hello. Here's the thing, right? If we're looking at the 10-year and you're saying is this thing going to keep going? Well, right now, momentum would favor yes, right? Momentum, look at the dollar, look at dollar crosses across the board. You've got, for example, if you're looking at DXY hitting some fresh weekly highs here recently, up at 109, euro dollar taking out lows, pound dollars getting crushed today. So if we look at what the currency market and the bond market are telling us, it's telling us that the Fed is maybe not going to be cutting rates that many times this year. And at some point, even if the overall story stays intact, Chris, I would be pretty surprised if this year we did not get some healthy kind of reintroducing some concerns to the market, maybe some 10% dips. I would be surprised if we didn't see that this year. We've had 2 exceptional years. I do think that the likely path for the S&P 500, if you're asking about risk assets, I think it's higher this year, but I don't know that we have a gangbuster, 20% up year again. Now, if you go back to the 90s, that's what happened. It was just 20%, 20%, 20%, just multiple years. The question is, does some of that other stuff creep into the picture, like the giant, U.S. national debt, and do we get a recession? We haven't had a recession in a long time. Even the 2022, that wasn't a recession. That was an inflationary event that we were dealing with. So I don't know. I mean, the question is, do we get that 10-year to cool off? I think that's going to tell you whether or not the ship stays intact or not this year.
Yeah.
If you start getting up above 5% on the 10-year, I do think the markets would have a pretty good sized correction, pretty good pullback as we try and reevaluate just how much is inflation back. Is it back for good, or is it just transitory? That's the real question.
I think I'm just going to put this on my chart. I think if we get above 5% and there's no signs of it slowing, I think something's going to break. I think we're going to have the best example I can pull from right now would be what happened to the UK in September 2022. I can go UK. I think it's, is it UK 10-year? Yeah, the UK 10-year yield. So this was, and we're already at fresh lows, by the way. So UK bonds are down lower, but this was what happened with that. Basically, we're in 2022, central banks are raising rates, right? But the Bank of England completely backpedaled on that while their bond market was just in free fall. So that caused even more of a disruption. This was the announcement of hey, we might have to step in, and the market just dumped it. But you can see that it snapped back really aggressively. Doesn't mean it was sustainable, but at least for the near term, the announcement itself was a nasty 13+% drop, capitulation. And then the market, came back up and actually found that level. So I could see, and just pulling from reference here, I could see that the U.S. Market, the U.S. bond market would be something similar, where it's maybe this was the low that we saw in, Nick, what's the low from 2023, October 2023 low on TLT?
Let me pull it up. I'm curious.
I got it right
TLT,
here. It's right here.
That sounds
Should
right.
be October. Yeah, October 2023 was the low.
Yep, October. Yeah.
Okay, so that's going to be my reference point. Okay, so just hear me out on the 10-year for the UK. I'm just going to see if we have something that breaks UK 10-year. There we go. So I would say that perhaps we are in an environment like this. This would be the October 2023 low in the US market, and this is where we're at right now. So I could see something like this happening, where it's if the US 10-year yield continues to go higher, it looks like there's no sign of stopping it at 5%, then we could end up breaking something in the bond market that would wreak havoc in the bond market, wreak havoc in the equities market. I think we would snap out of it, but that's where you're going to be very thankful to have some cash at the ready, ready to be opportunistic and deploy positions that are looking very favorable, because it's at some point, we'll see that snap, but I just think we could take out that low and have no good signs of coming back if something breaks. So that's probably my biggest concern of this year, is that the market's going to break in some way. It could be bonds that break the equities market. It could be stagflation. It could be the 10-year yields in the bond market. But something tells me bonds could be the problem. And if that's not the case, okay, then it's not the case. But I don't know if we just have smooth sailing anything in 2025. It doesn't feel like it should be a smooth sailing year. It really should.
Sure.
So I'm just prepared for it. That's all.
Yep. I think having a little bit of a spread out approach is a good idea. Also, Chris, we just had meeting minutes drop.
Yep.
I'm going to be checking here for news. Just wanted to
All
clarify.
right,
There's some people who are wondering if we're going to pull up a stream for this. We're not going to be doing that. That is a press conference. There is no Jerome Powell meeting presentation or anything like that. We are simply getting a document reported, which is basically scribe notes from recent Fed meeting, where you will get some highlight information about what the Fed discussed in their private meeting. So there's no presentation, there's no speech, there's no Jerome Powell speaking to, etc. So meeting minutes.
Yep.
Yes.
I've got Financial Juice up here, so just looking at some headlines. We also had a Fed speaker today. Fed Waller was speaking. West Pricing had FOMC minutes. Let's see. Fed minutes. A number of participants indicated that they had incorporated placeholder assumptions regarding potential trade and immigration policy changes in their projection. I just saw here Fed's Waller was saying, I don't expect tariffs to have a significant impact on inflation. Ethereum price looking at declines. This is just crypto news. Expected inflation to keep moving towards 2%. I mean, I guess if you say it enough, it's going to come true, right? You got to fake it till you make it. So they'll just say like 2%, 2%, 2%, 2%, and never admit that it's going the wrong way. Suggested that process could take longer than previously anticipated. Well, that's pretty much what Powell said in December. Let's see. Comes out as expected to be appropriate to continue to move gradually toward a more neutral policy stance. Well, I don't know if that's cutting more or less, but market's anticipating 1 to 2 cuts this year. I also read something. Have you seen this, Nick? The kind of the bond vigilante side is looking at like a 40% chance of some point this year. Now that's not higher probability, but a 40% chance is certainly less than zero or more than zero, but a 40% chance that the Fed might hike this year.
Okay, 40% chance they might hike. That's more aggressive than what I've seen around. But I mean, hey, if inflation, Chris, if it does not start playing game, I mean, if we don't start to see inflation chill out and head back towards that 2% target, at some point the Fed is going to have to say, look, we might not be restrictive enough. I mean, it's weird to say that because you feel like interest rates are relatively high and that they should be doing what they're supposed to do. But at some point, the Fed kind of has to say, look, inflation's not going down. And when pressed for an answer, Powell does continue to say, like, the target is still 2%. We're not good with 2.5. We're not good with 3. And so what that means is, we got to see inflation start moving in the right direction. Otherwise, they're going to have to either just keep rates for a while where they're at if it doesn't go anywhere, which actually would be a decently okay scenario, in my opinion, because then you got good growth and inflation's kind of just staying a little sticky. That's fine. But inflation accelerating higher, no longer fine. Because now you're talking about, okay, now the Fed has to reevaluate where their restrictive level is, which could mean rate hikes. So rate hikes, that word would scare the heck out of the market, I think. And it actually coincides, I think, with that 5% level on the 10-year. That would be my best guess. You get a 5% breakout on the US 10-year, rate hikes are back in the conversation.
Agree. Yeah, I agree. I'm glad on Edgefinder we've got the PCE. We have been trending the wrong direction since basically summer of 2024. We're going up. We've got 3, 4, 5 readings in a row now that are showing slightly higher. I still think energy and oil is a big factor for 2025. If oil prices, are you bullish on oil right now, or are you? I'm still not convinced that oil is pure bull. I took a trade on natural gas, but I give myself a 2-year window. I can do an income trade every like 30 to 60 days. If I'm right, it gets called away. Fine. But for oil, I don't know if oil is going to break above that 200 moving average on the daily. So I was looking at this as PCE stuff, but let's go US oil. And I say that because like energy prices would be obviously higher if oil's higher. Pay at the pump. If especially in the US, gas at the pump prices is a big indicator for pain in the on the the daily commute. So if we're seeing lower gas prices, that's probably a good thing to keep inflation under control, or at least from the energy side. I just said like this little 4 to 5 day run is the exact pattern we've seen the last several months. It runs up 4 or 5 days, runs up 4 or 5 days, but it fades hard. And it looks like we just did the same thing. We just took a couple extra days here, but if we ran up 4 or 5 days and we fade hard, this to me is still the same oil noise that I don't know where it's going other than it's staying in a range. So what do you think? You like oil long this year? You just kind of play in the chop, or you're not sure?
Well, I don't know that I like oil long for the whole year. Right now, I kind of like this. I feel like we've started to see a little bit of some sustainable momentum here. Uh, but I'm not married to the trade, right? And with everything, when we talk about these ideas,
Right.
Bitcoin comes down to the 38.2 or the 60. I'm sorry, Bitcoin. Oil comes down to these levels. I've been looking at Bitcoin too much recently. 38.2 or 61.8. I'm okay with maybe taking a stab at some longs. I already own some Exxon Mobil, so I have some exposure in the oil
Yep.
side of things.
Yep.
Not loving that trade recently. It's not going great. But oil, I'd give a stab at the long side. Reason being, the U.S. economic data has been coming in real solid. I like the story there. And you got to remember, in 2022, oil had a massive uptick. Of course, that was Russia and Ukraine, but also fueled higher, just like other commodities, by the high inflation period. So if you do think inflation is going to rise, oil could, it could have a little bit of appreciation alongside that, right? I did a deep dive, Chris. I thought this was so interesting, talking about different market periods where you had significant sell-off in 2008, 2022, all the big years, right?
Mm-hmm.
But there's different types of market sell-offs. In 2022, we had a really unique one. It was not, the economy's in a major recession and the consumer's dead. And it was actually kind of the opposite. You're having this melt-up effect where economy was running hot, inflation was high, and bonds got crushed, stocks got crushed. But what came to the rescue if you had the all-weather Ray Dalio portfolio? Commodities. Commodities held up well in a period of high inflation. So if you think inflation is going to stick around, oil may be on a long-term kind of oversold status.
Yep.
But what makes it hard for me, where I can't just say like, oh yeah, oil long for the whole year, is Trump might come in and he might just say, no more inflation. We're going to pump like there's no tomorrow. And he's a lot of bark and sometimes a lot of bite, sometimes not. That's what I've been kind of explaining as like Trump makes a lot of noise. Sometimes he says it and he means it. Other times he just says it to get clicks on social media. You never really know. I'm very curious with the oil market. Is he going to come in swinging and say we are going to be a massive producer of oil beyond what we've ever done? And does he follow through with that? Does he make it massively accessible for the oil producers out there to double up? Basically, we'll see.
Right.
I mean, if that happens, oil prices could see fresh lows. So I'm not super convinced long term that I want to be massively exposed long side bullish, but short term, it's got a nice little momentum pattern forming. I might trade the long side with a stop loss.
That's fair. Energy is typically good. I was going to say on your thoughts on commodities, just have a bigger window. Because the timing isn't perfect. When you start to see the equities market start to drop, it usually is still like a 3 to 6 month lag between, the market might top over commodities and everything goes down with it. And it's kind of like the broad sell off, but typically they come out faster and more aggressive because they're also lower beta, non-correlated. But obviously like in 2022, what felt like there's nowhere to hide, you kind of get that sensation when everything's down, everything's down. So, but if you can ride it out a little bit, like have a bit more of a duration in your commodity outlook. Like if you go out if you think there's going to be a recession this year, then your commodity plays, be willing to hold them out through 2026. Like go out 2 years just to be safe. So just thoughts
Chris,
on that.
do you keep any long-term exposure to commodities? And if so, which ones? You playing like
options.
Copper?
Natural gas. Yep. Natural gas, gold, silver. Copper, I did a little bit, but copper to me started to feel a lot like China. If you look at copper futures right here, this was essentially the big announcement from China, right? So China starts lifting animal spirits and copper goes nuts, and then it just all got faded. So that type of reaction and correlation where it's like, okay, if China's up, copper's up. Okay, well, China's not up. And I don't know if China's going to be up. And so I'm not going to sit here and get aggressive on copper. Also, if we have like global stagnant growth or sideways growth, like copper is, copper is, it's for growth. It's like if you're building cars, putting in buildings, adding infrastructure, changing, telecommunication grids, expanding any type of infrastructure, copper is widely used. I know the supply wise, like copper is getting harder and harder to find or create or make. And it's just, really intensive, similar to like, I don't know if like gold and silver, like miners, I hate miners. I don't want to trade any of the miners. I just want to be on the speculation side on the spot prices. But copper, I would trade in futures. My commodity exposure would be oil, natural gas, copper, gold, silver. It's like Tasty, their futures market. I don't trade platinum, palladium. I could trade corn and soybeans. I'm not that interested in those. I could trade live cattle. I could trade, but I don't care. Like I didn't trade cocoa last year, even though it was a crazy mover.
I
So
remember that.
yeah, I mean, some of the stuff I just watch and spot check, but as far as actually trading, my exposure is also through options. So whatever I'm doing on those set instruments are going to be options related. It's going to be defined risk. You're not going to see me take any type of crazy speculative move where it's like I'm long and I'm just going to lever up for the next 12 months, long or shorter position. Instead, it's going to be I'll take it for the next 30 to 60 to 90 days. Try to be right. If I go out for a year, I'm doing some type of like I'm doing on TLT is a diagonal spread. NG, it's UNG is the underline that I'm using. It's a diagonal spread. So I'm buying the long dated call option. I'm selling against it, and I'm trying to turn it into like a $500 to $1,000 position over the next 2 to 3 months. If I make that, I'll repeat it. Like I want to repeat these trades. Like what I've done a lot this week in the A1 or the A1 Pulver alerts is I'm going to do these trades routinely. Like if I have these trades pay out, I'm going to set the same parameters, like go to my same delta, look at my same premiums, check the implied volatility, and maybe I can get 6 to 12 trades like this all year long on, let's say, 10 or 20 symbols. Cool. I don't have to own any of them, but if I just generate income on them, it's a good way to get some safe returns. And I keep a lot of cash at the ready, so I definitely want to have cash at the ready for any type of break event. If you were to do August 5th last year all over again, how'd you feel like you handled August 5th? Good or bad?
Terribly.
Okay. I'm the same way.
I got
was
slipped so bad on August 5th, Chris. It really ruined my day. And actually, to be honest, it kind of, I'm not going to say it ruined my year because I had a good year last year, but it was the difference. That one slip event, which is so annoying, was the difference of me like having a pretty good outperformance year and underperforming. It was frustrating, but you learn something,
Yeah. I mean, I was, the slippage was ridiculous. The spreads were super wide. I'm really lucky that the trades I had in the futures market were not slipped and filled at like the 3 to 4 times stop loss. So I had limit orders in, and it took them like the week of recovery in order to get stopped out. And then I had some bear traps, and so a lot of my trades got washed. But it was a bit of a hiccup. Now, because I was kind of handling the fallout of like that crazy pricing and the wide bid ask, I didn't really deploy any capital like I wanted to, right? Like that was a really good like 10+% discount in the index and getting long. I mean, I did like some routine credit spreads like I typically do, and those paid out really well. But man, I could have gotten a lot bigger. But again, you live and learn. It wasn't too damaging for me. I still did fine for the year, but it was definitely disruptive where it took my eye off the ball for a second. It's like it made me focus on like, what is happening? Is this going to be okay? Is this going to get worse? To all of a sudden, I loaded up on some hedges. I had some bear traps, and like none of it played out. Like from the bottom in August 5th, the market just went straight up again through September, and then we had a little noise through the election. But it's like from August 5th bottom, this market was just like, yep, that's all we needed. We're going higher. So yeah, it could have been a lot better, just like you said. But it's okay.
Yeah,
it could have been worse. I'd always say that could have been worse.
That was that was pretty much the biggest of the year last year sell-off. It was so brief. NASDAQ, I guess, technically hit like a 16% drawdown, but it was so thinly traded, so short-term in nature. The 10% pullback was like there, and then it was gone. We've talked about this before. When it comes to indices, I'm currently long some stuff, but I've got some cash on the sidelines. I'm willing to buy a bigger dip if we get it. I like the story for stocks right now. Even though they do feel expensive, I think that they can get more expensive, as crazy as that is. They're moving with a lot of momentum. However, if they fail out, if they can't hold these levels of support, I think we may see some larger pullbacks. And I don't know exactly when that pullback is going to take place, but I do know that I want to be prepared for it. I want to have some readiness for it, whether it be a bigger pullback in gold, which I might actually look to take some long positions on a longer term basis. Speaking of gold, what are your thoughts on it? I heard you talk a little bit about gold earlier this year, or this stream about this year. Is gold something that you want to have small, medium, or large exposure to on a relative basis in 2025?
Probably the same. Probably 5 or 10% allocation for me in gold.
Okay.
And the reason why is we had such a great bull market in the last 12 plus months in gold that I don't think we just go gangbusters bullish again. So look, I'll be really patient and I might miss out on some of the move, but I look at the S&P the same way I look at gold. We have a pretty high bar count on the daily time frame. So I think technically going from this level crossing over 310 bars, I would say gold is limited to all-time highs. Like if we get to all-time highs, I think we fade that move. If you want to be like a trader, you can short that. Otherwise, I'm waiting to see, will this just work its way back down or sideways enough that the 200 catches up and then we catch some bid. So I just like to see it consolidate. I'm looking at this kind of similar to how, I know Bitcoin is way more like volatile than gold, but the consolidation window for me, like if gold doesn't go down, then gold to me looks like just wait and just see what this thing does. Because the longer it goes sideways, it just means that there's no real sellers. I don't see this necessarily being a top. It's like we just go sideways and consolidate. I think the accumulation of gold buyers in here pushes this higher. If you've got a 12 to 24 month horizon on gold, I'm long. So I know a lot of traders that jump into the streams here are, gold's down, it's getting smashed. It's like for an intraday trade. But I'm not that trader. So, I mean, for me, all I care about is if it comes down to an attractive level, I'm adding more exposure to it. If we consolidate and my technicals come up to find support, I'm looking at dynamic levels and I'm still looking for higher highs. I said 3,000. I don't know if you have a price target on your gold, but I think 3,000 is a nice round number.
That's what I said too.
Yeah, I saw a couple people talking about like 2,700, 2,750. That's fine. I still like 3,000 is just like a momentum trade and round number and just kind of it's 20. It's either look, we stopped essentially at 2,500, so 2,750, maybe, but 3,000 is another big fat round number. 2,000 was a big fat round number. You can see that price did respond around 200. That's around 2,000, right? 210, same thing, and then 20 like 2,500. Same idea. So anyway, I like 3,000. If I'm going to stay long gold, I'm staying long until 3,000 or so, and I'll still stay long on it, but there's going to be some other cycles. Silver, I still like silver better than gold, man. I said this a lot last year. I still mean it. I like silver technically better than gold because I can measure the upside. I can't measure all-time highs. I can't measure the upside outside of a projection, but at least silver has been to $48 before. It's been to $38 before. I'd like to see it get there again. So I think silver is a slightly better technical trade. And as long as this comparison between the two shows a range, I'm looking for XAU versus XAG to head lower. And that means that silver would hopefully outperform.
And
so
likely when you get
trade.
that gold silver ratio heading lower, we've talked about this in the past, usually that coincides with a bit of a metals market run, right? When you get metals headed up, usually silver actually outperforms that in a real metal market run. Also wanted to just, speaking of technicals on the metals, the thing about gold is I've been kind of chopping it up as this is too choppy for me. There's nothing here for me to really grip onto. The one thing I got to say about the technicals on gold right now, and again, for those of you who are short-term traders, trading the 1 hour, trading the 15-minute, do your thing, but don't forget how important the daily chart is, the weekly chart. These things are really important to showing you the bigger picture. And look at this bigger picture right now. We've all been talking about all stream long. We've been streaming for 6 hours between all the different guests on the A1 Trading Show today. We've been streaming all day long. I've been watching the stream or on the stream that whole period of time. And consistently, everybody's talking about dollar strength, dollar strength, dollar strength. Well, can we just acknowledge for a second, gold is not getting beat up by this impossibly strong dollar. So you look at the dollar index. Dollar index is a monster, right? It is trending. It is killing everything. It feels like 2022 again, which again, we know what happened with the stock market. But look at this. Gold, despite this incredible uptrend on the dollar, gold is holding up nicely. Now, gold is not, bashing through the highs, but this is about for the gold bears out there, probably the most frustrating thing you could ask for. And for the gold bulls out there, probably the best thing you could ask for, given that you've got a dollar index that just won't quit. If the dollar index is taking out highs, taking out highs, taking out highs, and gold is just flat, you've got yourself a resilient crowd of buyers for gold, I would argue. So, we're hugging the 100-day moving average. We're bundled up here with the 20, the 50, the 100, all kind of flat right there. And the question then becomes, what happens if we do get that 10-year to chill out? What if jobs numbers on Friday are a little cool?
I think you've got a wound up spring here for gold, and that we actually could see some breakouts. But I'm going to wait for that signal. I'm not in a rush to buy gold, because again, if that jobs data is hot, I'm going to avoid it. But if you get cool jobs data, that could cool off some of the inflation fears, some of the 10-year fears, and maybe gold makes a move higher. So I just got to say, from a technical basis, before looking at the fundamentals, very impressive that gold is able to hold up here despite the dollar taking out high after high.
Agree. I think that's a good sign. I think it's a good sign for gold. I think it shows also that there's a need to go non-US dollar globally. It's no secret that China's buying gold, and they'll continue to buy gold. And so one of the big kind of consistent spot prices would be, as gold dips, China's buying more. I'm sure China's not alone. I'm sure there's plenty of countries that are buying gold, but China's been one of the more vocal ones. So yeah, I mean, it's pretty well supported. I was thinking the 200 EMA, and you might be right. This thing, you're looking at the 100 here, so it's staying pretty nice on the 100. Use an SMA or EMA. I've got EMAs on my charts.
Sorry about that, Chris. I'm back.
Okay, I was asking on your charts, do you use simple or smooth, or what's your moving average? I use an EMA.
I use a simple. I don't use the EMAs too often, but yeah, I just use simples. Why the EMAs? I'm just curious.
Just because there's less lag. They're a little bit tighter to price. Yeah, so they hug a little bit better. And 200 EMA has been something I've used in Forex for forever. It's always been a good balance. The 200 and the 800 on daily charts seem to be like these really amazing buy and sell zone indicators. But yeah, so bar counts for me on the 200 has always been something I've used. And Forex, anytime the daily chart's like 300 plus bars, I start to pay attention to it. I actually had some fun with Microsoft Copilot, and I just built like a little TradingView script to give me a bar count. And so anytime I check an instrument, I get the bar count. So that's how I knew Meta had a very high bar count, like over 600 bars. Netflix had a very high bar count, over 600 bars. NVIDIA had a huge bar count, well over 600 bars. I think those are going to be limited. And that's why this week, I know NVIDIA tapped the highs and faked everyone out, but it's not surprising that was the equal high test. I think NVIDIA is making its way back down towards that 200. So, I mean, again, it may not be bearish, but it's even if the stock just goes sideways on NVIDIA and it just goes up this way, catches the 200 EMA. So gold, I'm just going back to circle back to my point here. Gold staying bid. Look, we might be limited on the upside, but if gold just kind of ranges in here and all of a sudden my 200 EMA catches up, I'm buying the dip, right? Like if it closes below, closes above, I'm buying the dip. You could put stop losses there, and we're looking to see if that's enough to take out the highs and go higher. So I'm just looking to see, where these moving averages will find some price action and find some dynamic support. Gold is certainly one of those that I'm going to add to it. So are we losing? Oh, you're right there.
I'm
okay.
back.
I see the back and forth.
I think it's my home Wi-Fi telling me, Nick, you guys have been streaming for 6 hours. You need to get a life.
Yeah, your provider's just you're sucking up all the bandwidth. So now you're sharing with your neighbors.
Yeah, I think that's what might be happening. Yeah, I mean, Chris, we've got so much stuff this year that is important. I think, you sent something to me over the break just about how 2025, one of your core philosophies or goals is just to conserve some of the progress that we made in 2024. And you said something earlier, I quoted you just about your idea of basically, in a bull market, a lot of people can make a lot of money, but the question is, how can you actually keep it, right? Can you sustain it? So, you're pulling up my favorite. I have all my money in that, by the way. What is this?
I figured you did. So this is going to be a great year for you. So you're buying it at an 84% discount, Nick. You got it all figured out, dude.
Yep. Well, actually, I bought it like 80% ago. So
yeah, right.
It's not
bought it at the highs. Yeah.
For the MSTX guys is 2x leverage on MicroStrategy. So
which is essentially a 6x Bitcoin. That's kind of what it is. MicroStrategy is already like a 2 to 3x leverage Bitcoin. So this doubling up, that's like a 6x volatile Bitcoin. I'm just going to use this chart as an example. This is where everyone feels really smart. And I mean, it's funny how many traders told me my MSTX is killing it. I'm making so much money. It's all I would say is I'm happy for you. Just make sure you protect your profit. That's all I'd say for anybody. It's you can't convince me to trade a double or triple leverage anything unless it's an inverse ETF when I want to time the market. And I don't do that very often. I'd rather trade options that hedge my portfolio. I'd rather trade futures that hedge my portfolio. I'd rather be diversified. You know, it's like you don't really have to hedge if you're diversified. You
Let
can
me-
diversify.
let me-
You can diversify away a lot of the risk.
Let me explain that instrument that you've got pulled up to the beginners real quick and easy. Basically, if you're long that thing with all your money and it goes up, you're driving a Lambo. If you're long that thing and it goes down,
I think to complete the sentence, he's going to say you're living on the street. We'll see. When Nick comes back, so I'm just grabbing this early. When this was created, Chandler, are we good on my side? I just want to. Nick will pop back in here in a second, but I don't want to cut him off if he's mid sentence. There you go. Hey, go ahead. So we lost you. You're driving a Lambo on the way up. What are you doing on the way down? You're begging for food.
If you're long that thing and it goes up, you're driving a Lambo. If you're long that thing and it goes down, you're getting run over by a Lambo, and there's no in between.
Yeah, there is no. Well, look, I mean, okay, take this into consideration. Bitcoin's been down from the all-time highs down to the pullback we had, about a 15% correction in Bitcoin. Okay, this instrument has had an 84% correction. That is why leverage is both working for you and working against you. That is a double-edged sword that traders fail to acknowledge. When everything's great and you're making a lot of money, everybody loves it. But when it goes against you, you wish you were never in this position. So I just say, don't take on the extra risk and the extra volatility. Look, MicroStrategy is already volatile enough. Bitcoin is already volatile enough. I mean, even some really smart macro people that weren't even talking about Bitcoin the last 2-3 years are now like, hey, 5% allocation, 10% allocation, like that's exponentially more exposure than they were ever admitting years ago. So you can see like there is legitimate discussion on how to add exposure to Bitcoin, because from 2011 to 2022, I think was when this study showed up. You take like the Bitcoin performance over that decade, and if you had 1% allocation to Bitcoin, it helped double the S&P return. So rather than an 8% average, it was about 16% average with a 1% exposure to Bitcoin. Mm-hmm. That's how good it was. So now that you're talking like a 5% exposure, 10% exposure, if Bitcoin continues to do what it is, great. But can we expect like thousands of percent a year in Bitcoin? Probably not, Nick. But I think if Bitcoin can average, 29% a year, 35% a year, 40% a year, what's gonna beat that? Probably not very many instruments, right? Consistently. Yeah. So it's hard to argue.
I think the game has changed a little bit for Bitcoin because you've got ETFs now involved, institutions involved. There's money flows that are much bigger and much more intense than they previously were. To continue, go for it. I'm scared I'm going to lose internet again, so I'm just gonna sign off. I know you've been streaming all day too, so
I got another session in 30 minutes, dude.
Okay, so we'll give you a break, Chris. You take a break for 30 minutes, go get a glass of water, and then continue on with your next stream. Anyways, everybody who joined us today, we did 6 hours of live streaming between all the different guests that were on the A1 Trading Show today. Shout out to all of our guests. Yes, some confetti up on the screen, and thanks everybody for hanging out with us during this this marathon stream day. Before we go, just a heads up, there's your confetti. Boom. Just a heads up. If you guys, 2025 is going to be a great year. Chris and I, we share all of our trades inside of the A1 Trading Discord server. That is a premium service that we offer. If that is something that you're interested in, if you'd like to trade alongside Chris and I this year, you can see every trade we take, all shared within the A1 Trading Discord channel with the Pulver alert service or the A1 Trading VIP service. If you're interested in getting access to those services, you can go to a1trading.com/pulver-alerts, or we'll drop another link here if you'd like to speak with someone on our support team who can help you get set up with a membership and give you some more information about the different pricing options that we have. If you'd like some information about it, please send us a direct message using this link here. Come join us. 2025 is going to be a great year, and we'd love to trade it with you. Chris?
Yep. I lost you there, but I know what you're saying. Sayonara.
It's bad. Thank you, guys.
Right.
We'll
Thanks,
cut
Nick.
it there.
Bye-bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.